Morning.
Good morning.
Good morning. You're with us here on a very special edition of Bazaar Morning Call. We are now not in our studios. We are in the heart of Mumbai's financial capital, BKC, and we are celebrating 25 years of CNBC-TV18 being on air. So, good morning.
Good morning, Prashant. What a glorious morning. What a very special morning.
Yep. And
I can tell you that the excitement is palpable, not just because we are here at this grand venue and what we're looking forward to is a gala event. But, you go back, there's so much of nostalgia. I'm really looking back and remembering all the times how the journey started, how my personal journey started, and what it has meant. I mean, for us personally, for the markets, for the economy, for the city of Mumbai, where the skyline has changed.
I'm not so inclined to count the age.
Okay, that's for later.
But look at this. I mean, this is, I don't know if the viewers can see this. This is 25. And just the set, the grandeur, I think, it's befitting what we've done. 25 years, Surabhi, is a generation, right?
Yeah.
And I think markets, basically in the current form, electronic markets began in 1994.
Yeah.
And, we rolled on air for the first time in 99.
Yeah.
I went back and looked at the data. We had about, 30, 40 lakh investors, registered investors.
Yeah.
That number is not like a voter constituency. It's 10.5 crore investors in the market.
Yeah.
So, I mean, it's just been amazing.
No, it's phenomenal, right? From 2000 to 2025, I mean, almost in sync with our 25-year-old journey. And in 2.5 decades, so much has changed.
Yeah.
When I started my journey with CNBC-TV18 and I started anchoring markets and looking at mutual funds, it was the year, it was 2004, 2005.
Yeah.
The size of the mutual fund industry back then was less than 1 lakh crores.
Yeah.
Today, we're talking about retail investors taking charge of the destiny of their own finances and this market, our equity market. The size of that industry is now 67 lakh crores. So much has changed, and most of it has actually changed for the better, Prashant, wouldn't you say?
Absolutely. I'll give you an anecdote, Surabhi, right? I mean, and this is about CNBC-TV18, the brand, right? And how powerful the brand is.
Yeah.
I came to Mumbai in 2009, and I remember I was, I think, at the Phoenix Mall with my family.
Yeah.
And I wasn't back then with CNBC. I was another network. And, a couple of people were sort of came in front of me. They stopped me and they said, well, आप बड़ा अच्छा बोलते हैं CNBC पे. I mean, that is...
Financial journalism, financial markets, financial reporting, it's always been CNBC-TV18. And we have just had the honor and privilege of being associated with it for so many years.
And, today is going to be special because from the morning, you'll hear from some of the top ministers. By the way, Mr. Piyush Goyal is going to be here.
Yes.
It's also important with Maharashtra elections. So, that's going to be the big near-term thing to watch. There is the RBI Governor who's going to be here. And what an interesting time for the Governor to be here and to hear from him because, expectations have kind of gone down that we will see rate cuts anytime soon.
Yeah.
So it'll be a while before we see that. And I think we'll get to hear from him about but that's policymakers and regulators.
Yeah.
It's
And then there's corporate India.
Corporate India, big time.
Absolutely. I mean, you will hear from the top bosses who run companies like Mahindra and Mahindra, like Bajaj Auto. You will hear from entrepreneurs who are at the cutting edge of technology when we're talking about the startup space. And I think the Swiggy guys who were ringing in the green listing, you'll catch them here as well.
Yeah. No, I just want to, once again, I can't get over, the set and the grandeur. And I hope all of you can see this behind us. And, we promise the next part, you're not going to see us here. You're going to see us inside. And we'll show you more of what we've created here as we celebrate 25 years of CNBC-TV18. But, we have our buddy Nigel in the studios. Nigel, good morning. A special day.
Good morning. Good morning, guys. Feeling good, and I'll catch up with you all later. But what a set that is indeed. Give you all a couple of points with regard to my career. 95% of my working career has been with CNBC-TV18. I've been here for more than 60% of those 25 years, and more than 40% of my life actually has been with CNBC-TV18. So thrilled to be part of it. I thank the network, and in fact, later on in the day, I as well will go and join Prashant Surabhi and the entire team at the Global Summit. Well, let's run you through market action, though, and tell you how trade is set up. We have down close to around 10% from the recent peak. We have seen this, in the last couple of years twice. September 2022, we almost saw that correction out there, and March 2023. Both times we did bounce back. The problem is the manner in which we have fallen. That's a bit of a worry. But I'll tell you what, there are various stocks that have come to those levels, desirable levels, where you'll want to deploy some capital. That's the pain point, though. 106.6 on the dollar index at a multi-year high. That's been the pain pocket. So, a technical bounce is very much due. The problem is momentum has got broken with this sort of a correction. Last few sessions have been extremely painful for the headline index as well as the broader markets as well. So 11% down in 45 trading sessions. I think the Nifty as well as the Nifty Bank, they are around that 200 EMA. Well, it's natural that you see some kind of fight that's coming in there. So, hopefully we see a bit of a bounce at least today or in the next 2 or 3 trading sessions because the bounce is very much due. The FIs, they added 26,000 short contracts in yesterday's trade. It takes the total short contract position to more than 2 lakh contracts, which is at a multi-month high, in fact. And the long-short ratio now is 22% on the long side. You have 78% on the short side. You're a little bit worried, right? Because the FIs have been selling. But I'll tell you what, from the peaks that we have seen, the FI holding in the Indian stock market has come down to 18.5%. That's at the lowest we've seen in the last decade or so. And, how much more can they sell? That's, a big open question out there. But in all probability, at around this 18.5%, we should see some kind of stability in terms of outflows because they have been very, very excessive. The mutual fund industry, though, they're sitting on ample liquidity. The last count as per a DAM Capital report is around 1.7 lakh crores. So that's ready to be deployed as and when the need arises. Levels that we're looking at, support levels. The Nifty at around this 23,500 odd mark. You want to see some support going by the options data, going by the 200 DME as well. And the Nifty Bank, 49,500 odd. Bounce is very much due, but when does it come about? It could be today or in the next couple of trading sessions as well. The manner, though, that we're fallen is a little bit worrying. But guys, how are you all reading trade setup?
Well, Nigel, we're going to talk more markets as we go along. And you were talking about bounces. I can tell you that we're all going to be bouncing here. I don't know about the market. But let's welcome in someone who's been with CNBC-TV18 from the beginning. Somebody who's
our internal chief guest.
Yeah. And let me say someone who.
I wish that was true.
Someone who
the
never.
Furniture.
Someone who I saw that one line, Shireen. Someone who never sleeps. And I think it's absolutely right. 12 in the morning or night or whatever, or 6 in the morning. I mean, you're always there.
I can tell you, I can assure you, I haven't slept for a minute last night. So yeah, I'm just hoping that this goes by as smoothly as we hope that it will.
This must be an emotional day as well, right? 25 years is a...
Yeah, I think 25 and 24 for me. So I think it is emotional, and I've just been sort of playing back the journey, and what a journey it's been. And I think we've really seen India change. We've seen the markets change. We've seen customer behavior evolve, and I think we've changed with the times. I think what we've been most paranoid about is being relevant and staying relevant to our consumers, and I hope and I pray that we've done that, and I think that continues to drive us even in the newsroom today.
You haven't changed, Shireen.
I wish that was true. I wish that was true.
But it's stellar, Shireen. 25 years of leadership as you look back, and more importantly, as you look forward. So what drives you now, and what do you think is the agenda for a network as big as ours?
And I say this in the newsroom all the time, and I think what we're very, very clear about is that, look, what remains absolutely non-negotiable is our purpose, and that is to provide verifiable, actionable information. But what has changed is our aspiration, and I keep saying this, that we want to be the port of call for people who want to make a smart choice in every aspect of your life, not just the stock markets or mutual funds or commodities and currencies. We want to be a part of every transaction that you make, and we want to provide you that actionable information and insight. And more importantly, we've transitioned, and I don't think enough people appreciate it. We've transitioned from being a TV brand to now being an omni-channel brand. I mean, we're online, we're on social, we're on YouTube. We've got 3 million subscribers on YouTube, the largest Indian business news brand. We've got 7 million subscribers on WhatsApp, again, the largest business news brand on WhatsApp. So the aspiration now is that we will chase the consumer wherever the consumer is. So we have the humility to believe that, look, we of course continue to be on TV, but we are much more than a TV brand, and I think that's the aspiration that will drive us in the future. And of course,
investing is one thing, Shireen, but I think you personally have been a big part of the startup sort of ecosystem which is developed in the country, right?
Yeah,
I mean, with Young Turks, and it's just
22 years ago when we started Young Turks, we didn't think that this was going to become a show that would become one of the world's longest running shows on startups and entrepreneurship. And what a great story it is today that we're seeing. I mean, you know, Swiggy listing yesterday, one of our Young Turks. I think what has also changed is that exits have become real and wealth creation has become real as well. Of course, there have been mistakes and there will continue to be mistakes, but I think that story is now being recognized. Yeah.
Oh,
okay.
absolutely.
We'll leave you to it, Shireen. I think you've got a very long day.
I know you have a long, busy day. So.
We all have a very long day ahead, but you know, what's been the fun part of it is doing this every day with all of you. So again, big thank you and a big shout out to the entire CNBC-TV18 team and to our viewers for tuning in to us every day. We couldn't have made this journey without you. Thank you so much. Thanks, guys.
Beautiful.
All right, see you inside.
Shireen.
See you inside, Shireen. So there you have it. We're getting started. We're getting warmed up. You're seeing the crowds behind us. And once we take you inside, you will get the full import of what we have created here and what's lined up ahead through the course of the day. But for the here and now, because this is a trading market, it is a trading day, just very quickly talking about the cues and the setup, because
I think
the here and now,
it is Trump. I mean, Trump is the Trump trade, right? Actually, let's welcome in Ed Yardeni. He's with us, I'm told. Ed, good morning. Great to have you with us here. We're celebrating 25 years of CNBC, and thank you for being part of it as well. Prashant here with me is Surabhi. Nigel is, of course, with us as well from the studios.
Congratulations to you.
Thank you very much. What's happening, Ed, with the US dollar? I mean, I think that is the only thing which anyone can talk about. I mean, it's pushing higher relentlessly. We're at what, 106.5 nearly now. That's not good news for emerging market flows. What's your call on the dollar?
No, it's not. We've been bullish on the dollar. We've been thinking that the U.S. economy is doing very well. The dollar was weak a few months ago when the perception was that the Fed was going to be lowering interest rates several times. We thought the Fed was making a mistake, and the bond market agrees with us, and the dollar agrees with us. So I think the Fed's going to have to stop lowering interest rates here, and the dollar will remain strong.
I think Nigel did his. No, absolutely, and that's going to be important for emerging market equities. I mean, this is the first time, Ed, in a long time, and I think in the last 4 years, where Indian stock market, the benchmark indices have fallen over 10% from the all-time highs. We've not had a 10% fall. What is your sense, Ed, as far as EMs go and India is concerned?
Well, look, I think with the Trump 2.0, the world environment is going to be different than it was under Biden, and it might be even different than it was under Trump 1.0. It certainly looks as though Trump is going to move ahead and slap a 10% tariff on all of our imports and 60% on China. This is bound to slow global economic activity. And of course, countries that export to the U.S., other than China, are still going to have to pay a higher deal with a higher tariff. The consumer in America will pay it, but presumably that could weaken the demand for imports from overseas. So I think it's that straightforward. I think Trump is focusing on the domestic economy and clearly using tariffs as a way to negotiate better deals with other countries about what all this is going on. It could very well weaken the global economy, as happened in 2017, 2018, after Trump started to impose tariffs back then.
Hi, Ed. Morning and good to see you, Ben, as always. Ed, you've been bullish on the dollar, as you said. Do you think it trends even higher from here? Because at around 106.6, it's looking a little bit excessive, right, in terms of the pace of the move?
Yeah, yes and no. I mean, you know, the strong dollar, the flip side of that, of course, is a weak yen, a weak euro, and lots of other currencies that are weak. It sort of feeds on itself, because if Trump's tariffs lead to weaker global economic activity, that depresses commodity prices. And so a lot of the commodity producers' currencies, the currencies of Canada, Australia, Brazil, Indonesia, other countries that are commodity producers and exporters, those currencies remain weak or get weaker. And meanwhile, the European economies look fairly depressed, and Japan is very hesitant to raise interest rates. So put it all together, with the U.S. perhaps no longer lowering interest rates or not much lower, that does augur for the potential for the dollar to continue to climb still higher.
Mr. Yadini, hi, good morning. So we here in India are in a bit of a flux because there's been this mass exodus of foreign investors. The dollar's ripping higher. You're saying that might not continue for too long. What should Indian investors expect in terms of the way foreign money has been leaving our shores over the last month and a half?
Right. Well, look, India's had a fabulous bull market for a long time, and I think you probably are going through some sort of correction. I don't think this is the beginning of a bear market for India, and I think some of that money has gone on a very temporary basis to China because China's stock market has had a big improvement, but China's economy is still very much challenged, whereas India's economic outlook remains very promising. So I think there's some profit taking going on in India. It's perfectly normal. It's not a sign that something's going wrong in the Indian economy, in my opinion.
All right, Ed, it's a pleasure speaking with you, and great that we could talk on this special day for us. As I said earlier, we are celebrating, and as you can see, with the 25 behind us right here, 25 years of CNBC-TV18 being on air.
I am so excited to go inside and look at what we've built over there. And I think I will hand it back to Nigel for now. And when we come back, I think after the break, we'll get you the next look, which is inside.
All right, guys, thanks for that. We'll come back to you, and I'll tell you what, stay tuned to us because that set is something you really want to see. Well, I'll tell you what, we'll slip into a short break, but we've got a lot of stock-specific action that we're going to be tracking for you. We get to that in just a bit in our special Top 10 segment. We'll run you through the list for now. Thermax, Nalco, Varun Beverages. They'll be reacting to positive news flow. While you have Aicha, Torrent Power, you'll have a few more names that will be reacting to negative news flow, include Vodafone, PI Industries, Deepak Nitrite, Happiest Minds, as well as Cipla. Slip into that break, come back, get into further detail on all of these companies.
मेरा चेहरा बनाओ, मेरा चेहरा बनाओ। वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं। देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे, और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे, और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा, हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग हैं।
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. As promised, let's get straight to our top stocks that we're tracking for you. Our team is standing by. And let's go first to Sudarshan, who's here to track for us the thump, the Royal Enfield. How are Eicher Motors' numbers, Sudarshan?
So first, I'm going with red for Eicher Motors just because earnings have missed estimates. But I won't be surprised if stock makes recovery intraday. But there is a big if. It all depends on the market mood. Now, talking about the earnings have missed estimates on lower than expected Royal Enfield margin. But company has now shifted the focus to growth than the margin. Now, revenue has increased 4%. It has come at 4,263 crore. EBITDA was flat at 1,087 crore. We were working with the figure of 1,185 crore. Margin has come at 25.5% versus 26.4%, and our poll was around 27%. Brokerages have largely mixed views on the stock. Jefferies retains buy call and target is rupees 5,500 per share. It says Royal Enfield volumes are showing signs of pickup. Nomura has upgraded the stock to neutral from reduce, and target is now at rupees 4,391 per share. And it says it is encouraged to see Royal Enfield shift in stance to drive volume growth going forward. MS has maintained underweight and target is with 3,655 per share. So earnings have missed estimates, but stock might see recovery as company has shifted the focus to growth.
Indeed. Thanks a lot for that, Sudarshan. Well, let's hop across to Vivek. Vivek, tell us, how are Torrent Power's numbers?
Well, good morning. Well, the overarching theme as far as the power sector is concerned in the quarter gone by has been the slightly subdued demand that you've seen on the back of unseasonally high monsoon. Now, when you're talking about Torrent Power numbers, slightly subdued said this time around, revenues higher by 3%, EBITDA down 1.2%, margins at 16.8%, so margins also compressing, and profitability down 8.6%. Looking at the internals, what worked for the company this time around? The distribution business actually kicked in and that aided profitability, but what impacted PAT as well as EBITDA? Number one, lower contribution as far as thermal generation was concerned. As far as the merchant power market was concerned, much lower sales this time around. This is simply due to lower electricity demand, and also lower demand as far as the renewable part of the business was concerned. The PLF there was quite low on a year-on-year basis. Segmental EBITDA too, when you're talking about it, the thermal was down almost 26%. There was a maintenance shutdown this time around as well. Distribution went up by almost 16% as far as the EBITDA was concerned, and renewable down 23% on a year-on-year basis on the back of much lower wind as well as solar PLF. So going with the red as far as Torrent Power is concerned.
Got that, Vivek. Thanks for that. Let's hop across to Rima. Rima, tell us how are Vodafone Idea's numbers?
So, Vodafone Idea has clocked in growth this quarter. So, revenues have gone up by 4% on a sequential basis. Margins have expanded to 41.6%, but 40 versus 40% the prior quarter. And this growth was aided by the tariff hikes undertaken by the industry. But growth rate is lagging peers. So, the company's top line growth of 4% falls short of Bharti's 10% kind of growth. Also, the subscriber loss increased to about 5 million on a sequential basis, and ARPU increased, to 156 rupees, but again lower than what peers have reported, and the debt on the company continues to remain quite high at 2 lakh crore plus.
Okay, all right, Rima, thanks for that. Well, let's hop across to Vamakshi. Vamakshi, tell us, how are Thermax's numbers?
Well, going with the green for Thermax, and that is because, the revenue for the company came in largely in line with the street expectations at 2,611 crores. The gross margin witnessed an expansion of 46 basis points. The EBITDA saw an uptick of almost 36% for the company. In fact, EBITDA margin as well as net profit have come in much higher than what the street was expecting. The EBITDA margin especially is seeing a very sharp uptick from 8.89% to 10.64%, and the net profit is up nearly 25% for the company. Now, keep in mind that the revenue and PBT include incentive income under the package incentive scheme of the government of Maharashtra, which is worth somewhere around 66 crores. Margins for all of the segments have expanded, barring the chemical segment. The margin expansion is the most for the green solutions business, while for the chemical segment, they've seen a downtick of almost 231 basis points. Keep in mind that this is a high margin business for the company, so that's slightly negative for the company. But nevertheless, the ordering activity was quite robust. In fact, order inflows came in at 3,353 crores. This is much higher than what the street was expecting. Even the order book has come in much higher than what the street was anticipating at 11,593 crores. And this is mainly because the company received 2 large international orders during the second quarter in the industrial infra segment. So overall, it looks like a good set for Thermax.
All right, thanks for that, Vamakshi. Well, I'm looking at Nalco, and this stock should do well in today's trading session. And in the near term, it's got a couple of positives that are working for it. The numbers come up for you on the screen, and it's a beat on all accounts. What caused this beat? Alumina sales were 50,000 tons, more than what Phillip Capital was estimating. So that's the reason why we saw a big bump up on the top line. Now, we know that aluminium prices as well as alumina prices, both of them are holding strong. But the reason there's an operational beat as well is the cost of power has come down. They've been sourcing a higher amount of their power from captive sources. And that's clearly evident because the cost of power is down by closer on 20% when you have a growth on the top line. Even other expenditure as well as employee costs as a percentage of sales, well, that's come in lower, which is good news. And the segmental breakup tells you the picture. The chemicals business, which is effectively the alumina business, look at the profitability out there. Blockbuster, nearly around 600 crores coming in on that front. The sweetener comes in that they've given a 4 rupee dividend as well. And alumina prices may not be sustainable, but for the next 6 months or so, the alumina market is likely to be tight, which means that alumina prices will hold more than $600 per ton, which makes second half of the year look good as well. So going with a bright green on Nalco. But Sonal, tell us about PI Industries as well as Deepak Nitrite. How are they?
Well, PI Industries surprisingly has gone ahead and cut their revenue growth guidance. This hasn't happened in a long time. In fact, now they say they're reevaluating their guidance. Revenue growth guidance for FY25 at high single digit versus the 15% mark that they've spoken of earlier. And that is because of global headwinds. So overall, their revenue growth was quite muted, just 4% this time around. And they've been doing more than 30% growth in the last couple of quarters. EBITDA is up 14%. Margins have improved, but the profits were up just 6%. The export business continues to do well. That was up around 10%, but domestic revenues declined by 5% on a YOY basis. For Deepak Nitrite as well, it was a weak operational performance, and this was led down by the advanced intermediate segment. Revenues were up 14%, but EBITDA declined. Margins were low by around 230 basis points, leading to a profit decline of 5%. And that was, as I said, advanced intermediates, where the EBIT halved on a YOY basis, and even the phenolics business did well. And that is something that supported the business, the numbers this time around, but overall weak operationally.
Got it. Thanks for that, Sonal. Well, let's hop across to Rima. She's here to tell us about Happiest Minds. Rima.
So Happiest Minds has clocked in a steady quarter, a revenue growth of 12.3% quarter on quarter. The revenues have been boosted by the acquisitions of PureSoft and Aureus. We don't know what the organic revenue growth is, but on a year-on-year basis, the top line growth is about 28%, slightly short of the company's own guidance of 30 to 35%. In the first half of the year, they've clocked in about a 23% kind of growth.
Got it, Rima. Vinny, what about Cipla? There's some news flow that came in late last evening. There were some observations that came in for one of their units. Tell us more.
Absolutely. So because of that, we're expecting a bit of a red. Now, this is for their Virgo Nagar Bangalore facility, which was inspected between November 7th to November 13th. They've received a Form 483 from the US FDA. 8 observations are coming in on this one. Obviously, we'll wait out for the details in terms of what is the nature of these observations. They should come out within a week or 10 days. So that's going to be critical to watch out for in terms of Cipla. But surely we're expecting a bit of a red because 8 observations is a high number there. And the company said that they will be closely, obviously, working with the US FDA and remain committed to address all the observations that are there within the stipulated time. So keep an eye out on Cipla today. A bit of sluggishness is what we're expecting today in the stock.
Okay, all right. Vinny, thanks a lot for that. Let's hop across back to Sudarshan. Sudarshan, it's time for a drink. No. It's Varun Beverages. Tell us, they're looking to raise some money. Give us further details.
So company has announced QIP and sources indicate that total QIP size is at rupees 7,500 crore with base size at rupees 5,500 and green shoe option is at rupees 2,000 crore. I'm going with green for the stock because indicative price at rupees 565 per share, which is a discount of just 1% to the closing price that we saw yesterday.
Okay, all right, Sudarshan, appreciate you joining in and giving us those details on Varun Beverages. Let's do a quick recap then of all the stocks we just listed out for you. 3 will be reacting to positive news flow. So we'll have Thermax, Nalco and Varun Beverages. While you have 7 stocks that will be reacting to negative news flow, they include Eicher, Torrent Power, Vodafone Idea, PI Industries, Deepak Nitrite, Happiest Minds, as well as Cipla. That's about the equity markets, but let's get in Manisha, who's tracking the commodity space. Morning, Manisha. Well, commodity space is interesting, but Bitcoin, $90,000. Who would have thought? Tell us more.
Well, absolutely, Nigel. There's only 2 things that seem to be doing well right now. One is the dollar index at a 1-year high. Another is the Bitcoin at an all-time high. But this is exactly the reason that you have seen major other commodities actually see a decline. So I'll start with precious metals, where you have gold headed for a fourth weekly decline. It fell 1% overnight. It's down by more than 5% on a weekly basis as well. Silver is trading at a 2-month low, down 6% on the week. And the base metal prices have had it coming as well in this week itself. So you have copper prices, which fell 1.5% overnight. Copper is trading at a 2-month lows right now. We've seen zinc and aluminum also decline quite sharply. Aluminum is down by 4% in this week itself. Well, the strength in US dollar, expectations that the US Fed will not cut interest rates as strongly as markets believed it to be. And then China delivering 10 trillion yuan debt package to ease local government financing, but not doing a direct economic stimulus clearly seems to be impacting the markets right now. It's another week which has seen a decline. Markets will watch out for more information coming in from US. And more importantly, today is the US Fed Powell testimony, and that statement perhaps could give us further direction.
Okay, all right, Manisha, thanks a lot for that. Stronger dollar, it's weighing on commodity prices and Bitcoin in a world of its own, now at around $90,000 odd. So we'll do a short break. When you come back, we'll connect with Prakash Diwan, Deepan Mehta. Both of them will be joining in to help us out with some fundamental analysis. Stay with us.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your listing?
Welcome back. We promised you that we're going to get you a different location as far as the Global Leadership Summit is concerned. If you're sort of just waking up, joining us, switching on the television or wherever you're watching us, CNBC has finished 25 years and it's a mega grand event here, in the heart of BKC, the financial center of Mumbai. I'm Prashant. With me is Surabhi here at the Global Leadership Summit. Just sort of give you a walkthrough, right? I mean, of what's lined up. I want to show you the wall here, which, of course, is going to light up with lots of images, lots of visuals of, showing you snippets of what the journey has been over the last 25 years or so.
There we go. Yeah, there we go. There comes the wall. It's been a journey filled with so much of excitement and so much of change as well, from policymakers to members of India Inc., corporate India, investors. market veterans, and you'll find many of them, on this wall with a lot of us who've been a part of this journey as well. So it's been magnificent to say the least.
And many of them are looking a lot younger. I just got Nandan Nilekani.
Are we also looking a lot younger? Oh, okay.
My God, look at some of the sort of visuals which are which I'm sure you can see. And my God, I mean, I think I saw Nandan Nilekani, this Pranab Mukherjee, former finance minister. I mean, Shireen on the screen, maybe 20 years ago. We have and so much more. And I think you'll also have visuals of course, I mean, the big bulls who will be coming up on one of these walls, and we'll point to it when that happens. So this is like
This is our old studio. This is the old studio, just for memory, for nostalgia. This is where we were before we moved to the latest location in Worli.
No, absolutely. So, I mean, it's a lot of memories. Actually, it's called the Memories Wall, right?
Oh, yeah.
And I think
Speaking of memories, there's someone who shared a lot of these memories with us. So let's bring in Nimesh, the chatter man of the street, who's been... Look at that suit. It's very, very sharp, Nimesh. Good morning.
Good morning. Good to see you. And of course, it's a great moment, 25 years. For me personally, almost 20 years in this journey. So lots of memories.
More ups and less downs.
More ups and less downs. So that's been my journey. So it's great. Good to see you also every morning. And every day to have something new to talk about. Look for deals, look for news, look for reports. It's been fascinating, every day to get up at 5 to make sure that we all have all the reports in, all the news is in, all the anchors are ready. It's something.
It's excitement.
It's exciting.
It's like a business like no other. Let me tell you something about Nimesh, and I think you all know it because you watch D Street Chatter at 2:50 every day. We've been by the way, trying to convince him to start D Street Chatter in the morning also. That's too much.
What's the cupboard? But he's the man who knows the cupboard.
But I'll tell you, and it's true. There was a large MNC which was doing a OFS, offer for sale. And I remember speaking with the company, and I was like, so this is happening, and I was trying to sort of confirm. And we, by the way, already reported the previous day. And this gentleman, pretty senior, higher up in the company, had no idea. One day later, 20. So I said,
Prashant, just to fulfill your wish of doing something in the morning as well. I guess Monday, Tuesday next week, you're going to see a big, large OFS from a very reputed company. Another 15% block is expected. So
there you go.
MNC.
I've given you the tease.
That's the chatter.
He's the block deal mania sort of maverick. He knows.
But since you're with us, Nimesh, I mean, let's just talk about the market as well a little bit, right? Yesterday, there's a lot of debate about that FII number, right? Carlyle sold that chunk in PNB. And that was FDI.
Correct. So the sell side is FDI, but the buy side, you saw reports of Morgan Stanley Keynote and a couple of other Keynote reports. So maybe that number, the buy number is getting reflected in the FI number. So if you exclude that, then maybe the FI number is slightly higher than what's actually reported, close to 3,000 crores.
Yeah,
right?
it's less than 3,000.
It's
about 2,500.
You have to add the PNB block on the buy side.
Yeah.
So that's the number. But what's surprising is the kind of fall we saw and the fact that DIs bought 6,000 crores, right? And this is what I said in the dealing room yesterday as well, that yesterday's fall was not led by FI selling.
True.
The intensity has actually lowered in the last couple of days. It's actually the retail guys and the HNIs who are actually selling out, or there is a force selling from the brokers because of margins and all. That's been one pain point because of which we've seen a big correction in the broader market.
And remember that the 20th of November is when the new norms kick in, the F&O norms as well, the bigger lot sizes and margins and all of that. So maybe there is a little bit of squaring of positions and some technical adjustments because you are moving to a new futures and options regime.
Actually, not only that, Surabhi, there is another reason, a bit of volatility and the fact that there is a new regulation for the mutual fund industry with regards to the VWAP and the volume-based buying and selling that they have to do. And the feedback that I've got is it's getting extremely difficult for the mutual fund industry as well to execute those trades. Look at the VWAP on a regular basis because the onus is on the dealers, right? So
that's the AMFI requirement, which is about the reporting.
Yes.
I spoke to a couple of CIOs who said it's painful, but their point was
we'll get through it.
We want to buy something, we'll buy it. It's just that it becomes a little more tedious in that sense.
Tedious, and it makes a bit cautious. Dealers become cautious. So, at a higher level, it's okay. But when somebody is executing the trades, that's when they explain as to how difficult it's become. To actually to execute trades and all that.
Let me just quickly get in another sort of prominent. He doesn't want to be on camera. Let's
it's
put it that way.
impossible to pull this man on air, but today we have succeeded.
Research backbone, so to speak.
Sonal Sachdev,
Sonal
head of
Sachdev.
research for CNBC-TV18.
This is a coup. I think we've pulled a coup. We've got him on television finally. He's the man who powers the newsroom.
Say one thing on this important occasion. crisp, no nonsense, business and markets coverage. That's what CNBC has been for 25 years.
Wow.
That's
he's rushing away. Thank you so much, sir.
He thought about it, delivered,
He had his line,
and out.
he's
I mean,
out.
that's
Yeah. Crisp and no nonsense. He really walks the talk, so to speak.
Absolutely.
But,
And actually, we have Deepan and sort of Prakash Diwan also with us. Deepan and Prakash, good morning. Great to have both of you here. Special day for us, 25 years, and wish you could be here. And I do hope later in the day we see you here.
Yeah, I think Deepan's coming in a little later, right?
Yes, of course, cannot miss such an event. Congratulations on completing 25 years, and it's been a privilege being part of your journey for the last 25 years, and you have really changed, the way we absorb news, the way we analyze it, and then we're making so many decisions based on the news that we hear on your channel. So in a way, you have been a part of investors' lives for the last 25 years, helping them meet their investment goals, building wealth for them. And it's been a great time being associated with you.
Okay. Oh, by the way, let me tell you, Deepan and all our viewers, so we all started our journey as part of a television network, right? So we have lots of photo booths here at the venue as well. One of them is this. If you pull back, even I didn't realize it earlier, you pull back, this is the good old-fashioned television set of yesteryears.
You want to give them a sneak peek? Go in and...
Go ahead. How the old newsreaders of yore go in. Should we? Should I kind of...
Yeah,
My God.
Careful. How's that looking? I don't know how
This is how we were in the
is...
old television set.
No, absolutely. Prakash, are we seeing you here as well later in the day?
Hopefully, yes. I should be able to make it, but... Prashant, congratulations nevertheless, and thank you to all our viewers for believing in this journey in the way they've done for the last 25 years. It's quarter of a century, so that makes it really, really very special. So happy to be part of this, and yeah, look forward to being with you soon.
No, absolutely. You've got to see it to believe it. Let's just talk about a little bit of here and now as well. Both of you. Deepan, if I can start with you, what's your sense? I mean, this is painful for the first time, I think, in 4 years. Nifty down about more than 10% from the all-time highs. Just your thoughts and how much more you think on the downside?
Hey, Prashant, this is a walk in the park type of a correction. And it's a wake-up call for all the new investors that, when you invest in stocks, be prepared for a 10%, maybe 15, 20% also type of a correction. And this kind of a correction is much needed if you want a 4 or 5 year bull market going forward also, because a lot of the froth has to be removed from time to time. Weaker players have to be shaken out. Leverage positions have to be curtailed. And a correction like this does exactly that. So I'm very pleased with this correction which has taken place. We have been anticipating it and have been saying so for the past several months or so. I think that, considering how disappointing this earnings season has been, you could expect even a further correction in stock prices. And I look at the company by company when I go stocks, good quality businesses trading at maybe 60, 70 times. Now with earnings season over and some increase in profits are now going at 50, 60 times. So from super expensive, they have gone to expensive. Another 5, 7% correction will make them into that perfect zone for buying. So I think that market has some more corrective action to take place. But gradually, I think we're getting into a good space where a lot of good quality businesses will be available at reasonable valuations, which will show exceptional returns in the next leg of the bull market.
Hi, good morning, gentlemen. Good to see you all in. Prakash as well as Deepan. Over these years, it's we refer to you all as guests on the show, but we're more like family, right? We have met each other's families, spend a lot of time together. With Prakash as well, maybe a drink or so off and on. So Deepan's son and me have been good friends in the past as well. So thanks, gentlemen, for always supporting us and being part of our journey as well. Well, let's get to stocks then. Deepan, you briefly mentioned a couple of those stocks have come down to desirable levels with the index come down by close to 11%. Give me 1 or 2 stocks with some rationale.
So I think, we're very positive and have been so on a lot of the platform companies. And although they are facing challenges, but these are great businesses, good scalability. And I think that valuations now are at reasonable levels. Companies like, say, Just Style, India Mart, Affle India, RateGain Technologies. I think these are the companies that, we missed out on. Some of them we have an investment as a measure of disclosure, but they were trading at very fancy valuations. Now earnings also have moved up and valuations are in that kind of a reasonable zone if they correct another 4-5% or so. And these are businesses, which have got great scale and a super future going ahead, great compounding stories as well, and in underpenetrated markets where they have a good competitive moat. So I think we are looking at that particular space more closely. And, one of its kind companies, I think that solar equipment has a great future. I'm keeping a close eye on Premier Energies as well as Wari, the new listing. Maybe 10-15% correction in those stocks would put them into a buy zone with a 3 to 5 year type of a view. So I think we are seeing pockets. You have to have a bottom-up approach over here and be very stock selective. The next few months may not be, all stocks go up kind of a scenario, but definitely there'll be good opportunities.
Okay, got it. Few of those stocks, select platform names as well as the solar energy themes. Thanks, Deepan, for that. Prakash, coming across to you then. I wanted to ask you particularly about 3 stocks: DMart, Zomato, and Jio Financial. The reason I'm asking you about them is, these stocks are going to be available for trading in the F&O market. And with that criteria fulfilled, they could very well make their way into the Nifty in the next review, which my guess is I think it should be towards the end of January, beginning of February. One would say that, that Nifty entry is good, but if you're daring enough, you could also short these stocks now in the next month or so. What's your view on the 3 of them?
So, Nigel, honestly speaking, the F&O entry is not as dreadful as it seems now, given the fact that from 20th, the F&O market itself is going to undergo a lot of change in terms of the complexion, the participation, depth, and all of that. Contract sizes are going up. The requirements are different. So it's not going to be very easy for people to do that. But for a market to be healthy and mature and in terms of price discovery potential, I think being part of an F&O and the ability to sell when you're not convinced of the pricing is a good sign. So there's nothing wrong with it. It's just that, it should get used on the speculative side and disrupt things. So my sense is that will not happen. But yes, you're right. The end potential, the eventual potential of them being part of the Nifty is very promising, because these are going to be bellwether businesses at some point in time. They are already. DMart, for instance, is almost a proxy to the retail sector for us. And the same thing is going to happen to Zomato at some point in time, and of course, Jio Financial. So their participation in the Nifty definitely makes sense. It makes the Nifty richer in terms of presence of representation of various sectors. So I'm quite positive. I really won't be worried. But yes, on the other side, positive side, you could also kind of have leverage positions within the F&O if you are a tactical positional player, which might be also quite interesting as an opportunity. I'm not recommending that at this point in time, but the possibilities are definitely very promising.
Got it. All right, gentlemen, we thank you all for joining in. We'll keep coming back to you all and, throw some questions at you all to help us out with some of that fundamental analysis. For the time being, though, we'll slip into a short break. On the other side, we'll have the management of Kalyan Jewellers who will be joining in to detail the past quarter's numbers and the way ahead for the second quarter. Don't go anywhere.
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media.
Welcome back. You're tuned into Bazaar Morning Call. Let's focus on Kalyan Jewellers as promised. Q2, well, they registered a good revenue growth. Margins contracted a little bit, which was impacted by customs duty inventory loss, as well as that's what resulted in some profitability decline. Mr. Ramesh, the executive director at the company, joins us on the show. Hi, Ramesh. Good morning, and always a pleasure having you on the show. Give us three big numbers. What kind of revenue growth are you looking at for the year? What kind of margins? And same-store sales growth?
Yeah, so again, starting with Q2, you rightly said numbers were very good, and revenue in India grew by 39 and consol 37. And even now, if we see this running quarter, if you look at Diwali minus 30 days, the SSGs are strong. It is comparable to Q2. And we are upbeat about the Q3, the Diwali festive quarter. And nothing is going to majorly change for Q4. So revenue growth should be as strong as H1 is what we feel for the full year. And period after Diwali is also continuing to be very strong.
So revenue growth for the year in the vicinity of around 30% and margins maintained at around 6.5 to 7%. Doable?
Yeah, so not going into the number, but yes, yeah.
I mean, you said that it'll be as good as the first half, so I just extrapolated that, Ramesh. Got that. You know, tell us about this lab-grown diamond impact on natural diamonds. I'm looking at the studded share as a percentage of your mix. It's at around 30%. Where is this number headed? And if you could tell us, has there been impact? Is lab-grown eating into natural diamonds? Or are you saying the customers are very, very different? So actually, that's not happening.
So lab-grown diamonds, as we speak, none of the big brands are now catering into that because the price itself has not got stabilized anywhere. So for a customer, they believe the brand more than the product. So we brands do not promote lab-grown diamond as we speak. And customer demand is also negligible at the store level because we are a retailer. So when there is demand, we supply. So as we speak, the demand is almost zero. And that is why we don't cater. But and again, lab-grown diamonds majorly contribute to the solitaire portion, and solitaire also the high-value solitaire, where as a brand we have not focused also in the past. That is why we don't see any pressure on our studded ratio, and studded ratio is strong at around 30%.
And it will hold at around 30%, or you have a target for it to move higher?
It should move marginally higher, but not majorly, because now we are there in almost all the non-South markets now, and the non-South markets where we are planning stores also are tier 2, tier 3, wherein the studded ratio might not be as strong as metro and a tier 1 market. So it should be stabilized in the range of between 30 to 32% and not more than that.
Got it. All right. Could you tell us what is the debt in the books and your repayment plans as well? I recall, you all had sold that plane and you'll say that you'll use the proceeds to deleverage the balance sheet. So what's the updated debt number and where is it headed?
So last year, you were right, the aircraft was sold and the proceeds were used for debt reduction. Last year, we reduced debt by around 300 odd crores. And this year, our target for the full year was around 300 crores of debt reduction, out of which 144 is done in H1. So we are on target to reduce 300 crore plus for this financial year in India. And on debt, the non-GML portion is what we are trying to reduce. That is in the range of 745 crore now, which we think that it will be completely repaid in the next couple of years.
Got it. All right. So, that 750 crores, but by the end of this fiscal comes down to around 600 crores, right?
Yeah, right. Correct.
Got it. Your market share, I think, is around what? Around 5-6% odd. And you have said in the past that you're eating into the market share of others. So where is that number headed, say, by the end of FY25 and maybe by FY27, if you could give us a target?
Now we are in the range of 7%. When you look at organized jewelers, we have a market share of around 7%. And we are growing in the range of 30 to 35% on revenue. So ideally, in a couple of years, it should hit double digit.
A pleasure talking to you as always, Ramesh. You're sounding very, very optimistic about business, good growth, debt reduction, and market share, something that you're gunning for. Thanks a lot for joining in and wishing you a good day ahead as well. Well, for the time being, please go ahead. Yes.
Congratulations for completing 25 years. And we are all great fans of your channel.
Thanks a lot, Ramesh, for being a friend and as well as being a supporter of us. And we always enjoy you coming on CNBC-TV18. Appreciate your support over the years and look forward to your support in the coming years as well.
Thank you. Thank you.
Well, slip into a short break. Come back. Our technical experts are waiting for us. Mitesh and Sudarshan are waiting for us on the other side.
As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Well, let's get straight to our technical experts. Mitesh as well as Sudarshan are with us. Good morning, gentlemen. Thanks a lot for your support over the years. But let's talk about the markets. Tell us, how do you approach trade? Mitesh, you go first. You've got a tinge of red on your tie, and that's been the color for the markets. But do you think today we are expecting some kind of bounce? A bounce is due. I don't know whether it's today, tomorrow, or day after, but one of these 3 days, I'm sure we need some kind of a bounce.
Morning, Ajay. So the tie color has got nothing to do with the market movement, actually.
That's good.
But, I think you rightly made a very important point saying that some kind of a bounce back is due because, the index does, suggest that, one, we are showing extremely oversold readings on the charts. And two, I think, the 200 average area and the weekly pivot is also right where the index level is currently. So in that sense, good chance that we might see a bounce back happen in the current scenario. The idea is that today's gap down opening, if the gap down opening is captured immediately, then I think that should be a very positive sign, and that could lead to some kind of a short covering. So I want to see the first half an hour of the morning once we open with some kind of a negative gap. Then I think the resultant movement should be captured very fast. The gap down opening should be captured very fast, and once that is done, I think then there is a lot of comfort in figuring out that the market would have made at least a short-term low. So we'll wait for that reversal sign to happen. Once that happens, I think then there is a lot of comfort to trade.
Okay, all right, but you're not shorting the index for now.
Not full.
Okay, all right. So Darshan, what about you? How do you approach trade? We're down 11% from the recent peak. What's the trade on the index first?
Yeah, good morning. See, the index trade is very simple. We are breaking down support levels. We are making lower highs and lower lows. So the trend is, at least the intermediate trend is very clearly down. When the trend is visibly down, the only trade traders can take is to look to go short, using options preferably. Whether you go short on a breakdown or on a rally is a different matter. That's for the trader to decide. But the basic trade remains the same. There is a second trade, and most traders should follow that. And that is not to do anything. You don't have to trade at all, because the short side is not easy to trade. But if at all you want to take a trade, this is the only trade that exists in this market. We are talking of relief rallies that may come and go. That's why I'm saying shorting is not easy. Now, the relief rally may not signify the end of the downtrend. I think there's more down to come.
Got it. All right. Sudarshan, go. You continue then. Tell us about individual stocks.
Well, I have two buy ideas, and buy ideas in this market are difficult at the best of times. Bajaj Auto, which has fallen significantly, may be finding some kind of support. The critical point is May. But if you find some support here, consider buying with a stop under 9,415. LTTS, which is L&T Technologies, is another stock that may be finding some kind of a base. Consider buying it with a stop under 150. I have two intraday short selling ideas. Both were outperforming just a few days ago, and see how adverse news now hammers good quality stocks. Chambal Fertilizers is an intraday short with a stop above 480, and Polycab is an intraday short with a stop above 6480.
Got it. Okay. Got it. Mitesh, what about you?
I also have more of sell side, trades purely because of the fact that the trend hasn't reversed yet. But I'm hoping today could be the day when the market could signal some kind of a reversal. So with that, we'll start with a few sell side trades. The first one is a sell on HDFC Life with a stop at 697 for targets of 660. Tata Power is a sell with a stop at 408.5 for targets of 380, and Granules has broken a key support of 540, 538. So keep a stop at 542. Look for this decline to head towards 510 levels, and on the buying side is Indian Hotels with a stop at 704 for targets of 735.
Thanks a lot for that, gentlemen. We'll keep coming back to you all. For the time being, I need to toss it back to my co-anchors, Prashant as well as Surbhi. I believe they have a very special guest with them. Take it away, guys.
Yes, absolutely, Nigel. We'll get to our special guest in just a bit. But right behind us is, well, the wall of fame, so to speak, because the 25-year-old journey has been sort of studded with so many achievements, so many milestones, and some of these awards for individual shows, for the network, for the channel at large, perhaps a testimony to it. So, Prashant, there's been a little, smattering of gold and silver along the way as well.
Yeah, and I think inside you will see a lot more gold and silver.
That's true.
I mean, I think a lot of gold-plated guests as well who are going to join us through the course of the day. And just to sort of tease it out, right? I mean, at about 10 o'clock, you'll hear from some of the top market participants coming through. You'll hear from the RBI Governor. You'll have ministers with us. Mr. Piyush Goyal should be with us as well. And of course, I mean, then we start with the lineup of some of the biggest corporate voices that we've assembled right here at Geo BKC for you as we celebrate 25 years of CNBC-TV18. But for now, let's welcome in, someone who shepherds one of the largest pools of assets in the country, equity assets in the country. Navneet Munot needs no introduction. Navneet, great to have you with us here.
And, so good to see you. Thank you. Thank you for joining us.
And thank you so much for being part of the journey, right from the very beginning, I think.
So many congratulations, Prashant, Surbhi, Shireen, the entire CNBC family on this wonderful journey of 25 years. I'm sure the next 25 years are even more exciting. But 25 years of shaping policy, 25 years of catalyzing growth, 25 years of energizing entrepreneurs, 25 years of educating investors, and 25 years of empowering citizens. This has been a wonderful journey, and many, many compliments to you. And this show can't get bigger than this.
Thank you, Navni. Thank you, Navni. Thank you for your gracious words.
For nation, yeah.
And we must thank you as well, because people like you who are veterans of the market, you've been partners through the years in this journey of moving forward, narrating the story of the Indian economy, the Indian market, and the Indian investor. Before you joined us, I was telling Prashant that when I started my career, and now I realize it's been a long time, the total size of the mutual fund industry was less than 1 lakh crore rupees.
Of course,
and today, 67 lakh crores.
The market cap was 8 lakh crores or so. Today you have HDFC Bank, Reliance, TCS, double the size of that market cap today. How far we have come. In 1999, I remember that Infosys raised money in US. That was a big movement. That was a big headline. And 25 years later, in your journey, you can say this is the year where people are celebrating in Korea that they've raised capital in India. How far we have come. And we have got the limelight. Thank you so much. But the real hero on behalf of whom we stand here is our investors and our partners who have built.
And again, I mean, one more statistic, 99, I think you had about 30-40 lakh investors.
Absolutely.
Now you have 10.5 crore.
Absolutely.
Right?
It's been a phenomenal growth. You look at India's market cap, you look at the number of companies with over $1 billion market cap. And this is just beginning. I mean, this is not a good year for global IPOs. This is a phenomenal year for Indian primary market issuance. Yeah. So we have a long way to go.
Namit, I want to ask you this a little on the here and now as well, because while we talk about this journey, what's changed is the investor's psyche and behavior as well, right? And now we've had a great run since COVID. We're talking to you and we're bringing this mega event at a very interesting juncture where in some sense it's the first test of a lot of the new investors who've come to the market. Do you think they'll pass the test?
The maturity of the investors is much greater than in any of the previous cycles. We have seen the boom and bust of 84, 85, 91, 92, 99, 2000, 2006, 7, 8. But this time I think the way equities have got sold is for compounding, is for long term. It's very, very different this time. And I have huge belief that the way you guys have helped us in creating this equity cult, that you need to believe in the India story, believe in power of compounding, invest for the long term. This time is definitely...
I don't know who came up with that slogan, mutual fund sahi hai, but I think that's one of the best lines in terms of investor awareness, education. Just built the cult, right?
Absolutely.
So yeah,
Yesterday we shot another program like the Nivesh ka Sahi Kadam. How do we take the mutual fund Sahi to the next level from 5 crore investors to 20 or 25 crore investors over the next couple of years? So yeah, a long journey.
It'll happen. It'll happen. 100% it'll happen. Just a quick sense, Naveed, again, a little bit about the here and now. One of the things we've heard from some, again, it's just a phase we're going through. It's a 10% pullback from the highs. But FIs have been big sellers, right?
Local invest, and there is the primary issuance.
Then there is the primary issuance as well, right? So it combined is a pretty large, hefty number which is hitting us. Mutual funds and locals have bought. But how much more firepower? Is the firepower getting a little depleted in the near run? In the near term, daily flows are there, but what you start out with and where you are now in terms of just the
so you have flows, lump sum flows, little bit, but you have the monthly flows coming in, and if you see a little bit of more correction and prices become more attractive, you'll see higher allocation from some of the hybrid funds who have reduced the allocation because valuations were on the higher side. As valuations correct, you may have, opportunity for the fund managers to dip in, and for the foreign investors, I think a strong dollar, rising US rates, the changing global geopolitics and geoeconomics, of course India's valuations, some of these factors have played a role in them selling, but I think they have gone underweight. Don't fight against the might of a billion people. dark clouds are always followed by a shining sun. This time won't be any different.
And I'll tell you what, since we're talking about investors believing in the shining sun and in the India equity story, we have a man amongst us who's been sort of a stalwart, channelizing that story and taking it to newer heights.
Please.
Mr. Ashish Kumar Chauhan, sir, thank you so much for joining in. Good morning. And it's a pleasure and an honor to have you here with us.
By the way, let me tell you, Ashish Bhai is the most humble CEO I know, and he now heads a company which is valued at, I think, close to $60 billion, Ashish Bhai?
That's 5 lakh crores. It is, I think, within the top 10 in terms of market cap in India. Right?
Yeah, if that is so. If it's 5 lakh crore, then yes.
So the question we want
to ask is, when will that be realized? In terms of value and no, but you were, just to we'll talk about that later. But 1999 is when CNBC hit airwaves the first time, and you were at the NSE.
Yes.
And you were, it seemed like a different life, and you were championing something I remember, which is again the hot topic, derivatives.
For me, the derivatives have been there with me from 95 onwards. So, we started NSE in 94. 95 is when I was given charge of setting up derivatives. And since then, we had LC Gupta committee and creation of Nifty and exams and all. And we were preparing, and still there were opposition to derivatives those days. But there were also interesting opposition for over trading. In the best of days, I will remember, in 92, the BSE could trade only 10,000 trades a day. Because once you trade on physical, just to remove the objection, that is, you have sold 1,000 and that person has written that he has bought 100, or if you had sold at 110.5 and he had written 111, you had to go back and actually do it. It would take 50-60 days to resolve that.
So only 10,000 transactional trades in a day were allowed. My God. Okay.
Could not be done before.
What the system could handle, yeah.
Within a year, NSE was doing 1 lakh trades a day. Today, NSE does 30 crore trades a day.
That is in terms of, it's world beating?
It's world beating?
Trades in the world. And around 20 times larger than New York Stock. Why I'm telling you this is, those time also, people used to say now there is over trading. Over speculation and all.
That hasn't changed.
Yeah.
Over speculation. Yeah. Over speculation, over trading. Something has remained constant.
No, but I think he's.
So I used to tell them when washing machines. People thought ladies will spend less time. Washing clothes. Instead, they started washing more clothes. The technology allows you to do something. You do that, and you do that, and you overdo it. But that doesn't mean that additional risk has come. Or sort of once you manage the risk, people will continue to trade. People will continue to trade. Those days, ask him. The transaction cost would be 2.5% official brokerage, then 2.5% sub-brokers, then GADA of 5-10%. It used to be very large. Today, you are doing pretty much at a zero cost. On real time, on your mobile, there is no GADA. GADA is the difference between the price at which the person used to buy on the floor and the way he used to tell you. So if he bought at 100, he will say he has bought at 110. You had no way to know.
Unbelievable.
Right? And so that GADA, and then 2.5% of brokerage, and then sub-brokers, and the full chain of sub-brokers. And then you will get your settlements after 60 days. You will get bad certificates. You can immediately figure out it's bad. You can give it back. But sometimes you get very good certificates, you send them to registrars and they'll come back because of signature mismatch or sort of a fake printing and all. And so those are the days we have all seen. Today, it looks like magic.
It is magic.
It is magic.
By the way, as we speak, Ashish Bhai, the market is opening. So I think, Nigel, you want to just address the market open?
Yeah, sure. Let's get the market rates up for our viewers on the screen. We have the markets that have opened up in the green. That's something we haven't seen for a while. And a lot of stocks are moving around. So you have the Nifty Bank, actually, that's pulling back a goodish bit. That's pretty good news. And a few other names. Mahindra & Mahindra is higher. Eicher Motors, Sudarshan called it earlier today. He said the margin disappointment is something that the street, may not like, but they could buy the dip. And that dip has quickly got bought into. As we speak, Eicher Motors is one of the top gainers in trade. And just to give you a note from a brokerage, they say that that competition that came about for the Royal Enfield, well, that's quickly been done away with because you have, Royal Enfield, that's one of the top gainers in today's trading session. Pull up Nalco. That stock as well has opened up, gap up. So good move is what we're seeing on Nalco. The last quarter's numbers were good and the way ahead as well looks pretty bright. Thermax, the initial tick was in the green, so good going on that one. You have Happiest Minds as well that opened up a little bit in the green. Let's pull that one up for you. They're pretty much on course to do what they have set out to do. Midani, the revenues are up by 15%. The stock is down 45% from the top. So that stock as well opens up. RCF, the EBITDA number has jumped up by close to 91%. So that stock as well, good move is what we're seeing out there. PNB Housing Finance, post the large trade that took place. The stock should be on your radar, so keep an eye out on that. PI Industries, muted growth led by the pharma segment. FY revenue growth as well, the estimate has been lowered out there. So PI Industries comes up for you on the screen. Deepak Nitrite as well, the advanced intermediaries, that's what's dragged the earnings. The margins have fallen by 230 basis points. So we should get both those two stocks up for you on the screen. It's good to see the markets are still holding with a tinge of green in today's trading session. But as we've been saying over the last few days, it's not really where we start, but where we end. So let's see whether or not we see some kind of a relief rally out here. Eicher Motors, the stock of the morning, the Royal Enfield, is thumping ahead. Guys, back to y'all.
All right, it's a positive start. Nigel, thanks very much for that. And of course, we'll keep showing the rates on the side of the screen. We're, of course, in conversation with Navneet Munot and Ashish Chauhan. Markets are in the green. I mean, just FYI. After the last few days, which have been tough. But we're talking about slightly the bigger picture. Navneet, anything you want to mention, which has been special to you, which has caught your attention?
I was just chatting with Shireen backstage, and I was telling her that today, India is known for the startup capital of the world.
Yeah.
The largest number of startups are taking birth here. But 25 years back, she had the foresight, and CNBC started Young Turks, right?
Yeah.
That time, startup word wasn't the part of the lexicon. So, and there has been a long journey. Like Ashish talked about, in 1999, India didn't have derivatives trading on exchanges. And today, we are the derivatives capital of the world. So I think our regulators, policymakers, participants have done a wonderful job, and I think we have played a very, very big role in catalyzing all of that.
On that note, Ashish bhai, I want to ask you about regulation, and I know I'm putting you in the hot seat over here, but I guess the intent largely always has been to keep investor protection in mind. But there's also been a big public debate on this whole business of over trading, whether, especially for retail investors, not institutions. Navneet can trade as much as he wants, but for retail investors, whether over trading is bad and whether there's too much of loss of capital if you're an F&O and things like that, and whether we need tighter regulation to control that. One side of the debate says as long as there's orderly market trading activity, the systems are working fine, it should be okay. But there are parts of the regulatory establishment that believe that there is a bit of a moral argument that they must step in as well. What do you say?
In a society like ours, which is still developing, we are still at $3,000 per capita income, not $66,000 like America. We have to have certain guide rails. And if you look back of 25 years of CNBC or 30 years of NSE, whenever the regulators have tightened regulations, the markets have become more safer. More participants have come. Once the markets become more safe, it's imperative that more people get, more sane people get attracted. And that's what, for me, you have to, because, of course, regulators get a lot of signals from across all the nooks and corners. And we, every types of participants, get to see only their side of signals. And that's why they think everything is fine. But the regulator gets to see all the details and even the macro picture. So they are at 30,000 feet and they are at 3,000 feet down, right? And so that's where never sort of second guess the regulator, especially as far as it comes to the regulatory tightness. I mean, I have seen, and I have been on both sides. I mean, all my life I have been a regulator and regulated, right? And so for me, when the markets have to be protected, as soon as what we do is we create trust as regulators, right? SEBI, Ministry, Parliament. And if trust is not there, the markets don't remain, right? So if people are losing money, even anecdotally, in different parts of India, SEBI has to take notice. I mean, I have no doubt about it, and I think nobody should have argument with SEBI on that.
By the way, Ashish, you introduced 45 new stocks in the F&O segment. Markets, Are we going to see a lot more?
Again, there is an algorithm by which they decide
the criteria is,
that if the stock becomes liquid and large enough, then it goes into the derivatives, and if it comes down in liquidity or in the market capitalization, it comes out. So because these stocks were waiting in the wings for some time and new regulations were being prepared, so now that the regulations have come into force, that's why this 45.
And also, in I think the next 1 or 2 days, we're moving to the new set of F&O regulations as well, where margin levels, lot sizes, all of that gets sort of redefined. What impact do you think that will have on volumes, on actual trading activity at the exchange?
As I told you, when NSE started, India used to trade 10,000 trades a day, right? Today you are doing 30 crore trades a day. Even if you come down a little, we are several thousand times larger. Right?
And we have 50% of all everybody else combined. So it's
naturally, we are also 17% of the world right, in terms of population, and we are smart people, so we trade more. But that is besides the point.
Ashish bhai, lovely speaking with you. Thank you very much, Navneet. Appreciate you joining us, and we'll let you go enjoy.
And 25 years.
Thank you. Thank you so much. Thank you very much.
Thank you. I'll take that.
We'll see you
Please.
inside. Thank you.
Well, those are two gentlemen. One, of course, chief of the largest exchange, I think, pretty much in the world. NSE, $60 billion company now. And of course, Navneet there, we're shepherding assets, one of the largest pool of assets in the mutual fund industry. I mean, I don't know if we can show our viewers, so it'll be a little bit more. This is more.
This is us through the years.
This is us through the years, basically. And, so you can see the expanse of the place. And I'm not sure if our viewers can really gauge the entire 360-degree view, but it really is something. And by the way, we've not even gone inside into the main
arena.
The main arena where, the guests are coming in. And actually, they are coming in as we speak. Many of them are coming in. And we will actually kick off proceedings here in terms of discussions with, our chief guest and, of course, others in the next, 15, 20 minutes or so.
So we have, I think, our next set of guests joining us right here.
We have Utpal Seth joining us from Trust, and we have Sridhar Shivaram joining us from Keynote. Gentlemen, great to have both of you here.
Thank you for inviting me.
Thank you very much, and thank you so much for being.
Congratulations on the 25 years.
Thank you so much. Thank you.
And you guys have been part of it.
Yes, of
right? I mean, I think we'll be able to spot one of you 20 years younger on one of these balls. How does it feel, Sridhar?
I know. I joined the markets in '94. And I think those days, I think Utpal will also know that, it was, information was hardly available. I mean, you had to literally scratch around to get information. And then you had, the likes of CNBC come in 99, 2000. And, it's been, we've been part of the journey along with CNBC and seen the markets grow from where it was to where it is now.
Utpal bhai, your thoughts?
So I think
reflections.
Sridhar looks as young as he did 25 years ago. But having said that, I think CNBC was something that started while we were seeing the markets, and it's been a part of the evolution of the markets. I think it has spread a lot of knowledge and information over all these years, and has helped in widening the spread of the equity cult in India. So congratulations to CNBC.
Gentlemen, exactly on that, sort of crystal ball gazing ahead, maybe not 25 years, but maybe 10 years or 15, whatever is the time frame. The fact that this equity cult has started, financialization of savings, I don't think this wheel can be reversed now. It's set in motion a completely, new paradigm, right? What do you think this is going to mean 5 to 10 years down the line for our market? Because while the wall of money is coming in, there are always sort of debates around valuations are too much, whether, we lose sight of reality, so on and so forth. So the positives, the negatives, what will this massive shift mean for the Indian equity market?
I think fundamentally India used to be a risk capital deficit economy. I think we are moving towards a risk capital surplus economy. That gives a huge boost to entrepreneurship in the economy. And that's a paradigm shift to my mind. This paradigm is possible by various steps that governments have taken, but there is also a structural reduction of risk in India. If you see the interest rate differential between India and the US, if you see the foreign exchange forward rupee depreciation rates, if you see the volatility in exchange rates and interest rates, all of those factors, the risks are much lower than in the past. And this is being reflected in the markets. Volatility is structurally lower than what it was in the past.
The market's getting deeper. The market's getting deeper, when, sort of, with the participation broader.
The Koreans want to monetize so deep that you got
$3 billion you wanted? Well, if it's a good offering, we'll give it to you.
Sridhar, your thoughts on
Yeah, so-
a little bit about here and now as well. I mean, because this is the first pullback we are seeing in about which has exceeded 10% from the top.
I'll give two statistics. One is that if you take the rough returns are about 13-14%.
Yes, please.
So without the wall of money from the domestics, we already have, last 20 years gave us about 14% CAGR. I don't see any reason why that should not be replicated. In fact, should be more in the next 20 years. And the other thing on this correction that people are really, worried so much about, look at the last 1 year returns. Nifty is up still 20%, mid-caps up 30%. If you had told me last year, same time, that the government is not going to get full majority, that you'll have two wars going on, inflation is going to be 6%, and yet you'll get a 30% market return, I would have said it's a joke, but that's where we are. And also keep in mind that for 54 months, we didn't get a 5% correction on a monthly basis. The last 5% correction was in March of 20, and then we got a 5% correction on a monthly basis last month. I mean, that's the extent of, we got used to getting, returns in the market. And both of us have seen markets for so many years. It very rarely happens like this. So this is a Cinderella moment that we saw, and maybe it's coming closer to 12, and then we'll start a new Cinderella moment now.
That's actually true. By the dip, the last 3-4 years, what was the dip? 3%. So that was the kind of market that we were in.
Yeah.
But on the immediate concerns, just the here and now, because the narrative shifted very quickly. From being the market where you have to be in and stop being bogged down with valuation. That was the narrative up till September when we peaked. Now earnings are not earnings are faltering, FIs are exiting, China could be better, US home market bias. Suddenly we're in the business of hearing narratives, right? So narratives are shifting. Where does the reality or the actual truth lie, Sridhar?
So I think the reality earnings have disappointed. Markets were ahead of time. And we'll take a 6 months, maybe 9 months pause, which is perfectly fine in the longer term, which is perfectly fine. Earnings catch up. Uncertainties will be behind us. And this market will move on. We've seen many such events in the past. And people can also add on to this, that this comes in a journey many times. And we'll see it again and we'll move on. So I have no, debate in my mind that this may be a temporary blip that we are seeing because of multiple reasons, as we already explained. And as earnings catch up, I mean, we are still growing at 6.5 to 7%. You can give and take, whatever is the number various analysts have, which is a very good GDP number to have. So from a macro standpoint, we still look very good.
Do you think markets need help, monetary or fiscal? Are we at that point?
I don't think we get monetary because I am the hawkish camp. I think the inflation is going to be high. RBI's numbers don't add up. My inflation number for Q4
the governor is here later. You can.
He's asking. They have a number of 4.2 for Q4. Yeah. I'm at 5.4.
Yeah.
And I've given the, some of your anchors, including Lata, their numbers just don't add up. So I think that we don't get a cut for at least 9 months.
For
9 months, I don't think any.
My God, that is. And in the intermediate, the Fed would have cut. We don't know. I mean,
if Fed may have cut another 50. So maybe.
Or if Trump has his way, maybe another, I don't know, 200. Who knows, right?
Well, that's a big question.
So it's a very interesting kind of a mix. So it'll be just one thing I want to, it would be wrong if I don't mention it. Utpal is someone who's mentioned who's worked with the big bull. Right?
Yes,
Rakesh
and we miss him so dearly today. Yes,
yeah, I mean,
absolutely.
it's a day to remember him as well because he was pretty much part of these 25 years and how the markets have evolved. You want to share anything? Because he always used to say he was the keep the faith, right? Yeah. Markets are down, keep the faith, stay invested. It'll come back.
And I'm
never faltered.
He would have said the same today. The journey began actually in June when he wrote an article on the front page of Economic Times about a secular and structural bull run in India. And remember, 2002 was a pretty bad scene in the markets. And from there, he has never wavered. He kept his conviction. He always said that the mother of bull markets is ahead of us. And even during COVID, in the midst of COVID, he still had his conviction. And no matter whether the portfolio has taken a 10% knock or a 30% knock, he would say this is just a stress test. And I think
that's such a powerful thing because
as you said, he always said the mother of the bull markets is in front of us, and he would say it. And at some point it will seem repetitive, but the messaging was so powerful that the best is ahead of us. Yeah. So that's the basic kind of thrust of the message that he delivered for 20 years.
Sure, Prashant, it was not just the view on the markets, but also the reasoning.
Yeah.
He talked about the fact that the wall of savings which will come into equities will be phenomenal. And to say that in 2002 is what was amazing, right?
The time,
And we are seeing that happen now.
Yeah.
And hopefully to see it going forward. All the necessary conditions are there.
So finally, gentlemen, as we are wrapping, Utpal, if you could give the one piece of advice or sort of something that you want to share with our viewers, something you've learned through your investment journey over the years with the big bull and even now, what should people keep in mind when it comes to long-term wealth and riches, which we all aspire for?
So I'll again quote Rakesh ji here. He used to say, your patience may be tested, but your conviction will be rewarded.
Oh, beautiful.
Beautiful words.
Sridhar?
Yeah, I would say, this is something which many people have said, don't time the market. It is a time in the market which will give you the return. So just stay invested.
And that is so true. And time is what we're talking about, 25 years. Go back and check what the Sensex was. I think we hit 5,000 in 1999 for the first time when CNBC aired. And of course, look where we are.
Some of those loops running here. Sensex hits 9,000, 10,000, and look where we are today. So,
absolutely.
Really indeed. What a journey, gentlemen. Thank you very much for being with us here this morning. And we're looking forward to being with you inside through the course of the day as well.
Thanks very much.
Thank you very much.
Once again, congratulations to CNBC.
Thanks very much.
Thank you so much. So, I guess back to Nigel?
Absolutely. Let's throw it back to Nigel to the studios. And of course, we'll get you more from here as the proceedings kick off and they get underway in the next 10-15 minutes or so. Nigel, back to you.
Well, don't worry, guys. I've got this covered out here. The markets are still trading in the green, so no worries for the time being. I've got this covered. We are still in the green. We're up close to around 20 points. The breadth of the market is very good. 1,500 stocks are advancing for just around 700 stocks that are declining. Not a very convincing bounce, but some green, we'll take it. And Eicher Motors is the stock that we're talking about. 6% higher. One-way run is what we're seeing on that name. I recall when we had competition that's coming in there, the street was a little bit nervous. We're talking about the Triumph, we're talking about Harley coming into the markets. Eicher Motors has held its ground and demand continues for, the 350, the 650cc as well. Let's go to our next management. We have Thermax. That's the stock on our radar for Q2. The company's order inflow will jump by close to 70%. Margins, they came in at multi-quarter high, while the profitability and revenue growth as well came in at a very, very healthy pace. To discuss the past quarter's performance, the way ahead, Mr. Ashish Bhandari, the Managing Director and CEO of the company, joins us on the show. Hi, Ashish. Good morning. It's always good speaking to you. And, thanks a lot for being a buddy of the channel and always coming on, sharing your insights as well as giving your cue on industry as well. Well, let's talk about...
Thank you very much. Pleasure to be here.
Absolutely, Ashish. Let's get straight to the past quarter's numbers then. I recall in Q1, you had said that it was impacted, especially on the civil construction side. There was execution delays, labor shortage, elections, a whole host of factors. Have things stabilized in the second quarter and are things looking better for the second half of the year? So give us an insight on that. And also your margins have come in at multi-quarter highs. What's driving this? 10.5% margins, is it sustainable?
Let me take two questions and I'll divide them. First, the market, the outlook. I would say general sense of stability. Things are better than what they were in Q1. But I wouldn't say they are as good as they were a year ago. Yeah, we still see many orders where customers have shaken hands, but the financial closure of the projects is taking longer than I have seen. We also had cases where we were ready with the equipment for delivery, but pickups were more delayed than I've seen in the past. And the third thing I would say, the construction bit continues. Yeah, it's not easy. Construction delays, managing sites is getting ever more challenging and is a big part of India's infrastructure growth story and perhaps one of the biggest challenges that I see as the country looks to grow. In the midst of all of that, the inquiry pipeline overall looks quite good and healthy. We see a decent pipeline on bigger projects. I've been talking about for a bit that we see bigger projects coming back in. The last quarter was some example of that. And even as we go forward, we see a reasonable pipeline of big projects coming in as well. My question is around how quickly will they close? And then execution continues to take more time than what it was a year ago. So that's on kind of the numbers as I see them. The Q2 financials from a profitability perspective has one time relating to a PSI benefit that we have gotten from the Maharashtra government. This is a historical incentive for which one big portion got cleared by the state government in the recent past. So a portion of that we have taken into our numbers. The incentive itself will continue for a period. So we will see this coming in periodically for at least a couple of years. So in that sense, it's not a one time, but this has given a fillip to our numbers. If I take this out, then the numbers, I personally would like to see Thermax doing better than what we did in Q2. Yeah. Last thing I would say is on the chemical side of our business, we had some impact because the business depends quite a bit on exports, and based on the war and some of the delays on the freight side, that business got impacted a little bit, which is a temporary dip. It should recover in Q3 again.
All right. So the sustainable margins, except what you said, should be what?
So sustainable, look, we are continuing on a path of improving our margins. Yeah, if you see last 3 years, with each year, we've been moving our bottom line by 25 to 50 basis points each year. And I think that's a trend, at least for a little bit, we think we can continue on. We're also reaching a period where much of what we want to do new will require investments. Yeah, so especially putting together a renewables platform, a bio-CNG platform, a hydrogen platform. These will take some amount of investment. So I don't think the 10 plus number is sustainable in the short term, but continued improvement and crossing 8.5, getting to 9, that's the intent.
Got it. All right, let's focus on a couple of other factors then. Tell us the share of the large cycle orders in comparison to the short cycle orders. Also, if you could give us what kind of impact it can have on revenue recognition, on working capital as well.
On both of those, I think first there was one single big order of 1,000 crores, actually in two parts of 500 crores each. This will get revenue recognized over the next 2 years. So reasonably frequent. It's not like it's a one-time revenue recognition. We will have part supplies and part work happening. So the revenue will get recognized on a regular basis. Otherwise, no particular surprises, even on working capital or otherwise. Thermax works on very tight working capital. We work at a negative working capital at the company level. And we expect to continue that looking into the future as well.
All right. Well, your order inflow has been very, very healthy. I was looking at Investec. They had put out a brokerage number, and the order inflow has been even better. What's the outlook on the pipeline from here on? What's the sustainable run rate we should look at going ahead? Update us for the second half of this year, and what will the order book look like by the end of this fiscal?
When we started the year as well, I had said in this particular year, we see some bigger projects coming back. And this last quarter was an example of that. If I take the big project out, we have been showing reasonably good growth on what we call as base business, things that we do through our channels, through distributors, a variety of our product businesses. There, the one bit which is important to note is that our India business is where we have seen some flattening of our numbers, which is something that I would like to see come back to a growth path in the second half. The growth that has come in Q2 as well has come more driven by exports than driven by India numbers. The India numbers have grown as well, but I would like to see more growth on the India numbers. And specifically, there were a couple of segments. One is the entire ethanol segment, which last year gave Thermax a fair bit of growth. This whole 1G ethanol, as India looks to grow from 10% ethanol blending to 20% and beyond. Here, there are a lot of projects which are still on the anvil, where the sugar industry and variety of others are looking to invest. But the projects are still waiting on financial closure. So I would love to see this segment come through, and then many others, including textiles, steel, variety of other sectors where we have got good pipeline as customers are looking to invest back in. Would love to see that growth come in. So the pipeline is reasonably healthy. Conversion, I would wait and watch and see what we deliver in the second half.
Okay, all right. The endeavor, you said, is to keep improving margins, though the past quarter's numbers may not be sustainable at more than 10%. What about revenue growth? What should it look like for the year FY25 on a consolidated basis, if you want to break it up for us segment-wise as well? And since you're sitting on a healthy order book, how does FY26 shape up on that sort of a base?
I think our revenue backlog should give you some sense. We don't provide projections, and so I won't provide projections now, but the backlog is reasonably healthy, and for the foreseeable future, we don't see any major concerns in terms of liquidating that backlog. There have been some slowdowns, as I said, on construction delays and also of customers picking up equipment. But those are small in the grand scheme of things. We should be able to work those unless there are some major shifts that come into the market. So the growth that we have been showing, which is reasonably steady, good growth on top line, which then comes into a reasonable growth on bottom line with slightly improving margins, that's the trend that we would like to continue to be on.
Okay, all right. Well, we thank you for joining in and filling us with all that color for the past quarter. We wish you well, Ashish, and we look forward to chatting up with you rather soon. For the time being, I think before we take that mandatory break, the markets have flattened out. The Nifty, which was up close to around 50 points, 40, 50 points, it's flattened out a little bit. The Nifty Bank as well has met some kind of resistance at higher levels. So, that's not very great news, but flattish, some kind of consolidation. I think the bulls will take that. Mahindra and Mahindra, that one's come in for a sharp knock now. In the last few minutes, it's fallen from the green terrain into the red. Trent as well, that started outperforming well, that has come in for a bit of profit taking. So keep an eye out on that. And Shriram Finance, that's the other one that slipped a little bit. We'll slip into the short break. You come back, we'll get chatting with a couple of managements. We'll also get you some market opinion. We'll get the latest from the Global Leadership Summit. Stay with us.
He is able to have a dialogue with all sides of the political spectrum globally, and he could become a very important peacemaker.
Welcome back. Well, keep an eye out on a few of these names. These probable Nifty entrants, so they become eligible at least. Geo Financial Services is now up close to around 4%. You have Zomato as well. I think that it opened up in the green, so we should pull up that stock for you on the screen. And, the other one is DMart or Avenue Supermarts. So we'll keep an eye out on all these names because in the run-up to the next Nifty review, these stocks could be in focus. But just before we get to our next guest, pull up the intraday chart of Swiggy. The high of the day is 485. As we speak, the stock is down to around 430. So there's a sharp decline that we're seeing in the stock. Swiggy is the stock that we're talking about. Yesterday, it surprised everyone with the kind of strength we had. Today, it gapped up yet again. But from the highs of the day, just take a look at that. There's the, big downtick is what we're seeing. The stock is 10% off the high point of the day. So that comes up for you on the screen as well. IPO issue was still at around 390 rupees. So you're still in the money. But from the highs of the day, there has been some profit taking. Well, let's get straight to our next guest then. We have Luke Bars, the Managing Director in Fundamental Equity within Goldman Sachs Asset Management, who is in India with clients for the Goldman Sachs India CIO Tour. Hi, Luke. Good morning, and thanks a lot for joining in on the show. Well,
morning. Thank you so much for having me.
Let's start off with what's top of mind, Luke. What is investor sentiment like post the Trump win? And what does it spell in terms of asset allocation, particularly in developed markets? If you could give us the trade-off. Developed versus emerging markets post this Trump win.
Perfect. So firstly, look, thank you so much for having me and then hosting me in this fantastic country. We've got 25 of our largest clients here for the week, and they have been overwhelmed by the opportunity we have in India. Now, to answer your question directly, there is optimism across equity markets. We've seen a strong uptick in sentiment that is underpinned by the growth cycle we're expecting to see in the US, the possibility of further reform in the US, and the hope that that drives earnings growth, not just in a concentrated subset of large and mega cap names in the US marketplace, but also across the smaller mid cap space, where we're seeing a lot of that broadening of growth. Now, I think to answer the question of emerging markets versus developed markets, I think it's a very difficult one because of the heterogeneity we're seeing across the EM space. I would say selectively, markets like India, where you have the potential possibility of further acceleration of advanced manufacturing in the China +1 scenario post a US election, where the relationship with the US we think will be very strong, is very compelling. But I think there's other parts of the emerging market space where the possibilities are maybe a little bit more challenged. So you have to be selective around the individual businesses you're buying, not just trying to think about the short-term macro cyclical drivers.
Okay, all right. Luke, give us some more clarity then. How do you see the equity allocation to emerging markets, particularly India? I'll tell you why, Luke, because everyone's sounding very, very optimistic on the big opportunity in India and the structural story here in India. But the FIs, they have been selling lock, stock and barrel, close to around $12 billion in a matter of 45 days or so. And that's a little bit worrying. So your take?
Well, so I think what we have to separate is the near-term cyclical allocation decisions from the long-term strategic decisions. And the clients we have here with us today and this week in India are here to assess the long-term strategic opportunities. And I think what we've heard through this week is this might not be India's decade, but this is India's century. And so we're seeing a huge amount of opportunity for people to put capital to work across asset classes in India, in the private space, in the public space, and see meaningful return potential. Now, to answer the question of the more cyclical dynamics, why we've been seeing selling pressures from FPIs, I think clearly, as we went through the back end of the summer, valuations became a little bit more lofty. Yes, the earnings story is there. We're going to see 15% earnings this year. Yes, we have visibility on growth over the next decade, which is highly compelling. But India trading at 23, 24 times forward earnings starts to feel a little bit lofty. And so we've seen a natural cycle of profit taking that, let's also remember, coincided with the big stimulus we saw in China. So for some of those larger global emerging market or global equity allocators, needing to cover some of that China risk led to a little bit of a pullback. But I don't think that changes the long-term strategic mindset, which is hugely favorable towards India.
All right, Luke, if in case there had to be money that had to moved out of India because of the high valuations and moved into China because of the stimulus as well as valuation support out there, do you think bulk of that hot money move has happened? We're talking about $12, $13 billion in a very short duration. Or do you think there is more pain in store? I ask you this because the FI allocation to India, FI ownership in India as a percentage of the total mix has come down to around 18.5%. And that's the lowest I've seen in the last 10 years.
Look, it's not our expertise to take those short-term top-down calls, but our sense is that hot money has moved because of the stimulus in China and because of the valuation in India. And so we're now back at a much more reasonable level. Multiples today at around the 21 times forward earnings feels like a very good starting point. It's not cheap, but given the growth potential, it feels like a very good starting point for long-term allocators into the market. And I think when we look at that FPI exposure, and we couple that with also what we're seeing in terms of incremental buying from domestic retail investors as that becomes a bigger part of their overall portfolios, we think there's a structural uptick in not only just the allocation to India that's coming from international and domestic investors, but also just the ability to capture some of those growth opportunities. We see that IPO volume come through.
Luke, I like what you said, right? India is a structural story. It's not the decade we're talking about for India. It's the century that belongs to India. For someone like me who allocates most of my money to equities, well, I'm feeling quite good about the longer term with regard to the India story. Now, within themes here in India, what are the themes you all are looking at? What's looking exciting? The financialization of savings is picking up pace. You have brokers, exchanges, all of them doing quite well out here. Per capita income of an Indian has only been moving up, and it's set to move even higher. How do you play a couple of these themes? What are the sectors, your top bets here in India? Some things that really excites you?
Yeah, so maybe if it's okay, I'll give you a tiny bit of context. When I first came to India maybe 20 years ago, the message we heard was roti kabdo makan, that aspiration to improve your standard of living, start to buy simple, staple, discretionary products. And that's still there. That aspiration is still there. But the mechanism for how that's being delivered is changing. The digitalization of India, both through the UPI scheme, through some of the fast delivery schemes, that has really started to drive a change in that mechanism. And I think the aspiration is also changing in terms of how people are spending that discretionary income. So as we're seeing that wealth creation and that increase in disposable income, especially across the urban centers, that younger generation, the 750 million millennials and Gen Zs that we see starting to explore experiences alongside those simple products, that's a very exciting space. Again, you've got to think about it in the long-term context and look through some of the nearer-term multiples. But again, even on that front, we've seen a pullback that makes the entry point very compelling.
All right, Luke, I'm just going to throw this at you. As a house, do you all have a view on the dollar index? From an India market perspective, that's proving to be a pain point. A dollar index that was closer around 102, just I think 45 days or 2 months ago, it's at around 106.6. And from an India market perspective, that's not seen very well. If you could comment on that?
For sure. So look, I think post-election in the US, we've obviously seen the yield curve back up a little bit. We've seen this belief that we're going to be higher for longer. And so that's put a little bit more underpinning to the dollar strength we've seen over much of the last decade. And I don't think that's going to reverse materially in the near term. I think we are going to see this fiscal agenda in the US that will continue to drive a deficit that puts us in a position where rates might be at that more sticky, elevated level for a period of time. But what I would say on India, and I think this is critical for people who are looking at the market today, is reflect on that historical context. The fiscal position in India is so much stronger today than maybe when we were 10 years back, when we think about the Fragile Five and how India was being viewed in that context. And then also put into context the fact that India is now becoming a real leader in advanced manufacturing. We're just at the start of that. And so to the extent that drives the capital account position as India starts to really take share of the export market, again, we think that has a good underpinning for the long-term strength of the Indian economy, but should also underpin rupee. Not that we see meaningful strength in the near term, but it shouldn't be something that destabilizes the long-term opportunities that across those risk asset classes.
Encouraging thoughts, Luke. Thanks a lot for joining in. India's a structural story. It's got a long runway from here on. And post that recent correction, hopefully, bulk of that FI hot money has moved out. Well, going back to the summit, that's, Mr. Piyush Goyal, who's being welcomed by Mr. Rahul Joshi. So we'll try to hear out Mr. Goyal in just a short while from now. But he's made his presence felt into the global summit. And, we'll be hearing from him. I think we'll get a conversation going in the next few minutes or so. That's Ashwin trying to get in a couple of quick bites. Let's cut across.
CNBC over the years has played a very important role in communicating what is happening in India, what is happening across the world, to people interested in the economy, to investors, all stakeholders of the financial world. And I think this role of playing a bridge between reality and international situation and making investors informed investors is truly a commendable contribution. 25 years is a long period of time. The credibility that CNBC-TV18 has gained in these 25 years truly makes all of us proud and helps also have a very organized growth of the economy.
It's always a pleasure hosting you, sir. Thank you so much.
Hi, Lata.
Okay, all right. Well, we'll get further details in just a bit from now. For the time being, let's hear out a conversation that Happiest Minds had post their numbers, which were fairly good, even post the acquisitions. Reema caught up with the management, began by asking them about demand, inorganic growth, as well as what about their guidance for the current fiscal. Let's hear out that conversation.
So before I start, good morning and congratulations to CNBC on your 25th year anniversary celebrations that are currently on, and the Global Leadership Summit. Now, coming to our results, yes, we have done great growth of almost 28.6% in dollar terms, and constant currency about 28.3%. Compared to the guidance, we said we are guiding to a growth of about 30 to 35%. We are at half year mark, we are at about 23.5, 24% kind of a number. So we have our task cut out to meet that growth number for the rest of the year. But while I talk about guidance, we should also focus on the margin guidance that we had given. EBITDA margin guidance we had given was 20 to 22%. At the half year mark, we are at about 22.7%, well ahead of that number. And this is despite taking hefty pay increase payment in time to a large part of our Happiest Minds, which has cost us about 230 basis points in terms of margin, and about $2 million of investment into generative AI, which is where we are hoping to see business and traction coming from in the next 2 quarters. We have seen a healthy pipeline and the business pickup in terms of volume there. Organic and inorganic growth, we have not given out those numbers. We have given the base of the last year. Pure Software as a $42.4 million company, Aureus an $8 million company, and we did about 192, 193 million in operating revenues last year. This is the base that we are taking, and we are going to the next year with the growth of 30 to 35%. And honestly, the reason for not breaking it up is we had a base of 240 customers. Today, we have a base of 280 plus customers. Aureus and Pure Software brought in about 40 to 45 very large, good, nice niche customers in the areas of BFSI and healthcare. They also have an award-winning banking platform called Artha Banking. There is so much of cross-selling happening and upselling happening to make sure that we take generative AI capabilities into their business. We take their business, their capabilities on Artha Banking into our business. And the new markets that they've opened up of Africa and APAC is being completely explored by working together as a team. So the focus will be to make sure that we integrate well the two companies that have come into our fold. Integration in the sense is not about the back-end systems that will happen, but the key is to make sure that we go to market as a unified company, and how are we going to cross-sell, upsell, and make 1 + 1 = 3. I'll turn over to Joseph to give you an overview on the demand situation that we're seeing right now.
Joseph, if you could just once again give us the visibility to achieving your full year revenue guidance, because in the first half of the year, as Venkat pointed out, you're still falling short of the number with 23-24%. And what about furloughs in Q3 and then the overall demand environment?
I think one of the factors that customers were looking at very carefully or with anticipation was the election result, and more than anything else, it was the uncertainty. Right now, there's certainty, we know, and certainty in 2 terms. You know the winner, and it was a pretty decisive victory. So there's no scope for any quibbling, unlike last time. And I think that's given customers a little bit of comfort. And what we are beginning to see, especially starting with BFS and manufacturing, we're beginning to see customers starting to discuss new initiatives and create budgets for the same. And I expect that will get extended to some of the other verticals as well. The key time frame I'm looking for is early to mid-December, when customers would have got their budgets and they would start discussing hardcore numbers rather than just initiatives. So we are quite optimistic out here in terms of the demand environment improving into next quarter. And when we meet in January, I think we'll have more specific numbers and anecdotes to share with you. Having said that, as Venkat pointed out, we have our work cut out to get to our 30 to 35% range. At the end of half year, it was 28%, as Venkat pointed out. And so we need to just get it over the hump in the next 2 quarters. And I think some of the actions that we've taken at the beginning of the year should help us out. We've created the GenAI business unit. We're getting quite a bit of traction in terms of POCs and discussions with customers. The new logo engine that we created, we brought on board head of new sales, Maninder Singh, is put half his team together, putting the rest. And we already see a good pipeline developing for new logos, while the existing BDMs are focusing on expanding in our current customers. We have around $82 billion companies where we can expand our share of wallet, and our industry groups are beginning to get involved in both new logo acquisition and
welcome your hosts for the event, Shruti Mishra and Ritu Singh.
A very good morning, ladies and gentlemen, and welcome to what is a landmark moment, the CNBC-TV18 Global Leadership Summit 2024. Now today, CNBC-TV18 proudly celebrates 25 years as India's leading business news channel. And Shruti, this day really brings to mind Winston Churchill's words, "To improve is to change, to be perfect is to change often." Now, over this quarter century, CNBC-TV18 has constantly evolved, delivering essential insights, sparking impactful conversations, and setting the agenda for India's economic and business landscape.
Very rightly said, Ritu. Each milestone we've reached is a testament to our commitment to excellence and our role in capturing India's dynamic business evolution. Reaching 25 years as a leader in business news makes me think of Les Brown's words. Shoot for the moon, even if you miss, you'll land among the stars. Our journey has been one of high aspirations and bold achievements, and today celebrates that vision.
Indeed it does, Shruti, because the Global Leadership Summit reflects all that we have achieved over the last 25 years, and it offers a moment to reflect on CNBC-TV18's journey of growth, of resilience, and innovation. It is a celebration of the impactful stories that we've brought to light, the influential conversations we've sparked, and the milestones that we have helped shape. Now, as we look to the future, this summit will capture what lies ahead, what will shape CNBC-TV18 and India's economic journey for years to come. Now, the Global Leadership Summit 2024, presented by HSBC India and co-presented by Embassy REIT, is a springboard where ideas converge and possibilities emerge. We extend a heartfelt thank you to our partners, presenting partner HSBC India, co-presenting partner Embassy REIT, destination partner Saudi Tourism Authority, associate partner ITC, AI partner AWS, exchange partner NSE, and associate partner Reliance Industries. Thank you all for trusting us, for being with us and coming forth to make this extraordinary day possible. Through the day today, our audience take some pictures and videos, post them on your social media handles using our hashtag CNBC-TV18 TV18 GLS and CNBC TV18 at 25.
And on this note, to officially open this historic event and reflect on CNBC TV18's journey, its impact and its vision for the future, it's my pleasure to invite someone who truly needs no introduction in the world of business journalism. Shireen Bhan, Managing Editor of CNBC TV18, has been a driving force, inspiring many and transforming how business news is perceived in India. She's been at the heart of it, shaping stories, setting the agenda, and building CNBC TV18 into the country's leading source of business insights. Ladies and gentlemen, please join me in welcoming Shireen Bhan.
Thank you very much, Shruti and Ritu. What an absolute honor it is to see all of you here. Let me start by welcoming our Honorable Commerce and Industry Minister, Mr. Piyush Goyal. I know it's election season, sir, so we truly appreciate the fact that you're here with us this morning. Ladies and gentlemen, a big round of applause for our Honorable Commerce Minister who's here today. I also would like to take a moment to thank each and every one of you for your support, not just today, but for the last 25 years. So many of you in this room and outside of it have been part of our journey, sharing your mornings, your afternoons and evenings with us. And for that, we are truly deeply grateful. Ladies and gentlemen, as was said, every milestone is a moment of reflection as well as a call to action for what comes next. Let me take a moment to address both. We were India's first business news channel, but as many of you in this room know, being the first mover doesn't always guarantee success. There are many other firsts that we can take credit for. Democratizing the Indian stock markets and making them accessible to the retail investor is perhaps our biggest contribution. Every day, for the past 25 years, a growing class of Indian investors has tuned into us from 9 in the morning to 4 p.m. to navigate the world of equities, currency, commodities. As India touches a new record of demat accounts, I can proudly say we've helped build the culture of responsible investing. We've also helped create a new framework of corporate engagement, now popularly called QSQT, quarter se quarter tak. Every quarter, many of you in this room and so many others face the camera and our team of sharpshooters to give shareholders and the general public access to your boardrooms. We mainstream the idea of regular disclosure and more transparent reporting. In many ways, we helped create a new framework of governance standards in India. We also made entrepreneurship aspirational and entrepreneurs household names. Today, many CEOs have a legion of fans and followers and are ambushed for selfies, something previously seen only with Bollywood stars. We helped create a new class of heroes who've inspired a new generation of Indians to have both the audacity of hope and the audacity of ambition. We continue to be India's most watched, most trusted, and most influential business news brand. And I don't mean to sound arrogant, but I can sincerely say that we shaped and defined the business news category in India. And I dare say, like strong power brands, we are synonymous with the category. When you think business news, you think CNBC TV18. I could go on, but time is of the essence and the future beckons. Leadership, ladies and gentlemen, is not just about protecting the past, but also about attacking the future. So as we look at the next 25 years, we must continue to add to our list of firsts. We are doubling down on our promise of putting the customer first, and so CNBC TV18 is transitioning to become a channel on TV, digital, and on ground. We're proud to say we are the largest Indian business news brand on YouTube with over 3 million subscribers. We're also the largest on WhatsApp with 6 million subscribers and growing. We are committed to delivering credible insights in every category that requires the consumer to make an informed choice, be it stocks, mutual funds, insurance, alternate asset classes, health, or even education. We are not just a stock market channel. We are growing into a consumer brand that will power smart choices. As we look at the next 25, we hope to become the port of call for information that you need to make any significant life decision. And I hope for your continued support, feedback, and encouragement. Today is also a day to express our deepest gratitude to our viewers. Thank you for your trust. We take it seriously. We truly believe it is the most valuable currency to trade in. To so many of our former mentors and colleagues, thank you for being our co-travelers. We appreciate the contribution made over the years. We wouldn't be here had it not been for some very strong shoulders and able hands. Thank you to Rahul Joshi and the management team at Network 18 for giving us the opportunity and the flexibility to grow. And finally, thank you to the most wonderful team. It has been a joy to work alongside some of the best and brightest people in the industry today. Each one of you is a custodian of our story, and I deeply am grateful to you for your unwavering commitment for our continued success. I'd like to take a moment to make a special mention of someone who tirelessly toils away at the back end to make this magic happen. Bijay Shankar and our team of backroom magicians, producers, writers, video journalists, editors. You keep the CNBC-TV18 machine churning. So deep thank you to all of you. Ladies and gentlemen, I am proud that we've created a culture where people not just are encouraged to try, but are also given cover if they falter. So let me end by sharing with you what continues to drive us in our newsroom. As Adam Grant puts it eloquently, no matter who you are, no matter what you did, no matter where you've come from, you can always change, become a better version of yourself. Daily improvement is our quest for excellence. It is what continues to drive us and will drive us over the next 25 years. Thank you very, very much from all of us here at CNBC TV18, ladies and gentlemen.
And a big thank you to you, Shireen, for setting the foundation for our 25-year celebration and forward-looking to a day that is going to guide us on India's journey over the next 25. Now, I'm sure you've seen some amazing and beautiful spots outside to take pictures. So a reminder again, click as many as you can, post them on your social media, and do tag us, use our hashtags CNBC-TV18, GLS, and CNBC-TV18 at 25.
That's right. And now moving on, let's invite Bodhisattva Ganguly, the Group Consulting Editor, Network 18, for a very special interaction with Mr. Piyush Goyal, Minister of Commerce and Industry. His visionary leadership has been instrumental in shaping policies that drive India's growth trajectory. Ladies and gentlemen, once again, a huge round of applause for Minister Piyush Goyal.
So thank you, Minister. Thank you for gracing the occasion, the 25th anniversary of CNBC. As Shireen mentioned, we are in an election season, so thank you for taking time out from your campaigning schedule. So let me ask you a topical question. We can come to another election maybe a few questions later. But firstly, how are the elections in Maharashtra looking here?
Outstanding. I've just returned yesterday after a tour of Marathwada and Western Maharashtra. At one point of time, a stronghold of the Congress and Mr. Sharad Pawar. But I can clearly see the winds of change even in those areas. Mumbai, Konkan, of course, will be a complete clean sweep for the Mahayuti, the BJP and its allies. But all in all, now everybody seems to have accepted the reality that the Mahayuti government is going to come back. The people of India do want to see a government aligned with Prime Minister Narendra Modi's vision to make India a developed nation by 2047. And I do think, looking at the kind of governance that the government led by Mr. Uddhav Thackeray had given to this state, people don't want to see a repeat of that. So I can clearly see before my eyes, once again, Prime Minister Modi leading from the front. In fact, he's here this evening at about 4:30 p.m. at Shivaji Park. And we are all eagerly awaiting the message that he will give us today.
So if the Mahayuti were to get a majority, who would be the chief minister? Would it be Mr. Shinde? Has any call been taken on that?
We'll decide that once the elections are over. All the four partners in the alliance will sit down, and just as we've made all the decisions very amicably, this decision will be equally smooth. The good part is all the parties hold Prime Minister Modi in such high respect that they believe that whatever decision is taken collectively by all of them and blessed by Prime Minister Modi will be final.
Because in a sense, the BJP gave up the chief ministership when the Shiv Sena split 2 years back.
I don't agree entirely with that. I think it's not a question of giving up chief ministership or accepting it or demanding it. It's always a consensus that you draw up amongst friends. It has happened in the past. For example, in Bihar, we had many, many more seats, many, many more legislators than the JDU. But we still chose to agree to have Mr. Nitish Kumar as the chief minister. So similarly in Maharashtra, we thought that Eknath Shindeji should lead the state the second time around when we came in after 2022. And I think he's done an absolutely fabulous job.
Right. So one of the features of the Maharashtra elections is obviously the Ladki Bahin scheme, which is supposed to be a game changer. But there is also, a debate on the culture of reveries and freebies, and both groups, opposition parties, you often blame the Congress for the kind of, what you call excessive welfare in Himachal and Karnataka. Why is this scheme any different?
First of all, I'll just correct your choice of words. It's not supposed to be a game changer. It is a game changer. And almost every feedback that we are getting seems to suggest that women across the state of Maharashtra, and nearly 25 million women have already received 5 installments of 1,500 rupees each. That's about 7,500 rupees. We plan to increase that to 2,100 per month. So effectively in the next 5 years, every woman in that age group would be receiving nearly 1.25 lakh rupees. In terms of why we believe the scheme is good for the state of Maharashtra and for our women, I'd like to clarify that Maharashtra being a prosperous state and having a good balance sheet, a good budget surplus, a good situation within our fiscal deficit available, to be able to fund such a scheme was carefully considered before we launched the scheme. What we have seen happen in Himachal, where even salaries got delayed, forget implementing the promises that they made. What we've seen in Karnataka or Telangana, where huge promises or guarantees were given, and the people were told, cut, fatafat, you'll be getting all of these things. Unfortunately, for several months, if not years, they are still waiting to receive those promises or have those guarantees implemented because the states did not have the capacity in the first place to implement it. Maharashtra, we carefully considered it, and it was a part of our budget announcement. So it was not something out of the budget or a future promise which would lead to fiscal imprudence. Second, all of us in this room from the business world know that a twin track approach, on the one hand, deep investments in infrastructure, promoting industry, promoting business, has been the credo of the Modi government. On the other hand, Prime Minister Modi from 2014 has consistently focused on bringing the women of India into the mainstream, empowering them to contribute to the formal economy, empowering them to gradually become equal stakeholders in the national political or economic agenda. Whether it is through the Beti Bachao, Beti Padhao program to ensure that the girl child does not drop out of school. And I still remember my son doing a case study in all the municipal schools, even of Mumbai, coming up with a report that lack of sanitary pads and separate toilet for the girl child were one of the main causes for girl children leaving school or dropping out of school in the classes 4 to 6, even in a city like Mumbai. But Prime Minister Modi, coming from very humble background, recognizes all the difficulties our sisters and daughters and mothers have faced. So if you will see 10 years, whether it is building 120 million toilets to make sure no woman ever has to live a life of indignity, whether it is ensuring every household gets a cooking gas connection so that they are free from the 400 cigarettes of smoke that they have to take in, whether it is making sure that everybody gets access to health care through the Ayushman Bharat Yojana, which is now expanded so that all those who are above 70, irrespective of income, will also be covered under an additional 5 lakh rupees for the old people, or whether it is the Jal Jeevan Mission, which has already taken water from a tap directly to 150 homes, and another 2.5 years later will ensure Nal Se Jal, water from a tap for every woman in the country. 43% of our STEM graduates, and we have the world's largest number of STEM graduates every year, are women today. The idea being that we need to get them into the formal economy, we need to get them contributing to national growth, and therefore Prime Minister always said it will be women-led development. It will not just be the development of women. In the political arena, we've ensured that 33% of our members of parliament in the Lok Sabha and all the state assemblies will be women once the census and delimitation exercise is done. Every single aspect of a person's basic needs, Prime Minister Modi has been focusing to ensure that without discrimination, our women folk come up in life, become an equal stakeholder in the economy, and within that, we all recognize that consumption is a very important element to drive the economy. So while infrastructure and industry investments are a major priority, consumption also takes a very important role in national development. 2019, we had come up with a scheme to support our farmers, and nearly 120 or 140 million farming families were given a monthly support so that in the time of an emergency or in the critical times, they have some comfort of money in their pocket. Similarly, I think the Maharashtra government has very wisely ensured that the poor or the lower middle class families, women, have a little freedom, some money in their pocket, in their bank account, given through direct benefit transfer without any middleman, without any corruption. And that gives them the ability, the self-confidence to be independent, to be able to take care of their own, and not to be always stressed out if they want to pay the fees of their children or buy some books for their children, or in Diwali or Dasara or Dhanteras or Christmas or the New Year want to buy some new clothes for themselves, for their children, for their family. These small requirements can be taken care of by them. Similarly, yesterday in Pune, I met one financial market influencer. I think her name was Miss Reshma, chartered accountant called Miss Reshma, who I'm told is guiding all the women who get this Ladki Behna monthly honorarium or support to invest that money wisely through an SIP, through an insurance product, through a savings product. So I think there are several aspects to this which can help transform the lives of our sisters from Maharashtra. And I compliment the Maharashtra government for the very, very timely intervention to support our women.
So I'll just pick up on some of the themes that you mentioned. So you talked about consumption, perhaps the need to support consumption. So the Indian economy seems to be going through a bit of a soft patch right now. I mean, inflation is above 6%, markets have fallen, some of the recent data has not been so good. So are there any measures the government is looking at to boost consumption? Are you looking at cutting some tariffs, for example, to so that it doesn't feed through to inflation, or any other measure?
Bodhi, first of all, I think everybody in this room will at least recognize and appreciate that to pick up on what Ms. Bhan just said, audacity of ambition, audacity of hope, this government hasn't ever fallen short of audacity of action. And we have always been at the forefront of acting on every single agenda that can help this economy, that can help the country and the people of India. As far as the inflation goes, the kind of synchronized action that both on the monetary policy front and fiscal policy front, government and the Reserve Bank, and you'll hear it from Shakti Kanji when he comes, have been, for the last 5 or 6 years, been very, very actively intervening, has helped India remain one of the best performing economies in the world in terms of inflation management. In fact, if I'm sure CNBC-TV18 with its glorious research team must be doing the data analytics, the inflation under the Modi government for the last 10 years, average inflation has been the lowest India has seen since independence. In fact, when the Monetary Policy Committee came out with their recommendations last time around, they had predicted this month, the last number, to be a spike in inflation. It is not something which is rocket science. I see all the top honchos of the stock market here. They could have told CNBC-TV18 the same thing if you had asked them. It was not any surprise. But at the same time, we all recognize that we're going to see that falling again by December or January. We have all, I think we are all smart enough to know what's happening, what the base effect is, what are the factors, what was the festival demand. Similarly, in terms of softening of demand, I have 2 points to make. One, I think it's time that industry also and businesses also look at consumer choices and consumer demand for more attractive pricing. And I was just looking at the numbers of a company, an automobile company which just went public. The same would probably go for most of the automobile companies of significance. I was seeing an EBITDA of more than 21%. I was seeing a PAT possibly of 9 or 10% on their balance sheet. I was seeing that they have invested $200 million 25 years ago. But in the last 10 years alone, I didn't have the time to research all 25 years data. Maybe Rahul, your team can help me with that, with a complete analysis. But in the last 10 years alone, on an investment of $200 million, they have already remitted dividend and royalties of upward of 12 or 13 billion dollars in 10 years. They are sitting on a market cap of which their own holding is still about $15 billion. And I still don't have data of how much they are supporting their own suppliers, international suppliers, maybe their subsidiaries or other companies. And aggregate returns on their investment, I think anybody in this room, if you calculate, it's phenomenal.
It's been staggering.
Staggering. And they have a huge demand in India. There's a huge competitive edge manufacturing in India gives you. So I think if smart business people start offering better pricing, better value for money, I'm sure the market will give them a boost. It's for them to decide whether they want to sit on high margins and then, as I read in the paper a couple of days back or maybe yesterday, say that, oh, market is softening, auto market, passenger sales, vehicle sales will be down to 3-4%, or to be more aggressive and try to capture a larger market share at more competitive pricing. I personally am one of those who believes that economies of scale, that the huge demand that 140 crore Indians provide, the demand of 1.4 billion aspirational young India, the demand that our growing economy, our growing income levels offers is unmatched. And the affordability, the competitive edge that this economy of scale gives you will help you not only meet India's need, but also international demand. So choices of businesses if Rohit Java or all the other big businesses who are sitting here, I don't know who else is there that I can see. Subrakant, I see a lot of friends here. If they become more competitive in their pricing, I'm quite sure they can capture much bigger markets, get much better profits. At least we in government don't work on a quarter tak philosophy that was just now articulated. I think it's time investors also looked at the long term and not panic on every quarter.
So I'm sure they'll be paying close attention. So you're saying basically cut prices. That's what you're telling FMCG companies,
I'm
auto
not
companies.
suggesting anything. I just stated a matter of fact. Choices of the businesses, whatever they want to do.
Should the RBI, since you're saying, obviously everyone knows the inflation was anticipated, that it'll be bad. Should they cut interest rates in December? Or
I certainly believe they should cut interest rates. Growth needs a further impetus. We are the fastest growing economy in the world. We can do even better. And frankly, the largest component of inflation is food inflation. I think the chief economic advisor had also assessed the whole situation. And this is not something I say today. If you look back at the archives, some of the friends here may have heard me talk, even when I was in the opposition, before I came into government. I had been consistently saying, we have a senior RBI governor sitting here, maybe he can throw more light on it. But I think it's an absolutely flawed theory that food inflation should be considered while deciding on the interest rate structure. Food inflation has nothing whatsoever to do with managing inflation. That's a demand-supply situation. That's not something that is being hoarded or stocked in large numbers. I've seen the data of stocking or stockpiling of food products. As Consumer Affairs Minister, we used to monitor that month on month. And I think it's time that the policymakers and regulators seriously sat down, discussed with all stakeholders, discussed with economists even beyond their own, and we came to a considered view whether food inflation should at all be a part of the decision making for inflation or interest rates.
So I'm sure Dr. Ragarajan and indeed the governor will weigh in later. So do you think he should go big like the...
This is my opinion. I don't speak for the government. You asked me my opinion. So I'm not necessarily speaking for the government. I'm quoting from the CA's report and I'm stating on record, this has been my considered view for the last 20 years at least.
So 50 basis points or 25 basis points?
I'm not Nostradamus, nor am I an astrologer.
No, but what do you think they should do?
Well, they are wise men. I leave it to their judgment. Okay. It's signaling also. Very often it's signaling. Very often it's the intent. Very often it's the confidence you give to the market.
So you also alluded to, I mean, you didn't directly, but on this private capex not picking up. So
I didn't allude. Don't put words in my mouth, sir.
No, you didn't.
I never said. Did I ever say that?
You were.
I think private capex is picking up massively.
Right.
Every industrialist I meet, every foreign investor I meet, they talk of massive plans in India, massive growth in their industry investments, massive growth in looking at infrastructure assets. So pardon me, the private sector is very bullish on India. I think we need to see some more bullishness amongst the journalists.
Among the media, yeah. Point well taken. We'll keep that in mind. Okay, so let me change gears somewhat to another election, another consequential election which happened earlier this month. So, President Trump, Prime Minister Modi do share a common, perhaps a worldview to some extent. They get along well at a personal level. What are the changes do you see in this all-important India-US economic relation going forward? I know he's not yet in office. There is, whether he'll impose 10%, 20% tariffs or 60% on China remains to be seen. But how do you see this playing out?
Well, I think we have all seen how the Prime Minister over the last 10 years has made every Indian proud of being an India, and every Indian across the world today is received with respect, is received with dignity, something which we didn't see 10 years ago. And that is because Prime Minister Modi and the Indian government has never interfered in the affairs of any foreign country or the politics of any foreign country. Governments are chosen by the people of the land. We worked with the Obama administration. We worked with the Trump administration. We worked with the Biden administration. And we will now work with the Trump administration again. And our relation with the US has only got better and better with every passing day. Mr. Trump is on record to say that Prime Minister Modi is a wonderful person. Prime Minister Modi is a dear friend, a great friend. And I'm sure that we will do very well going forward. You've heard President Biden say India-US relation is the most consequential relationship of this century. I think Prime Minister Modi has earned the trust not only of politicians and governments across the world, but of the business community and the people of the world, because he works with a clean and honest intention. He says what he does. He advocates peace in the world. He advocates greater dialogue and diplomacy so that we don't have conflict around the world. And therefore today, he has not only been the most popular leader consistently for the last 10 years in India and across the world, as the Pew report shows us week on week. He has not only been the most popular in the world, but he's the most trusted leader in the entire world today.
I'm being asked to wind up, but I'll ask you a couple of questions. It's about Elon Musk, as you may have anticipated. So the first one is not the usual. He has been, he and Vivek Ramaswamy are heading this commission, DOGE or DOG, the commission, to improve the efficiency of the US government. Does India need something similar?
Well, I think it's a good idea that Mr. Trump has initiated, and I compliment him for that. I hope they come up with good results, or at least better than the results we saw last time they had made that effort. We in India have been very successful in improving the efficiency of the government. We have a capacity building commission which trains all bureaucrats. We have brought in a number of efficiency elements. For example, all files are digitalized, all paperwork is reduced, public interface is through video conferencing. So government in India in the last 10 years has used technology to bring in efficiency in a big way. And I think going forward, we in India will continue to persevere. But it's a two-way sword. For example, it's not that you cut down people everywhere. In the Trademark and Patents Office, which comes under me, the amount of work in India, thanks to the thrust on innovation and R&D that we have been giving, has increased so much that we are actually hiring 1,000 more people. But how does that impact us? Before we have hired them also, in the last 10 years, the number of patents we have granted have increased from 6,000 in 2014 to 100,000 in 2024. Look at the pace of growth, and that's before the new people have come in. Once we have 1,000 more, we are already coming up with the Anusandhan NRF, National Research Foundation, to support public-private academia partnership in research and development. We are trying to encourage private sector to invest more in technology, in research, in innovation. And therefore, I believe that the Patents Office will need to continue to grow and bring more efficiency. So you have to assess item by item, department by department, what is important, what is good to be done.
What about the much talked about plans of Elon Musk to invest in India? The trail seems to have gone cold some months back. Is something happening there?
Well, that's a choice that Mr. Elon Musk will have to make. We will be very happy to welcome all the companies from across the world to come and invest in India, to make electric vehicles in India. This government over the last 10 years has consistently focused on sustainability. We are giving a number of incentives and schemes to promote more and more adoption of electric vehicles through our FAME scheme, through the recent PM e-bus Seva Yojana. I personally have been monitoring the cost differential between electric vehicles and ICE engines. I think today, on a total cost of ownership between CapEx and OpEx, it just doesn't make sense to buy anything but an electric vehicle. It's the right time. Two-wheelers have almost all gone electric. On buses, I think it's a great economic model to go electric. With the fall of prices of batteries and with newer ideas like the plug-in hybrid, where you first run on a battery for about 100 kilometers, your passenger car, and after you run out of it, it switches to petrol. It's not a hybrid of the traditional type that we saw, let's say the Camry. This is significantly different. And the more I studied it, though I was always anti-hybrid, publicly, including on CNBC programs, I was always anti-hybrid. But when I studied the model of the plug-in hybrid, where you can have the first 100 kilometers of a passenger car on electric, and only in the case of emergency switch to petrol, it takes care of range anxiety, and it helps cut down petrol consumption probably by 90-95%. I was assessing my own vehicle's consumption or distance traveled, and I could see only 1 or 2 days in a year when I go more than 100 kilometers by car. If it's anything longer, you take a train or you take a flight. So I think it's something whose idea has come. But more and more, our buses, our trucks, our passenger vehicles are going to see electric mobility. Companies are taking on this challenge also. They're looking at being net zero, some by 2030, some by 2035. I invite industry to at least immediately look at switching over to electric vehicles or better modes of transport and logistics, and contribute to this effort to make India a great place to live in, bring down pollution, and contribute to our sustainability effort.
So, Minister, what the US does have a huge signaling effect for the rest of the world. Still, the Inflation Reduction Act is likely to be substantially rolled back once President Trump assumes office, including the emphasis on electrification on that. But we are not going to change. We are going to go all in for electric as we...
I think we are not going to change. We stand committed to promoting sustainability. And we believe, even though we are not responsible for this problem in the first place, I think everybody in this room recognizes supporting 16% of the world's population. Our contribution to the mess up there is less than probably 3 or 4%. So we are not responsible. But Prime Minister Modi, who played an important role to make COP21 a success, to bring the Paris Agreement to fruition, stands committed as the leader of the Global South to be a part of the solution, even though we are not the problem in the first place.
Thank you so much. Thank you so much. Thank you.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged...
Decades tracking what's happening in the world of consumption, what's happening with FMCG companies. And today, what is the last count, Essie? A couple of months ago, it was 3.4 billion people who consume something that comes out of the Unilever stable every day. What is the current count?
Yeah, it's 3.5 billion people that we serve all around the world with our products, and I'm so proud of that. But first, thank you for inviting me, and congratulations on 25 years of success.
Thank you very much. I know what it takes to create a legacy brand, and you have plenty of experience doing that, Essie. So let's talk a little bit about that. You said everything is changing in marketing, yet nothing is changing. So let's address that. Given the many dynamic changes that we are seeing today, as you look at consumption, as you look at consumer behavior, what are the few mega trends that you're tracking that you believe will shape the way that companies address and serve consumers?
Yeah, so first of all, Unilever, it has the privilege of serving, as you mentioned, 3.5 billion consumers each and every day around the world. We're in over 190 countries. We have over 400 brands. And so there's so much that we can capitalize on with that breadth. I do say everything and nothing has been changing. That means the fundamentals of what people need don't change. The fundamental foundation of how you build a brand doesn't change, but people's lives have changed, and in ways that are enormous. And there's so many trends that are driving the change. And I think of those in three areas. One is people are living differently. And that is a lot because of the macroeconomic changes that you're experiencing here in India. We see a rising middle class and affluence. We see that doubling the number of people in the middle class over the time period until 2030. We also see increased urbanization. We see it by 2050, almost 70% of the world's population will be living in an urban environment. We also see, in terms of these macroeconomic shifts, population shifts in terms of aging. We have seen and project by 2050 a tripling of people living over the age of 80. That is enormous. India, on average, has a younger population, but it will also age over that time period. So we see tremendous macroeconomic changes. But then there's some lifestyle changes that go along with that. One of those trends is what we call the wellness revolution. People want to live better. That's physically better and it's mentally better. And that is changing and creating enormous opportunity for us to grow and boost our brands. The other thing we see is what I would call the joy and experience economy. That's people wanting to invest in themselves, products that bring joy, pleasure, delight, experience, and interestingly, that earn a premium. We see, because of COVID, there's so many of these lifestyle trends. People returning to their homes, a home culture, investing in their homes. As you can see in our portfolio of products, home care products, that makes a difference. And then we see the huge influence of social. And the influence of social in the market is driving aspiration and creating imagination and access to commerce and new global trends. We see that in food all around the world. People are craving food culture. In the Western world, Indian flavors. In the Eastern world, Western flavors, because of this influence in social. So we see a number of lifestyle trends that we're able to use to innovate, make new markets, and grow, certainly, our business. And then the business trends. Media and retail are changing. Retailing is changing. Data is becoming the king, and not just relationships as it has been in the past. And then, we're talking trends. I'd be remiss if I didn't talk technology and what's happening with AI, Gen AI, and its disruption. So a number of trends that we can count on to drive our brands and our business.
Well, a number of trends, and let me unpack some of what you just said, and let's pick up on technology, which was one of the key aspects that you spoke about. How are you at Unilever leveraging AI capabilities? How are you leveraging the power of data and technology to drive your power brands forward?
Yeah, so we're driving technology in lots of ways. When we think about technology, it starts first with what is our business strategy? And when our business choices, how can we use technology and AI to unlock that? Because really it's a tool to do things better, faster, and more productively. In terms of our strategy, it starts with our brands. Our goal is to focus on those power brands. So of the 400, there are 30, so unlocking the potential of those power brands. The other thing is to expand and create new markets with innovation, coming to market quicker with those innovations in a more bigger and disruptive way. And then the other is to drive premiumization and productivity. So how we're using technology is to speed up our innovation cycle. We have a wonderful innovation called Wonder Wash. It may surprise you, but people don't like to spend a lot of time doing laundry. So our Wonder Wash...
No surprise there.
No surprise. Cuts down that cycle time of doing laundry in a machine by 15 minutes. And up until now, there's been no detergent, no laundry detergent that is designed to work in a fast cycle. We brought that to market in an accelerated time by the prototyping that we were able to leverage by using AI. What are the right scent preferences? How do we cut down on ingredient development time, et cetera, and deliver superior results? So we've been using AI, like 500 applications of AIs for decades, and we continue to use that for the strategy to build our brands and to innovate.
So let me just ask you a quick follow-up question on that. You talked about the accelerated pace of innovation and how it's brought down the time to go to market. What are we talking about? A couple of weeks, a couple of months? I mean, what's the turnaround time now between idea and execution and market?
We have some examples actually near and dear to our heart in India, where we've been able to innovate in 3 months instead of an 18-month or 2-year period. Significant. An example of that is Sunsilk with onion and jojoba. The AI leverage of innovation allow us to identify, again, the trends, the ingredients, and do rapid prototyping, significantly reducing cycle time.
Let's talk a little bit about India, Essie, and it's great to have you here. Of course, you've got your entire team here in India working their magic on how to draw in more Indian consumers. But as you look at what's happening in the world today, as you look at the demographic shifts that you spoke about, the consumption shifts that you spoke about, how would you pack in India as far as Unilever's global growth strategy is concerned?
India is known as the heartbeat of Unilever.
Heartbeat of Unilever.
And we see Rohit here, my colleague, who is the CEO of this beautiful business. And India is so important to the business. India is really the only market leader that sits on our global executive team. It is an important pulse of the Unilever business. And we'll continue,
deserve a round of applause
and will continue to be. If we look at all the trends that I spoke of early, India is at the core of those trends. The affluence of the middle class. Look at aspiration. And of course, 1.5 billion people in India and growing its impact in the economy. Of course, it's fundamental to what we do. And even more importantly, it is the projected growth of the economy and how important it is to our business. So all those trends, home culture, food culture, joy economy, beauty culture, wellness culture are alive and vibrant. Rohit will be speaking later today, and we'll talk more about how the strategies come to life. As we've renewed our strategy into 2030, we've reaffirmed the critical role of India in delivering our growth. Said another way, if India doesn't grow, we will not be able to accomplish our objectives, and India will grow, and we will deliver our objectives.
So India is crucial to Unilever's global growth strategy?
Unequivocally.
Unequivocally. So let's talk a little bit about what you're seeing in the world at this point in time. It is volatile, that would be an understatement, and there are many things that are impacting the way that consumers spend. Inflation hopefully is starting to taper down globally as well. What are some of the opportunities as well as some of the global risks that you're factoring into business?
Yeah, it's a dynamic time. So much so, I would say, change on its own is a big disruption. We talk a lot about the AI revolution, but change its own. And for me, I would actually respond to that more in terms of leadership. The biggest thing we need, companies are people. So what we need in addition...
consumers are people.
And consumers are people. And in fact, you know, and I think about what's important for us in business is to remember that, because we often think about people as consumers and not always as humans. So there are humans that buy our products, that we earn that purchase through, and there are humans that make up our business. So people are at the core. So as we think about disruption, we have to think about people. Us as business leaders, how we arm ourselves to be fit in this agile, dynamic journey. So much is changing around us. We have to keep ourselves fit, fueled, inspired, educated to deal with the changes and understand the changes that people who consume our products will go through. And look at that as opportunity. Opportunity for innovation. Look at that as opportunity for our businesses through technology. So when you ask about dynamic times, the most important thing for me in that is people capacity.
Speaking about being fit, fueled and inspired, Essie, what does it take for you to be able to do that? I mean, is there a mantra that you follow to stay fit, fueled and inspired?
Oh, that's so interesting. It's a good question. I think about, I have a range of leadership principles. One of them is manage your energy, not your time, because time is finite, energy grows. So what I try to do in my life is invest time and effort in the areas that I get energy from. So people often say to me, AC, how do you do all those things? I mentor a lot. I'm passionate about so many things. What I do is get more energy from the things I do than I give. My visit here to India, upon your invitation, brings me energy instead of adding an energy. So when you ask about a mantra, it's setting up my life so that I'm fueled by the things that I do to manage my energy so that it grows instead of limiting. And that keeps me fueled, inspired, and energized.
Well, thank you for adding that. I think that's a wonderful mantra. Manage your energy, not just your time. I think that is something that I'm certainly going to take back away from this conversation, Essie. But I want to understand from you, and I know that you're a big champion of this, ensuring that companies like yours and the brands that you work with become more accessible, not just to consumers, but also become much more inclusive. As you look at category creation today, from an impact point of view, from an inclusion point of view, do you believe that those are going to be some of the critical pillars that will drive growth as well as brand creation?
Unequivocally, yes. When I think about equity and inclusion, there's so many reasons that's important. And I always start first with what's happening in the world. We started first with trends. One of the demographic shifts is we think about the next billion and a half people that come in the world, that where that growth is going to come from. It's going to come from Africa and Asia. We see the shifts in immigration. There is more diversity in the world, growing than ever before, and people are more demanding for authenticity, self-expression, and identity than ever before. People don't want to be put in a box. Some of that is because of social media, where people are finding people like them in their tribes that they want to express themselves to. So diversity and understanding people and our uniqueness and all of that difference, if it is how we show up in our beauty needs, having a more textured hair like mine, melanin skin with different needs, is super important. And our ability to understand that is essential for our growth. So that means in business, we have to create and attract the same diversity of people. Throughout my career, the 30 years I've been in business, I've seen the power of that. I've seen the power of that on brands and businesses. We see that at Unilever. We see success from making products for textured hair. We see that in our brands Dove, our brand Shea Moisture, and many more. We see the success in managing different skin types on body. We see that in our brands Dove. We see that on Vaseline. So equity and inclusion are good business overall, and as was just discussed on the earlier panel, good for society. because we often see when people underserved could have needs met and join the workforce, it drives consumption and it impacts society.
Essie, you spoke about one of the big mega trends, and I'll end by asking you about that, the wellness trend, the live better trend. How much of that is likely to drive innovation for Unilever, in the next decade or further?
It has already significantly driven innovation for Unilever, the wellness revolution. I will say in 2020, the global well-being market was about 4.4 trillion euro. In 2024, it is about 7 trillion euro. That's in a 3-year period. We acquired a business called Liquid IV. I don't know how many of you here are familiar with that.
I know about Liquid IV, yes.
Liquid IV is a supplement that you add to water for superior hydration. It gives 3 times the hydration of water. It's used for a number of reasons. Some adults like to use it after they've had a lot to drink to avoid a hangover, but athletes use it, children use it. In fact, women disproportionately use it. When we acquired that business, since then, we acquired it in 2020, the business of Liquid IV is more than 4 times its size in 4 years. So it is slated to be our next billion-euro brand. So it has already significantly driven our business. That's one example. We have so many more. Here in India, how we've extended Horlicks. There are examples around the world. So not only will it contribute to our growth, it has contributed to the growth. And the trend is living better longer. So even in living better, we have so much more in the aging revolution as a part of the wellness revolution.
Essie, finally, 2025, how confident do you feel about the year, and how confident do you feel about India's role as far as Unilever's strategy is concerned in 2025?
Yeah, there's 2 things that you said that I'll use as a foundation of answering that. One is India's role in our growth is critical and significant, and that will continue in 2025. The second thing is how dynamic the world is. I am confident we will experience headwinds, but I'm also confident in our continued growth, and that our growth will come from volume-led growth, from penetration, offering superior value through our brands across the whole brand experience, and continuing to earn a premium. And we will face headwinds and overcome those challenges as we deliver continued growth.
Essie, it's been an absolute pleasure. Ladies and gentlemen, a big round of applause for Essie for joining us here at the Global Leadership Summit, for sharing your business as well as your life mantras with us. It's been an absolute pleasure. Thank you very much for your time.
My pleasure. Thank you for having me.
And thank
In 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted
rate or inflation. That's their big achievement. In the 90s, if you remember, the Reserve Bank successfully transitioned India from a largely state-controlled economy to one where you had market-determined exchange rates and market-determined interest rates. A largely government-owned banking sector was transitioned to one with healthy, competitive private and public sector banks. Now, to salute this effort today, we will be shortly honoring 3 former Reserve Bank of India governors, Dr. C. Rangarajan, Dr. Bimal Jalan, and Dr. Reddy for their iconic contributions to the Indian economy. The current governor, Mr. Shaktikanta Das, also has a distinguished record. He has been named the top banker globally by Global Finance, the magazine, for 2 years in a row, exactly for the same thing, for his outstanding performance in inflation control, economic growth, currency stability, and interest rate management. So growth has always come with good macros. In step with the central government, the Reserve Bank led, Mr. Das led the Reserve Bank to infuse liquidity into the economy during the dark COVID days, but was quick to withdraw it in time when normalcy returned, and therefore did not suffer the consequences of high inflation, which many so-called developed countries are going through and are, barely able to control. Sir, Governor, we at CNBC-TV18 have been covering the Reserve Bank ticker by ticker, headline by headline, going back at least 100 monetary policies. And we are honored that the Governor has come here today to be part of our Silver Jubilee celebrations and to deliver the keynote address. May I also thank Deputy Governor Ravi Shankar, as also former Deputy Governors Shamla Gopinath, Mr. Kanungo, all of them for coming in so that we feel that we did a good job of covering the Reserve Bank. Ladies and gentlemen, with these words, may I present to you Governor Shaktikanta Das.
I'm just trying to adjust this to suit my convenience. I hope I'm audible. Is that okay? I'm audible? Yeah, thank you very much. Sri Rahul Joshi, Managing Director, Network 18 Group. Dr. C. Rangarajan, former Governor, Reserve Bank of India. Former and present Deputy Governors of the Reserve Bank of India who are seated here in the audience. Chief Executives of banks and other financial institutions and the corporate world. Distinguished members of the audience present here and those watching this program virtually. Members of media from the team CNBC, Network 18, ladies and gentlemen. I'm delighted to be here this morning at the Global Leadership Summit, which marks the 25th anniversary of CNBC-TV18. I would like to congratulate the entire team CNBC-TV18 for its successful journey over the years. It's indeed an honor for me, and I repeat, it's indeed an honor for me to join this occasion to felicitate 3 distinguished former governors of the Reserve Bank of India. Dr. C. Rangarajan, who is present here, and I'm immensely humbled by his presence here. So the CNBC is honoring Dr. Rangarajan, Dr. Bimal Jalan, and Dr. Y.V. Reddy. And what can be a better occasion for me personally to be present here and watching the event. With their exceptional performance, these 3 former governors of the Reserve Bank of India, with their exceptional performance in the economic and financial sector policy making, they indeed occupy a pole position in the art and science of central banking and have left a mark not only in India but across the countries. As stewards of a full-service central bank, they initiated fundamental shifts in the monetary frameworks as well as in the financial, exchange rate, and external sector policies of the country. I humbly bow to the rich tradition and legacies left behind by Dr. Rangarajan, by Dr. Bimal Jalan and by Dr. Y.V. Reddy in shaping what the Reserve Bank of India is today. Drawing inspiration from their contributions, I have chosen to speak on the theme, Sailing Through Turbulence, India's Tryst with Financial Stability. In recent years, the global economy has gone through a period of continual and unprecedented shocks. This was a period of great volatility, as I have described it elsewhere, quite distinct from the earlier era of the Great Moderation. Complex and varied shocks of a global pandemic, supply chain disruptions, wars, geopolitical conflicts, and climate change hit the global economy very hard during this period of global volatility. These were not typical shocks dealt with in standard textbooks or having standard policy responses. Now, sailing through this turbulent period has therefore been a daunting challenge for every country, including India. After almost a synchronous adoption of expansionary policies following the pandemic, central banks across the world resorted to an equally synchronous monetary policy tightening when high inflation bounced back in the face of supply chain disruptions and the onset of the war in Ukraine. Overall, these policies across the globe appear to have worked well. That is, these policies of the central banks in tightening the interest rates and tightening monetary policy when the war commenced, and prior to that in loosening and going for an expansionary policy when the COVID pandemic hit the entire world. I think this time around, the policies of the central bank across the globe, they have worked well. Soft landing has been ensured, but risks of inflation, as I speak to you here today, but risks of inflation coming back and growth slowing down do remain. I'm talking about the global scenario now. Indian situation has its own characteristics. I'm now focusing on the global scenario. The headwinds from the geopolitical conflicts, geoeconomic fragmentation, commodity price volatility, and climate change continue to blow. During this entire period of great volatility, which I referred to a little while ago, maintaining price and financial stability have posed difficult trade-offs, as evident among others from the banking sector turmoil in certain advanced economies in early 2023. The challenge the challenge for central bankers in particular has always been between doing too little or too late on the one hand and doing too much or too early on the other. Reading the interplay between monetary policy actions and the developments in the financial sector, as well as the evolving situation correctly, and timing the decisions are always challenging. Central banks have by and large performed well this time around. In this challenging global environment, let me highlight certain contradictions globally which we observe at the current juncture. First, government bond yields, I'm talking about the global situation. First, government bond yields are rising even as many advanced economies have embarked upon an easing path through rate cuts, underscoring the fact that treasury markets are influenced by a host of global and domestic factors that are much beyond mere policy adjustments. Incidentally, even the US dollar is now appreciating, although the US Fed has started cutting rates. Second, undeterred by the strong US dollar and high bond yields, prices of gold and oil, the two commodities that typically move in tandem, are showing sharp divergence. Third, an interesting contrast is also emerging between rising geopolitical risks and financial market volatility. While geopolitical tensions have escalated steadily in recent years, financial markets have shown considerable resilience in the face of mounting uncertainties. Fifth, global trade is projected to remain higher in the current year than the previous year, notwithstanding the sanctions, the tariffs, import duties, rising cross-border restrictions and supply chain disruptions. Fifth, emerging market economies have shown greater resilience than advanced economies in the current phase. Now let me turn to the Indian context. Amidst these headwinds and contradictions, the Indian economy is sailing through smoothly, powered by buffers like strong macroeconomic fundamentals, stable financial system, and resilient external sector. Our endeavor, that is our endeavor in the Reserve Bank, has been to seize every opportunity to further strengthen our fundamentals through prudent and proactive policy approach. Our primary focus has been to maintain financial stability, which breeds growth and prosperity. In 2019, we faced severe stress in the non-banking, that is in the NBFC sector. Liquidity had dried up and there was a crisis of confidence in the financial markets. There were also certain instances of bank stress, both in commercial and cooperative banking sectors. In all these exigent situations, the Reserve Bank took effective measures to stem the crisis from snowballing and to restore stability and confidence in the markets. In parallel, we strengthened our regulatory architecture and supervisory vigil to proactively identify weaknesses and be future ready. It is therefore appropriate to reflect on our experience during this period, not just, if I may say so, as a success story, but more importantly, to draw lessons for the future. When the COVID-19 pandemic hit us, our response was swift and decisive. We put in place business continuity measures even before the nationwide lockdown was announced. We set up special quarantine facility with about 200 officers and service providers and other staff to ensure continuity in financial market operations and in payment systems. All regulated entities were also advised to take immediate contingency measures to ensure business continuity and manage the emerging risks. Turning to monetary policy and the liquidity operations that we have undertaken during this period of continuing challenge, what I call the great volatility. Monetary policy, in fact, as we look back, has completed a full cycle in the last 6 years. An easing cycle during 2019-22 and a tightening cycle of equal magnitude thereafter. We have used the flexibility embedded in flexible inflation targeting to prioritize growth or inflation depending upon the prevailing conditions and the outlook. For instance, when economic activity came under severe stress during the COVID-19 pandemic, we prioritized growth over inflation and cut interest rates. We also infused huge liquidity into the system. These measures were nuanced, keeping in mind price and stability challenges that may arise in the future. In addition, forward guidance during the easing phase complemented and reinforced monetary policy and liquidity measures. In parallel, appropriate regulatory measures consisting of moratorium on repayment of loans and resolution frameworks for stressed loans were also announced. Later, when the Russia-Ukraine war caused massive supply disruptions in key commodities and threatened inflation to get out of control, we shifted our focus from growth to controlling inflation. We front-loaded our monetary policy actions and changed our stance to withdrawal of accommodation. We remained nimble and agile in our liquidity management operations. Further, fiscal monetary coordination, that is the Reserve Bank's rate hikes along with proactive supply-side measures by the government, helped in controlling inflation and anchoring inflation expectations. Coming to a more recent period, the MPC in its meeting on October 7th to 9th, that is in the last month, took note of the prevailing and expected inflation growth dynamics and decided to change the monetary policy stance from withdrawal of accommodation to neutral. It also decided to remain unambiguously focused on a durable alignment of inflation with the target while supporting growth. The change in stance provides greater flexibility and optionality to act in sync with the evolving conditions and the outlook. Overall, while average growth during 2021 to 2024 remained buoyant at above 8%, the receding of headline inflation in 23-24 and 24-25 up to September to within the tolerance band bears testimony to the success of the Reserve Bank's policies. What is equally important is that all these actions did not undermine financial stability, and this is a point I would like to emphasize. Our rate hikes were preceded or accompanied by prudent risk management practices in the form of greater flexibility to the banks in holding government securities under the held to maturity, that is under the HTM category, that minimized mark-to-market losses. It is evident that while designing our responses to both the pandemic and the inflation upsurge thereafter, our policies were flexible and balanced. We remain consistent with our mandate of price stability while keeping in mind the objective of growth. The underlying mandate of financial stability was also adhered to. During this entire period, communication became an important tool to complement our policy actions. During the pandemic, our endeavor was to give confidence to the wider economy, to the financial markets, and to the public at large. In the monetary policy statement on April 17, 2020, in the early part of the lockdown, I had said, I quote, "Although social distancing separates us, we stand united and resolute. Eventually, we shall cure and we shall endure," unquote. We began using quotes from Mahatma Gandhi like, and I quote, "In the midst of death, life persists. In the midst of darkness, light persists." This was in April 2020. And going forward, one more quote. It's when the horizon, one more quote from Mahatma Gandhi, that it reads as follows: "It's when the horizon is the darkest and human reason is beaten down to the ground that faith shines brightest and comes to our rescue." This was in May 2022, and several other quotes of similar nature. In particular, I would like to refer to my December 2023 statement following the macroprudential measures undertaken in November last year. I quote, "Financial stability is a public good. We do not wait for the house to catch fire and then act. Prudence at all times is our guiding philosophy." The spirit behind these statements, the spirit behind such communication, were indeed key to withstanding a period of multiple crises and giving confidence to the markets. Our communication was backed up by appropriate policy actions. It's not just that, communication words were being sounded, statements were being made, but they were backed up by appropriate policy actions. Evidently, communication played a critical role in maintaining stability in the turbulent times of the recent past. It goes without saying that a sound regulatory framework for regulated entities, I'll just touch upon a little bit on regulation and supervision also. Now, it goes without saying that a sound regulatory framework for the regulated entities, whether banks, NBFCs, or other financial entities, together with a robust supervisory and monitoring mechanism, are key enablers for ensuring financial stability. From a prudent perspective, so far as the Reserve Bank is concerned, measures like the revised norms on classification and valuation of investments, the scale-based regulations, and multiple other initiatives which were taken. I'm not reading them out. It will be the copy of my speech will be uploaded in the RBI website. You can have a look at it. So all these steps together including the steps to contain potential credit exuberance in unsecured loans, are some of the illustrations of prudent design of regulations in the interest of maintaining financial stability. Looking ahead, the financial system will continue to face newer challenges. There is a continuing need for the financial sector entities to strengthen their levels and quality of capital, while further sharpening the risk management standards. The Reserve Bank is now working on issues like the adoption of the revised Basel III standards in a phased manner, issuance of guidelines for expected credit loss, liquidity coverage ratio, that is the LCR, and prudent framework for financing of project loans. Our overall approach is consultative. For instance, with regard to the ECL framework, that is expected credit loss framework, even after issuing a discussion paper and receiving stakeholder comments, which we got examined by an external working group, we now propose to issue a draft circular for implementation of ECL. So the draft will be followed by issuance of a final circular. Again, we will get comments, and we are adopting this very careful approach because the introduction of the ECL framework marks a major transformation in the way assets, the stressed assets or the buildup of stress, or the way the assets get classified. So considering their significance, we have decided to approach repeatedly a consultative approach. Now the idea is to get stakeholder comments on certain specifics of the framework, considering its significance for the banking sector. Our endeavor is to maintain a balance between banking sector stability and economic growth. I would like to stress this point again. Our endeavor is to maintain a balance between banking sector stability and economic growth, both of which are necessary and are complementary to each other. We are also working on climate risks and their impact on the financial sector. The final guidelines for disclosure framework on climate-related financial risks will be issued shortly. The process of supervision of banks, NBFCs, and other financial entities has also been unified and substantially strengthened with proactive on-site and off-site supervisory mechanisms. The focus is now on early detection and preemptive correction. The enhanced off-site assessment framework is more analytical and forward-looking, with introduction of macro stress tests, early warning indicators, fraud vulnerability index, microdata analytics and microdata analysis, and use of artificial intelligence and machine learning. The on-site supervision now goes, that is RBI's on-site supervision, now goes into greater depths. Direct engagement with supervised entities is enabled through discussions and also through the Daksh portal, which we have set up, which is a SupTech initiative with end-to-end workflow solution to streamline and strengthen various supervisory processes. The College for Supervisors, which was set up in May 2020, is now helping our supervisors to sharpen their skills and remain up to date with the new and complex developments in the financial sector. The financial sector indeed has become more complex with the development of multiple digital products, common market infrastructure, and common service providers for IT services. These developments have elevated both the microprudential and macroprudential risks. The Reserve Bank has been proactive in addressing the growing cybersecurity challenges in the financial sector by issuing regulations relating to basic cyber hygiene in the regulated entities, and also with regard to digital payment security controls, IT outsourcing, and IT governance. Recognizing the critical importance of data and its future potential, An enterprise computing and data center is being set up in Bhubaneswar. Alongside, a cybersecurity training center is also being set up. Further, work on setting up of the Reserve Bank cloud facility is also gathering pace. Overall, the financial sector in India is now more robust and resilient than at the beginning of the recent period of turmoil. There is, however, no room for complacency. The regulator and the regulated entities, many of you are present here, the regulator and the regulated entities must remain alert and future ready for the emerging challenges. I would now like to speak briefly on the external sector stability. India's external sector has also exhibited strength and stability in the recent period. The current account deficit has remained within manageable limit and stood at 1.1% of GDP in Q1 24-25. During the first half of 24-25, India's merchandise exports recovered from a contractionary zone in 23-24. Services exports have remained buoyant and rose by 11% during the first half of the current financial year. The robust growth in the services exports coupled with buoyant private remittances are helping to contain the current account deficit. On the financing side, net capital inflows have generally exceeded the current account deficit and contributing to accelerate foreign exchange and contributing to accretion of foreign exchange reserves. India has the fourth largest foreign exchange reserves in the world at $682 billion as on 31st October, which is sufficient to cover the entire external debt and about 12 months of merchandise imports. In terms of other key external sector indicators, such as external debt to GDP, net international investment position, and short-term debt to external debt, India's position remains resilient. Our exchange rate policy is well articulated and has remained consistent over the years. India's exchange rate regime is market determined, and the Reserve Bank does not target a level or band of the exchange rate. The forex interventions are carried out to ensure an orderly movement of the exchange rate and to curb undue volatility, anchor market expectations, and ensure overall financial stability. It is important to note that the exchange rate is also a barometer of an economy's inherent strength. If the Indian rupee has remained relatively stable despite severe external shocks, including the largest and the steepest tightening by the US Fed in 2022 and 2023, it speaks volumes about the sea change in our macro fundamentals from the days of the taper tantrum. In fact, if we look at the other major segments of the financial markets regulated by the Reserve Bank, that is the money market and government securities market, they have also remained stable despite large swings and spillovers from global markets. The weighted average call money rate has remained range-bound within the liquidity adjustment facility, that is within the LAF corridor, and closely aligned to the policy repo rate. The 10-year GSEC yield has also moved in a narrow range of 6.72 to 7.61% during the tightening cycle amidst global policy pivot, fluctuations in US Treasury yields, and global crude oil prices. The Reserve Bank has undertaken several regulatory measures in recent years to ensure resilience and stability of the financial markets. These include putting in place regulatory frameworks for benchmark administrators and electronic trading platforms, robust governance requirements for market makers in OTC derivative markets, and margin requirements for non-centrally cleared derivative reforms. As I proceed to conclude, let me add that the Reserve Bank has also played a crucial role in creating an enabling ecosystem for innovations in the online payment, innovations in the payment systems. This has enhanced the efficiency and stability of the Indian financial system. Introduction of 24/7 NEFT and 24/7 RTGS, the success of the UPI, and implementation of the central bank digital currency, that is CBDC pilot project, that is the e-rupee, are transforming the wider financial system. Digitalization of banking services has received a further boost from the Reserve Bank's pilot project, namely the Unified Lending Interface. This unified lending interface was developed and was designed and developed by the Reserve Bank Innovation Hub in Bengaluru. A few other initiatives of this innovation hub are also in the pipeline. Let me now try and conclude. The Reserve Bank's mandate spans multiple dimensions. Our consistent effort is to take a holistic view of stability, which encompasses price stability, financial stability, and sustained growth. We deploy multiple policy instruments to serve these multiple objectives. Today, India's economic growth remains resilient. Inflation is expected to moderate despite periodic humps, and the external sector is robust. Without being complacent, let me end by saying that the Indian economy has sailed well and sailed very well through the prolonged period of turbulence, and it exhibits resilience in the face of constantly emerging new challenges. Thank you. Namaskar.
Thank you very much, Governor Das. May I please request you to stay on the dais. We will have former Governor Rangarajan coming on to the dais for the award ceremony. Thank you very much for an almost encyclopedic coverage of the Reserve Bank's activities. Here, sir. Can you sit here? Oh, we can get you more. Yes, he's coming. Shireen Bhan, may I request you to please bring Dr. Rangarajan onto the stage. Governor, I know you told me that you only want to speak, but just before you came on, we had the Union Commerce Minister telling us that he's worried about interest rates and was asking that food inflation should not be counted, that there should be an interest rate cut. Any response at all, sir?
I think the next monetary policy is coming up in the first week of December, so I would like to reserve my comments for that. Thank you.
Well, I tried to get a headline. Please. Dr. Rangarajan, please. Well, this is our moment, the big moment of the Global Leadership Summit when we want to honor our icons. This is the citation. Dr. C. Rangarajan shepherded the Indian banking system and the economy for a decade and a half, first as Deputy Governor of Reserve Bank of India from 1982 to 1992, and then as Governor from 92 to 97. As Governor, Dr. Rangarajan, along with his Finance Minister, Dr. Manmohan Singh, planned and executed a bold liberalization of the financial sector. Under his watch, lending and deposit rates, which until then were set administratively, were freed and set by the banks themselves. The dollar-rupee exchange rate, which was also administratively set, became market-determined. As banking regulator, Governor Rangarajan brought Indian banks to global standards of income and NPA recognition by implementing the Narasimham Committee recommendations. He also ensured a quantum leap in the Indian banking system by giving banking licenses to private entities. And you know, we now have a host of excellent private banks. Dr. Rangarajan is an inflation warrior, and he nearly stamped out double-digit inflation from India in the 90s. For his outstanding contribution to the economy, he was awarded the Padma Vibhushan in 2002. Post-governorship, Dr. Rangarajan continued. Post-governorship, he continued to serve the country as the chairman of the 12th Finance Commission. for his intrepid and intelligent leadership of the Indian economy and the financial sector, CNBC-TV18 is honored to award him the title of Icon of the Indian Economy. May I request Shireen Bhan to join the Governor in presenting the citation and the memento to Dr. Rangarajan. Can we have the citation, please?
Ladies and gentlemen, if we can give Dr. Rangarajan a standing ovation for his contribution to the cause of the Indian economy.
Dr. Rangarajan literally built the economy as we see it today. It was a very different socialist economy before his time. Dr. Rangarajan, may I please request you to address us?
Governor Das and friends, I am deeply grateful to you for the award that you have conferred on me this morning. It's a matter of great personal satisfaction, as it is a recognition of one's work. I was in the first year of the college when India gained independence. Thus, I have seen independent India function through my entire adult life. I have seen India's successes and failures, aspirations and disappointments, crises and their resolutions. After a long stint in the academia in India and abroad, I left the academia in 1982 when I joined the RBI as a deputy governor. And since then, I have been involved in public policy in one way or another. India faced an acute economic crisis in 1991, triggered by a severe balance of payments problem. What was significant was the way in which we dealt with the crisis. We did not just find a solution to the balance of payments problem, but effected a fundamental change in the Indian economy with a view to ensure that such a crisis does not arise again. Thus, it was a paradigm shift that we effected in 1991 and later on, of course. We made a break with the past in three important ways. First, we dismantled the large network of controls, licenses, and permits which dominated the Indian economy. Barriers to entry and growth were slowly relaxed and finally removed. Second, we redefined the role and the definition of the state in administration, in the management of the economy. While we fostered the expansion of the government in certain areas like social infrastructure. We contracted the role of the state in areas where we thought markets can function effectively or made to function effectively. Therefore, the third one was actually a very important one, and that is to give up the import substitution strategy of development. We decided to embrace the worldwide trade and be a competitor in the world system and be efficient in order to be able to compete in the world economy. In the case of the financial system, with respect to the financial system, as Lata mentioned a few things, the one important thing that we did, which is very critical for Reserve Bank of India, was also to eliminate the automatic monetization of the fiscal deficit. Many people will be surprised to know that we had a system operating at a time because of an agreement between RBI and the government, that whenever the cash balance of the government fell below a particular level, it was automatically raised to another level, to the required level, by the issue of ad hoc treasury bills. This essentially meant monetization of the fiscal deficit. We put an end to it. And we also did one thing, that is, we dismantled the administered structure of interest rate. Even government had to go to the market to raise funds in the market determined rate. That is very important. We talk today about the financial system, developments in various areas, what happens in the money market and so on. All that is possible only because we put an end to the way in which the government was raising interest rate earlier. So in the field of the foreign exchange market also, it was already mentioned that did away with Reserve Bank of India determining the exchange rate every morning. I must tell you, I did this job for 10 years as Deputy Governor every morning. I had a special phone at that time because people should not be interrupting me at that time and are calling me at that time and used up the phone. And that is what we did I did in 10 years. But I must also say that we were conscious of the fact that we need to do something which is what the market should be doing, and that is why I used to use the expression, we used to mimic the market when we were determining the exchange rate. But as Mr. Das was mentioning a little while ago, we made it clear at that time, while the market will determine the rates in the foreign exchange market, it does not mean that the RBI will not intervene. The whole question was only for what purpose the RBI will intervene, and we made it clear, and I think that has been practiced so well and so eloquently in the recent period of saying that it is really to maintain stability and reduce volatility in the foreign exchange market. We must also note that the rupee was made convertible on the current account during that period, and subsequently other measures were taken. And we made the banking system, or we tried to make the banking system more competitive. First of all, in the case of the public sector banks, we reduced the share of the government in these banks. Please remember, this is not such an easy thing. It may look like saying that from 100% you go down to 51%. It's not easy because there is a strong attachment among the politicians to the nationalization of the banks, and therefore not easy to get through it. But we did that. So in a sense, the prudential norms were introduced and all that. I want to mention one thing. that we anticipated liberalization. And in 1985, Governor Malhotra and I gave the freedom to the commercial banks to determine or fix the interest rate for deposits or for funds for less than 1 year. This could have been the beginning, but it was aborted. I must say, partly because of the lukewarm support of the government and the very inept way in which the commercial banks also acted. What they did was they made 8%, which was the ceiling that was put on all deposits from 15 days to everything, because some banks, which are not really very important, did that. But anyway, I say that we anticipated it and did this thing. Let me come to one point. The results of these actions are clearly seen. The growth rate since the liberalization movement and the continuation of the liberation movement. I do not say that everything did only in the first 5 years or 10 years. It has continued. And the growth rate has improved. And the poverty ratio has also come down. I think very substantially the poverty ratio has come down. Today we are able to think in terms of India becoming a developed country in 2047. Well, it's not going to be that easy. The journey is not going to be that easy. But we are talking about it because of the improvements that have already happened. It means, what is a developed country? A developed country is one which has a per capita income of $14,000. By 2047, the norm itself will become higher. 14,000 will not remain 14,000. But all calculations indicate that the required rate of growth in order to achieve that will be about 7% or more, depending upon what happens to the exchange rate and other things. But any improvement in the exchange rate, any improvement in the process is going to be tough for any growth rate higher than 6%. Up to 6% we can manage, but as I said, calculations indicate that it will be greater than 6%. And therefore, we need to have a strategy of development. Perhaps the seminars like this or the summits like this will provide that. But I don't know. I was asked to speak only 5 minutes or 8 minutes. Many questions were raised in the morning. I am sorry I cannot answer them. But I must say, there are theoretical issues that have come up. Mr. Piyush Goyal, Minister, said about stimulating demand. Yes, stimulating demand is important. But at the same time, please remember, in the 1950s, Arthur Lewis said, the core of development is how a nation, which is saving 5% of the GDP, saves 10% of the GDP or more, 50. Therefore, those who believe in the Herrera-Domar growth model, which says the trigger of growth is investment. Now, if investment has to increase, now it has to be financed, and therefore savings have to increase. Now, in the discussion on the performance of the economy, many people start talking about the demand is not increased. Now, when we say that consumption is not increasing, you are caught in a dilemma. On the one hand, we are saying that investment must increase. Then the investment increase must be supported by higher savings. But on the other hand, if you say that it is consumption increase is not there, and that is why the economy is not picking up, it raises a big fundamental issue regarding at what point in the development of the economy the demand factor begins to dominate over the other factor. I think not much discussion has happened on this, and I think we really need to analyze this particular problem. But I don't have that more time, and I will leave it here. But I would finally say, nonetheless, growth by itself is not adequate. I think the benefits of growth must reach out to all segments of the society. Growth and equity must be the two legs on which a nation must walk. If we ignore any one leg, then the nation or the country can only limp along. Growth and equity should not be posed as opposing considerations, but must weave together to produce an acceptable pattern of development. Therein comes economic wisdom or economic statesmanship. I would like to thank Mr. Das, Governor Das, being here and giving the award. He has done an exemplary job as the Governor of the Reserve Bank. And he has managed through a turbulent time, which demanded at one time an expansion, at another time a contraction. And the excellence in monetary policy lies not only in saying what is needed to be done, but also in timing. That is critical. When to expand, when to contract, and when to identify. And therefore, I am very happy that the award has been given to me by him. And I also want to congratulate CNBC-TV18 for the very fine work that they have done. As a channel, they have gained reputation for a clear presentation and a depth of analysis. And therefore, I congratulate them, and I am sure they will continue to be in the forefront as they move from the celebration of Silver Jubilee towards the Golden Jubilee. Thank you very much.
Thank you, sir, and thank you, Governor Das, for being with us. We had also citations for Dr. Bimal Jalan and Dr. Reddy. For paucity of time, we are not reading it here, but it will be available on CNBC TV18's digital media. I just want to play out to you the reaction or the acceptance statements from Dr. Bimal Jalan and Dr. Y.V. Reddy. I think you will just be listening to what Dr. Bimal Jalan had to say. A citation he got for ably leading the Indian economy through very challenging times.
Yeah, thank you so much to CNBC TV18 for this great honor, and really Lata and their team for coming over and this again. This event gives me an opportunity to reflect upon my career as a good policy maker of the government and the Reserve Bank of India. Two thoughts come to mind. One, that the aim must always be at a facilitator of public interest and not as controllers of public activity. The second is that policy decision often involve resolution of competing interests of different stakeholders. While dealing with such situations, we must prioritize the need of the common citizen, and among them come the poorest of the poor. In working with these objectives, I have been very fortunate to have outstanding colleagues and other stakeholders who have all contributed immensely to the work we are able to do. I would like to take this opportunity to acknowledge their contribution and express my gratitude. Thank you.
So Bimal's attitude has always been very positive for almost everything. And I remember in the Reserve Bank, he used to say to his people that whenever there's a request, see how you can say yes rather than no. And that, I think, is a great philosophy and a way of working that anyone can follow.
Now have Dr. Y.V. Reddy's reaction, the man who took us through the global financial crisis without any scratch on our banking system.
Thank you very much, Lata. Yes, I'm congratulating CNBC-TV18. In fact, I'm not only grateful to you for recognizing me by giving this award, but as much I learned from you people, particularly you on macroeconomics. I owe whatever I have in terms of achieved, in terms of important things in the policy, entirely because of political leadership. Second, I would say the collaborative, cooperation, coordination among the colleagues, professionals was important. We were recognizing the whole system. In my view, it's a real recognition to the public service rendered by many people of India. Increasingly, public service is becoming career rather than service. I feel that it's more important to recognize the result in public service. In addition to that, I would say the people of India, from whom I learned a lot. There's no way you can learn things which I learned from books, are only half, at best half. The other half came from people. Therefore, in a way, I would say this is a tribute to the people of India. With that, again, let me thank you very much. I dedicate this whole award to my family, particularly my daughter, Kavita, Aditya. My wife, of course, is here. Because the family bears the burden. In an increasingly materialistic society, when you live an honest living, family has to support. My family and friends have been of great support to me. I'm grateful to them. At the end, again, I thank you. And in particular, CNBC-TV18 and their management. Thank you.
With that, we conclude this tribute that we have paid to the Reserve Bank of India. It's back to Ritu and Shruti.
Thank you, Lata and Shireen, for taking us through that. And thank you to our governors, past and present, Governor Shaktikanta Das, Dr. Rangarajan. It's been our pleasure to have you here. And of course, we thank you for your vast contributions in, for the Indian economy, for navigating what has been really turbulent times.
Absolutely, Ritu. Moving ahead, let's continue our focus on what CNBC-TV18 is known for. The pulse of India's stock markets and the investment opportunities that make India a global financial hotspot.
Well, over the past decade, India has attracted approximately $667 billion in foreign direct investment, solidifying its position as a premier investment destination with substantial growth potential.
Well, the strength of India's markets is a testament to this appeal. With a growing focus on digital transformation, increasing capital flows, and a favorable regulatory environment, India's markets are set to offer investors diverse opportunities across sectors, from technology and manufacturing to infrastructure and consumer goods.
So in this next session, Investing in India's Today and Tomorrow, we will delve into the evolving landscape of India's markets, exploring both opportunities and challenges that lie ahead for investors.
That's right, Ritu, and leading the discussion is Prashant Nair, a name synonymous with CNBC-TV18's market coverage. In the world of markets, the day truly begins with him. He's joined by industry veterans, Ramesh Damani, owner of Ramesh Damani Finance, Manish Chokhani, director at Enam Holdings, Ramdev Agarwal, Chairman and Co-founder of Motilal Oswal Financial Services, and Ashish Kumar Chauhan, CEO of National Stock Exchange.
Well, I'll invite the veterans of the market to take the stage for what is surely going to be a dynamic discussion on India's market potential and investment future. With that, it's over to you, Prashant.
Thank you very much, guys. Good morning, good afternoon actually now, and a warm welcome to our special session as we celebrate CNBC-TV18's 25th anniversary, a quarter of a century of capturing the pulse of markets, stories of resilience and success, and the voices that shape the financial landscape. And actually, 4 of them are right here with me. 1999, the first time CNBC-TV18 hit the airwaves, the mahal of the market was thick with the promise of the new millennium. Y2K fears were testing nerves, and the optimism about a tech-driven future that seemed just within reach. It was the dawn of India's emergence as a global IT powerhouse, a story mirrored in the corridors of bustling brokerage firms and whispered over cups of chai. Now, to jog everyone's memory, 99 was also the year that the Kargil war was imposed on us, and of course our brave hearts fought and won it. Coming over to Mumbai and Bollywood, the nation was dancing to the tunes of Karan Johar's Koi Mil Gaya from Kuch Kuch Hota Hai. And by the way, Karan is going to be here later as well. Investors, though, were humming the same tune, but for tech stocks, IT stocks. HCL Tech had just launched its IPO. Infosys was the undisputed Badshah of the bazaar, and the Sensex had just hit 5,000 for the first time. By the way, over across the oceans, Nvidia had just made its debut on Wall Street. So as we raise a toast to 25 years of CNBC-TV18, let's take a moment to appreciate the journey, the bull runs, the bear claws, and everything in between. Welcome to this session with 4 legends of the market who are with us from the very beginning and need absolutely no introduction. Gentlemen, thank you very much, all of you. I want to start by asking Rameshji, if you want to start, what do you remember of 1999?
Thanks, Prashant. Thank you first for having me here. It's been an exhilarating 25 years. I mean, it's bookended by, as you said, the Y2K problem in 99 and the pandemic a few years ago. But it's been an exhilarating journey for all of us as investors, and to see it was very interesting, not only from markets, politics, and business point of view. From markets, the Sensex, as you pointed out, was 5,000. It's closer to 80,000. But what people may not know, the Dow at that time was 11,000. So we were half the Dow level. Now we're almost double the Dow level. We're at 80,000 in the Dow at 45,000. So that's been extraordinary. Of course, in rupee terms, it's cheating a little bit, but that's what it is. In terms of markets, as you said correctly, Infosys got listed, and also Nvidia got listed, as you said. And one other company that became a tech giant got listed in 95, which is Alibaba by Jack Ma. That got listed in 99. And in terms of politics, what I find interesting, of course, October 12th, General Pervez Musharraf came to power in a coup in Pakistan. October 13th, Bajpayee ji was sworn in as for the 3rd time as Prime Minister of India. So exhilarating year, and exhilarating 25 years, Prashant.
Oh, lovely, absolutely. Ramdev ji, were you humming Koi Mil Gaya or were you watching Infosys?
No, I think we have been the biggest beneficiary of birth of CNBC-TV18, personally as well as the firm. And the spread of equity culture and common man really embracing the CNBC and the markets. And now, finally, it is happening. I mean, what seeds have been shown is from 99, finally from 2020, the demat explosion which is happening. I think the role you all have played is immense. So I'm sure this is just about the start of the journey of yet another, what Dr. Rangarajan said about deregulation of Indian economy, dismantle everything, dollar, rupee, interest rates, everything. I think that moment is here in Indian equities, starting from 2020-21. And let's see how, when there will be some ceremony, 25 years henceforth, and then they'll remember what Indian equities have done in next 25 years.
I mean, you've been a sort of absolute bull, and you've kept the faith, Ramdev ji, and you've made the money. You just mentioned 25 years from here. You want to Right at the beginning, you want to tell us where we will be? Index levels, 25?
2 raised to power 5. So I think, you see that I've been in the market for 45 years, and I have seen Sensex at 100, which is at about 80,000 plus. So that has given about 15% compound. There is no reason now forex balance and the kind of goal clarity we have. We want to be Viksit Bharat by 47 and all. So those kind of things, they are even more encouraging. But I would not take the compounding to be even a bit higher than 15%. So every 5 years you'll double, and 2 raised to power 5 in next 25 years. Actually, when you talk about 25 years, you don't believe where it will reach, but we'll reach there.
That's very well put, Manish. What do you remember? 99.
They said it well. Actually, it's hard to imagine. India's total market capitalization was below $200 billion, which is not even equal to what TCS or Reliance alone have today. And that's been the journey, that 25 times the market cap has gone up from 200 billion to north of 5 trillion. And I agree with him entirely that next 20 years, if you don't do 16 times more from here, I'm working on the basis that I'll be older and grayer, although I'm 10 years younger, I must confess. So I'm the baby on the panel. But I think in the next 20 years, if we don't do 10 to 15 times even from here, I'll be surprised. And we are on a takeoff trajectory. But I remember 1999 for the heroic valor of the Indian Army in the Kargil War. And the phrase which had got all of us youngsters back then was, "Ye dil mange more," from Bikram Batra when he took Tiger Top. So salute to the Army for keeping us the way we are.
Absolutely. And very well put, Manish. Ramesh, you want to add something?
No, I mean, it's a salute, and it's been an exhilarating journey that I find it astonishing. But one thing that I would probably disagree with Manish is that we can't extrapolate what happened in the last 30 years to the next 30. Otherwise, China would have been soaring in the clouds right now. It doesn't typically happen. And I do feel, for whatever it's worth, I think India will do fine, and it's a risk not to be invested. But I do feel that on November 5th, 2024, what happened in America changed the world. I think we'll understand the implications of that in a few years from now. When I was a young man in 1989 and the Berlin Wall fell, I knew something had changed in the world. I couldn't figure out what it was. But it was a triumph of capitalism over communism. That became more apparent as the years rolled by. So I think in the next 25 years, America is such an important world player, 30% of the global economy, 60% of the market cap of the world, that what happens in America influences the rest of the world. And unfortunately, I think America started looking backwards, looking inwards. I think we did a word cloud 25 years from now or 10 years from now. I think one word that will come up very frequently is a word called mercantilism. A change in the free trade, UN, and NATO. The world grew on the back of America. May not happen in the next 5-10 years. So the world will definitely look different. I would not be one to extrapolate straight into the future, but there'll be lots of opportunities to make money.
And I want to pick on those points in just a bit, Rameshji, because that is also something we want to address, because markets have been going through a bit of a tough phase. But let's welcome in Ashish Bhai as well. You know, I can say with some confidence that the three of you here and many in the audience are shareholders of National Stock Exchange. For those who don't know, NSE is now valued at $60 billion. It's, if it were listed today, it would be in the top 10 in terms of market capitalization. But Ashish Bhai, let's start at 99. I mean, you're also someone who actually, I can say, built the markets, the market infrastructure. You were at the NSE in 99. What do you remember of that year?
Thank you, and thank you for calling me. I think in some ways, the infrastructure of the capital markets, those days, it was a satta bazaar, right? All of us are wearing, at least they are wearing suits and coats. I am still on the older style. But those days, it was considered, basically nobody trusted that $200 billion was probably 30% of banking system. 30%, the capital markets were very small and considered a kind of a sort of avoidable activity. Today, it is almost 20%, 2.5, or a few days back it was 2.5 times. Now, probably it's 220% of the entire banking system. That is the change. And the back end that NSE came about, first year it became larger than any exchange in India, but it also started clearing corporation. It started depositories. They were all building blocks of creating a framework, and then we were also working on setting up derivatives. So 1999, Vajpayee government came, and one of the first things I was told was that we required a change in the Securities Contract Regulation Act if we need to set up a derivatives market. And so we started working on that, although we were working on derivatives from 1995. At the last moment, it came saying, if you don't do this, this will not work. And so, of course, it went to the parliament, got cleared, and that's where the derivatives actually came about in 2000. I think June 12 is when NSE started.
You fought for derivatives back then, and now you're fighting for them again.
And
it's come
I think
full circle.
one of the first panels, I recall CNBC office just behind TV towers in Worli in Mumbai. It was like a industrial place, and it was with M.G. Damani, who used to be the ex-president of Bombay Stock Exchange. I was like 27, 20-year-old, and he was the doyen. And he was opposing derivatives, and I was saying the derivatives are going to change things. Although the Nicholson part in 95 had actually brought down, and it had got bad reputation, but I'd say things are going to change, and there were, of course, worries about overtrading those days also. So some of those same debates keep on coming, but what India has done over the last 25 years has been phenomenal.
But do you think we've taken a hard turn on derivatives here, or we can't say that as of now?
See, it's the overtrading issues will come up because the technology is changed. It's like travel. People used to travel by walking, and then it became bullock cart. It became several times faster. And then people were saying, why should people be traveling so much without sort of achieving anything? And then it became car. And you might have seen Naya Daur, right? If you have not seen, you should see that movie called Naya Daur. It is basically saying that old systems will have to change, although on a particular day, old systems may win. But the new technologies will, and then of course, railways and...
Right. So the answer is, it's here to stay. It is here to stay.
And for me, as far as the society is able to manage the risk, we should be able to continue providing facilities for people to manage risks and stuff like that.
Absolutely. I want to, all of you are, we invite you for wisdom, to learn from all of you in terms of what, the lessons are for, and so many new investors have come into the market over the last 4 years specifically. 10.5 crore investors in this market now. Rameshji, before I get to here and now and what from here, just 2 or 3 most important lessons that new investors should remember.
Sure. I think 30 years in the market, Prashant, have taught me 2 things. One, remain broadly invested in the market. You can't time the market. It'll go up and down and you'll be happy, and then you'll suddenly miss the great rally. A lot of the gains come in a very scattered amount of time. So broadly remain invested in high quality businesses, if you will. The second, of course, I think which all 3 will agree is the magic of compounding that takes place. I think you should never let that be interrupted. It's like you're rolling a ball of snow, as Buffett said, down a hill. So you want to make sure that the hill is very long, which means either you're very young or you live very old. And that's what's magical. I think compounding can take, in one generation, from poverty to wealth, if it's done properly. So I think the enduring lesson that I want to give to a younger audience or to a young India is understand how compounding work. It's actually the 8th wonder of the world.
Ramdevji, just 2 or 3 top lessons for investors, what you've learned really and imbibed.
I mean, for the guys who can afford, they should buy only equities out of their savings, should be fully invested. Don't time the market, what Ramesh said. It works brilliant. I mean, I've seen 45 years. It goes very smooth. Some days are painful, but that's the price you pay for 15% portfolio yield. So that's been the message. And there are only 2 markets in the world which are compounded, America and India. And we are lucky to be in India, I'm telling you. Because in China, which is as big a market, a much bigger market, you have, like, in 2020, CSI 300 was about 2,000, and in 25 years, they are struggling at 4,000. We were at that time 1,000 Nifty. Today we are at 24, 25,000. So that smoothness of the market is extremely important. That slope is very, very important, and that's the achievement of Indian way of working, entrepreneurship, the political management, the bankers' freedom to determine interest rates and those kind of things. And ever-building institution. You look at, I don't think there is anything like NSE in the whole world. I mean, you clear $7, $8, $9 trillion, and they can do still 5, 10x of that without any problem. So this country has that capability to create, and this technology, the digital technology, is so exponential. I think we have to be optimist. First thing is you have to be optimist to come in the market and stay invested and wait for your compounding to happen, because patience is going to be the most important thing.
Time in the market, basically.
Time in the market, but patience. While you are in the market, you should bring the patience when the things are bad. Like when the markets are roaring, everybody's in the market. But when times are bad, actually markets are falling. That time you should have the patience and stay invested.
I'm going to ask you whether this is one of those times in just a bit, but Manish, tell us, your 2 or 3.
Yeah, continuation of the same. So number one is the price that you pay is the only thing you control as an investor. So when there are times like what we're going through now, is not the time to lose the faith, but to actually double down. So enter at good prices. The soil in India is fertile for entrepreneurs and business. So stay the long haul, because you will compound a lot of money. And 3, back the right leadership. You can be in the best business with the wrong jockey on the horse, as you call it. But if you find the right jockey, he's going to make even a stupid horse run well. So back the right people, the right business, think long-term, be long-term greedy. But remember, price is the only thing in your hand. So be very, very strict on that.
I think all of you have backed the jockey sitting to your left. Ashish bhai.
Come on, Ashish.
So when are we going to see, how close are we to a listing at the NSE?
We do list companies every day.
It's a nice one.
And this year itself, we have listed 150 companies. 50 in the main board, 100 in the SME. This financial year, that is from April 1 onward. So effectively, keep on listing. But if you are referring to NSE's listing, we don't have visibility.
But are we closer than we were last year?
I mean, every step looks closer, but ultimately...
Manzil dur nahi hai. It's
At the same time, one has to be patient, as they say, because in our case, we wear many hats, especially as regulators, and we need to be very careful on many, many things. At the same time, providing a well-functioning, fair, efficient, transparent, extreme low-cost, very orderly markets are the main priority.
Ashish bhai is using everything you said to avoid answering the question. Okay, let's talk about here and now. Ramesh, you said Trump and him sweeping America is like one of those pivotal moments, implications we will know later. I get the sense that that has kind of tempered your expectations of how well we'll be able to do. So first address, what are we going through now? Is this just a pullback in a broad uptrend? And to your mind, what does the election in the US really portend for markets like India, countries like India?
Well, it's more for the world, Prashant, because the US has moral leadership in the world. You know, it's the preeminent power in the world. I believe in American exceptionalism. What has happened for the first time in 75 years, I don't think people have understood that, is that first time a US president has unchecked power. He has the House, the Senate, the White House, the Supreme Court, the popular vote. If any Republican opposes him, he will use his base against them, so they will not be elected. The Democrats are in a state of shock. They cannot do anything because they tried impeaching, prosecuting, criminal trials. Nothing has worked against him. And now the worst fears of the America First MAGA movement can now be seen being implemented. So I'm really afraid that they might say, we'll put tariffs on there, which are economically suicidal to do. We'll stop immigration. America was built on immigration. So that impacts the world. Imagine after World War II, America rebuilt Germany and Japan. They've beaten them to the pulp, and still they use Marshall Plan to beat them. Can you imagine that happening in India, in America today? I don't think they'll help Ukraine out, or they'll help Russia out, or whatever. So I think the world has changed out there. India is lucky that we have a strong domestic economy and inward-facing economy anyway, so we'll be fine in the scheme of things to come. But I think the world perhaps may look a bit different. I think just after it looked different after the Berlin Wall fell, and we had 35 years of peace, prosperity, unparalleled global wealth, I'm not sure the next 35 years will be as easy for the world as the last 35 were.
In terms of market returns as well, maybe?
In terms of market returns, in terms of which economies do well, because what was the basic model? Singapore, Taiwan, Korea, export to the US. The US had big enough shoulders that they could carry everyone along with them, and they carried everyone along with them. But now you have a US president that doesn't want to do the basic magic that worked for the last 35 years. So I would watch Washington very closely.
No, that's very well put. Ramdeji, what is your sense? Here and now, markets, are we in a bit of a pullback in a broad uptrend? And to what Rameshji said, which is American exceptionalism. So money goes home, which is the US dollar, which is US assets. What does it mean for returns here?
So coming back to Indian markets, because I don't know so much about American history, and Ramesh has lived there and he watches them very closely. But coming here, I think the corporate closer home, in the current scenario, our multiple expansion is at a full level. So there is no scope for the multiple. So earnings must come, and earnings are actually going down. So there's a clear challenge in the earnings not coming through. And so when does it work? Like Dr. Naranajan was saying, the demand, at the end of the speech he said, demand has to be looked into and it should be discussed. So I think what all macro managers they will do as we go forward.
Do you think we're at that point where we need some help, fiscal or monetary?
Of course, but I don't have any prescription or anything like that. It will come. It will come because they want that 7-8% growth. It will come. Right policy decisions will be taken at the right time. So we have to have a little more patience. Maybe the earnings growth may take another 6 months. Next year could be roaring one. So, but it will come. That much I know. If the economy grows at 7-7.5%, we'll get our 12, 13, 14% earnings growth. That should come through. But right now, this is a time to have patience and wait for the markets because the foreigners are losing patience. And they are selling out. Little they are realizing that they can get out, but they cannot get in. So they are in a situation where, of course, they have luxury to go to Korea, China, wherever. But once they get out from India, they cannot get in. The price to pay for entry again, think about it. What they sold at 1.5 lakh in last 1 month. If they want to buy back 1.5 lakh, I think the index will be 30,000.
Manish, come in. Where are we now and where do we go from here? Are we in a bit of a downturn for a while, time correction? What's your sense?
Yeah, so we've all been, I think, on the same page that we'd had this bubble in mid and small caps particularly. And it's good that the market actually is cooled off and goes a bit sideways and allows earnings to catch up. And like they rightly said, eventually, you know, with the man and the dog example, you follow the man, not the dog. And the dog was going all over the place. But the man really here is the earnings. And earnings is what will determine where we go. And I've always said, you make money bottom up. So all the macro may do whatever. Like, for example, Uday's here, his bank wasn't even born in 1999. And see the kind of wealth creation. You could have made all the macro stories about Kargil war and sanctions on India and banking sector in trouble and so on. And you see the wealth creation. And I think this era of where the youngsters are now building what I call the next phase of India, which will be technology should be ours, the product should be ours, the brand should be ours. Historically, we've been processors. And the new India which is getting built is taking over all of these. And that's really the next leg of wealth creation. So irrespective, I think, of what the macro does, we will find enough opportunities to make money. You lose money top down. Like he said, the world is in trouble and people come and sell. But in that rubble is when you find things that you can pick up. While we were sitting here, I must say, my son is in the audience and he was texting me on a couple of stocks which have come to interesting prices. And like, hold on, let me finish and we'll go back.
No, absolutely. Are we, just very quickly, one line answers. Rameshji, are we in a bit of a time correction next 6 months?
Yeah, I think we're in time
Sideways.
correction, but that's fine. I mean, you know, the market has had one of the heady runs, so if it corrects till 1 quarter, 2 quarters, I'm perfectly fine with that.
Ramdev?
I have no idea what is, market always surprises me. So, but then I think we are fine in that
But
patient
you are
mode.
a little circumspect right now where we are, earning-wise, liquidity.
Yeah, what drives me is the earnings. If I don't see earnings coming through, my research department not saying that next year we are going to grow at 12%, 15%, I am not confident. I feel a little uncomfortable.
See, I'll give you a contra view. Of course, earnings are not there and therefore these prices, so you can't double count. But also put in context what he said, US is 66% of global market cap. And it's what, 25% of GDP. It can't be 2.5 times of market cap, which is why Warren Buffett has sold. But India is 4% of world market cap. And you know the next 20 years, this GDP will compound. We can debate whether it is 6%, 7%, 8%, 9%. Which other country in the world are you going to say that for? And our currency, again, my favorite topic, is underpriced. So whenever this happens, in the next 5 years, you're going to see a stronger currency. Indians will be allowed to also invest overseas. And this 4% market cap to the world has to go up.
Yeah.
If you're sitting with that macro, and this wall of foreign money has to inevitably end. We will end up in global indices. The amount of money to come in here is staggering. We are scared at 10 billion going out a month. I think there is a period when you'll see 10 billion a month coming in. Then what happens is what Ramdev has really been saying.
Okay, I know broadly, but I want to ask you this. One bet, could be theme, could be sector, which one should, as they say, you should fish where the fish are. Rameshji, what's your sense?
Yeah, thanks, Prashant. I think the one thing I've heard, I've been to conferences, and what Ashishji said, what happened to the NSE is because it was digitized. I think it's incredible the power of digitization, what changes is there. I think the number of transactions that we're handling, whether it's in payments, we're handling, I think, 150 billion payment transactions a year now in a country of 1.5 billion people, headed to 500 billion. So I think, and part of the growth of a country is always infrastructure. So look at what I call the digital public infrastructure space. I think that will be ripe for picking. Those are priced not necessarily according to the opportunity available, but according to some measure of earnings. So I think the opportunity is very great for the digital payment infrastructure companies over the next few years. So if you ask me, buy one stock and don't come back for 5-10 years, I'd buy it in that space.
Digital public infrastructure.
Yeah.
Ramdevji?
I think I'll stick to my very close home, capital market, intermediaries, all kinds of things. Because this boom from 40 million demat accounts to 400 million demat accounts.
Ashish bhai is smiling there.
Yeah, so that, and I know he has to be smiling. So I think this is the biggest boom, biggest, expansion I've seen in the markets. And thanks to digital technology, the expansion is not linear. So it's a non-linear kind of opportunity. And this will give birth to some very big firms. I mean, you have to be good in picking up which one is going to be the next Goldman Sachs or Merrill Lynch or Morgan Stanley.
Or Kotak. I'll just expand. I love financials, of which capital markets is one, and from exchanges to mutual funds to brokers to, But just again for context, when I started doing brokerage in the 1990s, the largest fund in the world we used to service was Capital International. They were $90 billion. Today they are north of $3 trillion. Do you know the number for HDFC Mutual Fund today is $90 billion? It was an unimaginable number for Indians then. Can you see this becoming $3 trillion? Can you see the banking sector becoming far larger? Like, will we be only $2 or $3 trillion of banking deposits and assets under management? This space, financials, if you are not invested, please go and make an investment over there.
No, absolutely. And Ashishji, all of them are going to look to you.
So let me give you an anecdote which has nothing to do with their looking up to me. But NSE started, we created NSE in 92, set up in 92, started operations in 94 with 25 crore rupees of capital. We never raised further 1 rupee. Today, as you said, it's 5 lakh crore, 20,000 times or more. And that is way beyond, and it's a professionally run company, not individuals. Neither any CEO would have got anything out of it. They were getting IDBI salaries. Today, they're getting slightly higher, but almost similar. But still, that framework which the new technology brings, and the scale that it brings, any type of new technology, not only financials, but it will be any type of conceptual technologies, whether artificial intelligence or biotechnology, where capital invested is very little, but outcomes can be non-linear. For me, that is the future of the world. And those days, India was not considered even in the stadium when that technology race was run. Today, in last 25 years, India has come at the forefront. When the next race is run, India is going to win that on the back of its young population, the technology adoption it has done. And that's why, for me, you look at 25, 30, 50 years, this is the place to be in.
And NSE is right at the forefront. It's been an incredible store of value, those who've kind of gotten in, and I think the gentlemen here know that perfectly well. It's a pleasure. Thank you very much, all of you, for being with us here. It's an enlightening discussion, always this wonderful, insightful, electric. Thank you very much. Here's to the next 25. Thank you.
Thank you, Prashant. Next 25.
Architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
much of their time with us. And of course, we now are joined by a legendary veteran business and of course business leader and of course investor as well, who spent a lot of time with us on CNBC-TV18. Mr. Kotak, it's an absolute pleasure. Thanks so much for joining us here this evening. I'd also like to take a moment to welcome to the Global Leadership Summit Rekha Jhunjhunwala, representing Rakesh Jhunjhunwala. Ladies and gentlemen, he has spent so much time on CNBC-TV18 and it's wonderful to have Rekha Jhunjhunwala here with us. Thank you very much for being with us. Mr. Kotak, we're going to talk about the 5 transformative ideas for India. But in a minute, I want to talk about the big transformative idea that's quite literally shaking up the world. Donald Trump and the impact and implications, according to you.
I think pretty transformative, Donald Trump, and has changed the perspective of how we're going to run the world as we go forward, or how he is going to run the world as we go forward. And as was mentioned, 66% of global market cap is US. We just got to make sure that America does not make the rest of the world irrelevant. And that's one of the challenges we must all live up to. Therefore, however small our market share, we need to grow it much faster than what we have in the past. And Shireen, as you think about transformation, I think if you look at America's power, it is essentially 3 things. One is military, second is finance, and third is creativity. And if you look at these 3 important things, which gives the Trump power to the United States, let's ask ourselves each a question about how India has got to transform for the future. So I'm literally taking on from where you have said. So let's look at military power.
Okay.
It's the most powerful defense power in the world, which is United States. And if you look at India on a relative basis, if India has to transform, our percentage of spending on defense as a percentage of our GDP is not growing. Therefore, the world, which is so complex, you just look at the Middle East, a small little country like Israel commands disproportionate power because of its ability to manage defense. And I'm not going into the subjectivity of it, but you're getting into a world where power is power. And raw power will matter. If India has to become a global power of a scale and size which we aspire for, India needs to disproportionately get stronger on its defense from where it is. And that is going to be the source of our power. Therefore, military power and defense power is the starting point of being a powerful nation.
Okay, let me push back a little bit on that, because given the fiscal constraints that we do have to contend with, and also the many priorities that we have to factor in, for instance, we still spend much lower than what is required as far as the health budget is concerned. Here you are saying that India needs to disproportionately spend on its defense budget. So in that context, Mr. Kotak, the choices that the government will need to prioritize, you believe defense over health?
I think those trade-offs have to be taken. But if India wants to be the top 3 nation in the world, it's US, China. And after that, if India wants to be there and to be counted on stage, we will have to find innovation. You're talking about transformative ideas. Moment you bring about balancing and trying to equate things, you don't get to the power situation. And going back to Trump, he is thinking out of the box. We may agree or disagree, but he's changing the rules of the game. So what are we going to do from saying that we believe a strong India from a defense point of view is important, to saying we will walk the talk? For the first step in becoming a power and a transformative step is India must be counted on the global stage in defense.
And do you see the role of private capital as well as the private sector there?
Of course. And this is a new world. You can see the conflicts around. You can look at China building it. You've seen Israel building it. You see US. Europe. Look at the Russian power. Finally, Europe is worried. It has underspent on defense crazily. It has been mercantilist. And time has come for Europe. If Trump withdraws from NATO or says, I'm not spending the money, Europe will have to produce it or run the risk of a new European order with Putin calling the shots. We have no choice but to dramatically and transformatively get much more powerful on the military side.
Okay, let's talk about the second priority, and which is to transform ourselves into a financial powerhouse. Now, the road ahead, the prescription, in order for us to do that, what do we prioritize?
See, you become a financial powerhouse if you have one of the two important things. One, you're a reserve currency. Or you have genuine current account surpluses.
Okay.
The US can afford to have a very large current account deficit in the world because it is a reserve currency. And I don't think we can expect to get to a reserve currency status overnight. Therefore, to start with, if you look at, say, go back to 1995, when FII or FPI in India was zero. From 95 to today, which is about 30 years, we have effectively had a situation of current account deficits for almost all the 30 years. And today, I'm really delighted that FPIs have shown so much confidence over 30 years in India. FPI stock at today's market price is $900 billion. Our total foreign exchange reserves, and I'm not saying all the money goes away, please don't misunderstand, is 680. Therefore, India has run current account deficits all 30 years. And the question we have to ask is, how do you get to a situation where for an operating P&L, you make more money than you spend? Your exports of goods and services at some point of time has to be competitive enough to be more than the imports. And we've had a very benign oil situation for the last 10 years. Therefore, if India has to be a great power transformatively, we will first need to move to being self-sufficient on current account. And then aspire for a reserve currency, after which you have the freedom to do what you want.
We'll talk about that freedom in a bit. But, since we are talking about currencies, I also want to understand from you what you make of the current strength as far as the dollar is concerned and the implications of that. You also talked about FPI flows. The previous panel was also talking about the fact that we've now started to see FPIs move money out with the US doing the way that it is and the promise of Trump. What do you expect on that front?
No, I think the two important factors are happening. You're seeing a stronger dollar and higher bond rates in the US. And the question to the world, is, how are we going to take a position where despite one of the largest fiscal deficits, despite a huge current account deficit, the US dollar continues to command trust. And that is where the military power, the creativity and the technology power is enabling the US to get away with disproportionate financial power. And frankly, Shireen, it all doesn't add up. A stronger dollar, but a sharp rise in the valuation of crypto. Something has to give. Everything doesn't add up.
What is going to give? Or what is likely to give? What's your best guess?
I'm not a big fan of crypto. Okay, so I'm not really very excited about crypto because it's not...
With Bitcoin at $90,000.
Yeah, so I'm not a believer in that, but right now it seems to be one of the most interesting assets in the world, which we don't seem to understand. So we have to respect that. But I think the world is finally respecting power. And power is showing in the US dollar. However, his policies are going to be very inflationary. You cut taxes, you have tariffs on imports, it is bound to lead to higher inflation, and therefore the bond yields are higher. Therefore, we have to be ready for that. And frankly, if US interest rates and the bond yields are high, it gives very limited opportunity for the rest of the world to go dramatically lower on their bond yields.
And so what does that mean in terms of foreign fund flows?
If $10 billion creates such a big discussion going out in the month of October, I think we have got to be finding a way to say that, can 10% move from a $900 billion? Does India have the absorptive capacity to take a $90 billion out?
Does it?
I think the experts are there. They've given a very encouraging picture. I hope the Indian market is resilient enough. We have $90 billion in our foreign exchange reserves. That's not a problem. But long term, we have to be on trade account, we have to get much more competitive. I think Dr. Rangarajan mentioned about it.
Yeah.
We have to be competitive. And this is where, how are you going to compete with a very competitive trade account with a worldwide move towards protectionism? And America can afford to do it. Can India be protective on the trade account and not be competitive?
So do you believe that we need to be far more liberal on that? And do you think that there has, in fact, been a reversal as far as being more protectionist on the trade account? And you believe that we now need to be much more liberal?
See, the fact that we have a domestic market and a protection for domestic producers is a very dangerous thing long-term for competitiveness. I would love to see Indian businesses competitive in free and fair trade. If there is free and fair trade, we should move in the direction of open trade rather than protecting domestic business because we've got a domestic protected market. You cannot live on being protected forever. And we have reached a stage where we say we are now the 5th largest economy. In absolute terms, we see us going to being the 3rd largest economy. Why are we scared of more open borders on trade?
But isn't that a question that Indian business needs to answer as well, not just the government?
So CNBC-TV18 should ask Indian business.
We're doing just that. But let's talk about the next transformative idea, Mr. Kotak, and that links back to the thesis that you've just presented. And that is taking more share of global trade, creating more global brands, taking brand India and brand business global. Why do you believe we're faltering on that front?
I see a lot of global companies having their brands in India. I would love to see more Indian brands globally. If you look at, let's start with United States. Apple, a Google, a Facebook, a Coke, a Pepsi, a P&G, they are global brands. If you look at Europe, I have to start with Unilever, of course. Look at their brands. Look at German cars. Look at the French.
The Chinese.
The consumer. I'm coming to that. Look at the Koreans. Samsung, Hyundai. The Chinese, Lenovo, TikTok. BYD. I would love to see few Indian companies saying that I'm not just going to live in my little wonderful India. I have brands which can compete anywhere on planet Earth. Who is doing that?
Are you going to do that at Kotak?
You know, we are in a business which is becoming globally more local. And you can see that. But there are so many businesses here which must have the courage to go out and say that we will have our brand, consumer brand, globally. And frankly, on that, India is a long way away.
Well, again, coming back to the point about taking brand India global, taking more Indian brands global as well, it of course comes back to competitiveness, but it also comes back to what you spoke about, creativity, intellectual property.
Yeah. India has done a phenomenal job in building up the software services industry. And India has a deep service culture. But it also has a culture which I would call as a little bit of a trader mindset. Indian entrepreneurs are very smart. They see an opportunity, they will take the arbitrage opportunity immediately. But longer term and strategically, while we have done very well on that, on the arbitrage, we should be doing a lot more on product and creativity.
So how do we move from
Indian engineers create all the software services, but the Microsofts and others of the world own the product. What are we doing to be a product country? What are we doing to be that creative front-end country rather than being the service to the rest of the world?
So how do we move from being an arbitrage economy to a product economy?
I think time has come. Indian markets should be looking at longer term. These companies take longer term, like Amazon made losses for 20 years, but markets still paid value for that. Indian markets need to recognize the future is ability of a brand to become global, ability of service companies to become world-class product companies, ability of India to be a significant power in defense, moving to current account surpluses to truly make India a world-class developed country. And we have some way to go.
Well, you know, you're talking about creativity, intellectual property. Let's also talk about the trend that we are seeing of new age tech companies, largely tech companies, consumer product companies that have started in India in the last 10, 15 years. Some of them now making it to the Lal Street as well. We just saw the listing for Swiggy, and he, of course, will be here with us. Sriharsha Majeti will be with us in shortly. What do you make of this trend of valuation moving to actual wealth creation?
I think it's a very good sign, and let's talk about quick commerce for a minute. I don't think anybody asked Piyush Goyal any questions on that because it does have challenges with reference to the local retailer, and I think that's a challenge which at some point of time will come to the political front. But if you look at quick service retail, India is a unique country where it is working. Most countries in the world, it has not worked. So that's where Indian innovation has made it work. It's a very good sign. It's positive that we can do things which the rest of the world has not succeeded in. And from that point of view, some of this value creation in India is real and sustainable.
So do you believe that we will continue to see the kind of momentum we've seen on the IPO front in 2025?
I think my view is when we were, say, if we were talking about this 6 months ago, we would have said, oh, markets are very highly valued. We need a lot more supply of paper. When we get a lot more supply of paper, we are saying, will this IPO front continue? I think these are cycles. We have to respect markets. You want demand and supply to determine, of quality paper, of course, to determine how valuations happen and how the marketplace develops. But the market is getting larger. You're getting more and more supply, more and more demand. That's the way to go for the future. But we have to be ready for a global shock. A $900 billion stock of FPI is not a small number. And we have to be ready to be able to absorb that if that moves. And the supply of paper has to be commensurate with the supply of money.
You're saying the probability of that kind of an exit is a real one today?
No, I don't think $900 billion
No, obviously not 900 billion, but a significant part.
But can a few $1 billion go? Can 5-10% go? We should be ready for it.
Well, that's the cautionary note there from Uday.
But I just also wanted to add one point, which I think is very important and something I've really cared about. If there's one thing for India to transform into the future, India needs to improve ROTI, R-O-T-I, return on time invested.
That I think is an important metric that we need to focus on. Yeah.
Because when we look at execution of projects in our country, anywhere, I'm not talking private sector, public sector, wherever it is, chalta hai. ठीक है, approvals have taken us 6 more months. I've got labor shortage. I don't have this machine imported. The concept of time and importance of return on time invested. Therefore, India has only 23 years to go. And if you want to be a developed country with $15,000 plus per capita, this kind of roti is a tough one. Okay? We have to move from parathas and everything else, kulchas, to getting really thin, good rotis which give us quick results.
Thin, quick rotis will give us results. Ladies and gentlemen, Uday Kotak, thank you very, very much for joining us this afternoon with 5x25, your 5 transformative ideas for India to focus on. Thank you very, very much, Mr. Kotak, for joining us today. before we head out to lunch, but it's been an absolute pleasure to have the three of you joining us here today. Before I get into the wallet wars, big congratulations to Peter Elbers and Indigo. They've started flying business this morning. Today's your first flight, Peter?
Today morning itself, yeah. We started today after 18 years. Indigo is moving into a new space. And today we started the business class flights between Delhi and Mumbai. We're very excited, obviously.
I would imagine. So that brings me to my very first question. Let me start by asking you, obviously the decision after 18 years for Indigo to bring in a business class, which is something that you absolutely said no to as long as you've existed. That tells you about A, the change in consumption, the change in customer preferences, and of course, the vacuum in the Indian aviation market as well. So using that as the peg, lay out for me, Peter, the consumption thesis that you're betting on.
Well, thank you, Shireen. You're absolutely touching upon all these points which are really there. I mean, Indigo moved in a time span of just 18 years from its inception to 100 million customers a year. But in these 18 years, India has changed enormously, and India will continue to change. And listening to some of the previous speakers, I think that's all out there. And today we fly 20 a day, or actually 40 sectors a day between Delhi and Mumbai, over 30 a day between Delhi and Bangalore. That changing India, and that entrepreneurial India, and that aspirational India, really, I think deserves a product and is waiting for a product which is cost competitive, but yet serving the aspirational needs. So the timing is actually right now and right here.
Well, speaking of the timing being right now and right here, I want to take a leaf out of what Mr. Kotak said, taking Indian brands global. And Indigo is attempting to do that. You're, of course, flying international, and you hope to fly more and more international. And I know the aspiration is to take Indigo as a local Indian brand and make it a global aviation player.
Yeah, with a lot of pleasure. I've been just listening to Mr. Kotak here, and I think all the points he was making are absolutely very valid for aviation. I mean, Indigo is the 7th largest airline in the world when it comes to daily departures. India is not the 7th largest airline in the world when it comes to brand awareness or when it comes to global presence. So our Indian bases and foundations really are a great foundation to move more international. And I guess for way too long, Indian aviation has been outsourced, if you wish, to places outside India. And I think with our plans and our ambition, we start to grow enormously. Today we do a little over 30 international destinations. By the end of the year, 40. We have new planes coming in pretty much one every week. And from there we'll expand our wings and giving wings to the nation to go actually to all these corners of the world.
Well, giving wings to the nation, that's the aspiration that Indigo is working with. Rohit Java, let me come to you. SE pointed out, and I think that was a fabulous headline, that Hindustan Unilever is the heartbeat of Unilever. So, take me through what is responsible for HUL becoming the heartbeat of Unilever, and what does your heart beat for here as far as the Indian wallet wars are concerned?
Yeah, look, we've been here for 90 years, and the mission with which this company was born and led right from early days by Indian leaders is what's good for India is good for HUL. And recently when our global CEO, Heinz Schumacher, was here, what's good for India is good for HUL, is good for Unilever. Because basically now we are almost 13–14% of Unilever globally. We are a hub of not just a scale of business and opportunity with huge headspace, as we've spoken about the India story, but importantly we're also a hub of talent, R&D, science and technology, and innovation. So India counts a lot, including the fact that many of our leaders have also led Unilever globally. So it's a truly
the heartbeat.
The heartbeat of Unilever.
Rohit, let me build on that, because you said that it is a significant contributor to Unilever, 13–14% being driven here from India. As he also talked about the 2030 vision that you have, what do you believe you can potentially do in the next 5 to 7 years? I mean, what could that number be over the next 5 to 7 years on the back of the trends that you're betting on in India and the per capita consumption expectation that's expected to move up?
Yeah, look, when we look at we look back 10 years and look forward 10 years and look at neighboring markets, and I've said this before, the per capita consumption of markets like Indonesia, more like 4 times of where we are in India today, by and large, across categories. You could have the same story with Thailand, India, China. So when you compare these markets, you clearly see that there's a massive unlock that's bound to happen across categories. And because India is not one, and India is a segment of many different income stratas, you already see the categories taking off. And given the scale, we're talking a big business. So the most important thesis in a growing nation with growing prosperity and aspiration is to offer products that help people upgrade their quality of life at a price and value that suits the Indian pocket. And I think no other company can do that better than HUL, because we are in every corner of this country. We have the ability to reach our products at a very, very good cost. And we have lifeblood of innovation R&D deeply seeped in the culture of the company from 60s. And, in that sense, I really admire what Indigo has done. It really shows an example of a world-class product at what is absolutely Indianized and a really, really good price and value equation. And that's really how we see us breaking through the opportunity in the next 5 to 10 years.
You talked about breaking through the opportunity in the next 5 to 10 years. Let me ask you a more immediate term or a near-term question. And there are questions at this point in time on what's happening as far as demand is concerned. What's happening with consumer spend? Why are we seeing this pain play out for FMCG companies across the board when we talk about volume growth? There are many arguments being presented. One also is that the preference of consumers is shifting away from the traditional FMCG products to perhaps non-traditional or more on the healthier side and so on and so forth. I mean, how do you read what's happening with demand today?
The first and the important thing, just to react to that, because it's not the first time I'm thinking or being asked that question.
No, I would imagine not.
Is to really cut the noise out.
Yeah.
Because noise comes in form of short-term signals. It comes in the form of trends and fads and so on and so forth. The macro picture of the consumption story, especially in consumer goods, is that a massive market where every consumer wants to now aspire to better quality of life because of the fact that they can see what great looks like on their hand phone, on their mobile phone. It's accessible to everyone in this country. So the dreams have been unshackled.
Yeah.
People want to improve their quality of life. All of the trends that we've seen happening in other markets that have gone through this arc of development are happening here as well, whether it's urbanization, digitization through the India tech stack, the upgradation. So give or take a few quarters here or there, and we had rural discussed a year back in a similar forum, and now rural is coming back. We're discussing urban today. So we should just stay the course and remember to do 2 or 3 things. Number one, focus on becoming better every day. So be superior, offer our consumers the best solution. So focus on market share. Number 2, increase the quality of our brands, make sure that they are the most unmissable, and keep investing in market development. Because this market is about development of categories and growth, so therefore we must stay on strategy, come what may in whichever market conditions. So that's what I'm telling myself and everyone in the company. Keep calm, carry on, and keep developing the market, investing for the future.
I think that's a great message. Keep calm and carry on, says Rohit Java, and I think that's a message that the market may also pick up on. Santosh, let me come to you. I think the number one question that everybody was asking as they walked into the CNBC-TV18 Global Leadership Summit is, how much is that Maybach for?
Wow, that's around 3.8 crores. That's just one
How
car.
How many orders have been placed already?
You have to wait for 6 to 7 months to get that car.
6 to 7 months. That's the kind of waiting period that there is.
Yeah, that's true.
But Santosh, you've had a record year in India, and I think it's played out that way as far as the luxury segment is concerned. I mean, people can't have enough of bags or enough of luxury cars. Over the next 5 to 10 years, the significance, the importance of India and the Indian consumer for a brand like Mercedes-Benz.
So let me put things in perspective. Today morning we heard that a country is treated as a developed country once it reaches $14,000 per capita. We are at 3,000 odd. But when you look at luxury cars, what has changed in India is not the absolute number of cars, but 3 years back, the average selling price used to be around $60,000 for us. And today, that's around $100,000. It's already as good as any developed market in the world. So I think that's a significant shift in premiumization. The very fact that we have cars costing 4 crores plus being sold and being weighted, I think that's a fundamental structural shift we are seeing apart from the volume growth. For sure, there is a double-digit volume growth that we see. To answer to the next part, I think we are in the cusp of transformation. And today morning when I heard the Honorable Minister also talking about electrification, on one side we have the green energy transition, on the other side there is expectation for automotive industry to also transform. I think the next couple of years for luxury players like us will be how soon we can accelerate this, because we have this clear window. India was very strong on combustion engines, very low cost cars, but that also closed our borders. What Mr. Uday Kotak said, none of the brands are able to export because these are cars for India, only for India, made for India. But it's time now with electrification coming, change in transformation. We also as a company, we want to change the game. We want to also ensure that cars from India can go out.
So how do you change the game?
First, from the policy side, I heard a couple of references to free trade today. I think that's a starting point. You cannot have closed borders. Unfortunately, what I hear since morning is it's going to get more and more closed considering the geopolitical situation. But for India to develop, I think we need to still strike those deals, so-called, to get the borders open and compete globally. That would, automotive industry is 7% of manufacturing GDP. Every vehicle sold creates 14 jobs. So if you just extrapolate this curve of 7-8% growth, the employment requirement, generation requirement can be largely also met with one industry by itself. But then the aspirations has to be global. It can't be just made for India. It's great, it's work, but made for India, for the world, I think, and with that you need FTAs and also a lot of innovation development to happen in India.
So how much is Make in India for the world happening for you? What is the aspiration? Of course, with the caveat that all of this stuff that you just spoke of on the policy front falls into place.
See, for us as Mercedes-Benz, we have one is our plant and factories, etc. But we also have 10,000 people working in Bangalore. You'll be surprised, we have more than 500 patents filed out of India on the technology side. And proudly we say that every Mercedes in the world has an India in it. So already we are really getting there. But it's mostly tech, software. It's time engineering also comes up. But it's again, the story, what comes first. Is there a local market? When you look at 20,000 odd cars, it's not great, or 50, 60,000 luxury cars. But on the other side, I think with the average selling price going up, market maturing, it should push us and many other players to further look at India much more in a significant fashion.
Peter, let me take off from where Santosh left off and linking it back to Mr. Kotak's aspiration of taking more Indian brands global. Santosh is talking about inking FTAs. Even for the aviation sector, I mean, bilateral rights have been an issue and continue to be an issue. For us to truly aspire to take global share in the Indian aviation market, what is the expectation? What is the ask on the policy front?
I think when it comes to the traffic rights on the aviation side, there's still a lot of rights available for Indian carriers. I think a lot of the rights have been used so far by foreign airlines flying into India. And there's a lot of unused rights on the Indian side. Today we serve around 3.5 lakh customers on a daily basis, of which 90 to 95% are Indian customers. So I think we have a great opportunity building on that to produce in India, for India, but also for the world. So our aspiration clearly is to start adding more and more flights international. I think we have done some recent examples to Baku, Almaty, Tbilisi, Tashkent, all served out of Delhi. If you would have said 3 years ago, would Indigo fly to these places? People said, no, probably not. So what we do, we build our domestic network. Pondicherry was announced yesterday as almost our 90th domestic destination, but even more so international. I think that international traffic right regime still has a lot of opportunities to grow for Indian carriers. And there's quite a few places in the world where there's foreign airlines flying into India and Indian airlines are not really present. So I think for the time being, there's still a lot of room available. And of course, we engage with the government wherever rights should be opened up. And some countries, and I think Thailand is a great example, they're opening up their borders, they waive the visas for Indians, and what they see is a herd of Indian tourists coming in. And I think there's an enormous potential for the Indian consumers to travel, but also for the foreigners to come into India.
No, and that is a significant driver as far as the economy is concerned, even from a jobs perspective. But Rohit, let's talk about, again, India's significance as far as Unilever is concerned, from an IP and an innovation point of view also. And what is driving that, what's happening as far as the product pipeline is concerned. And more importantly, as you look at the next 10 years, what are the 3 or 4 big bets that you're willing to take on the back of what you believe the Indian consumer is going to be willing to pay for?
Well, to begin with, I think the source of strength of the country is its people, not just as a consumer market, but the sheer human capital. You see that, in the case of Unilever's context, being brought to life in 2 ways. If you went to Bangalore, we took our global CEO there to show him 2 great assets built over decades. One is our, what we call UniOps GCC, 2,000 strong with a massive partner system, which is now doing absolutely cutting-edge work. 40% of our global GCC now is in India and will grow. And we have cyber security, AI tools, all being led out of India, products being built. In fact, in a conversation with Jensen Huang some weeks back, he said, India should be exporting AI. So that is sort of the vision we have, we could have potentially for that kind of capability. We have 3 research centers in India, 800 odd scientists, many IPs to their credit. Insofar as the work is concerned, a lot of the work is being done here is for the global use as well as for the India use. And to your last question on where are we betting on, we have 4 big categories: home care, personal care, beauty care, and food. By and large, in all of those 4 big verticals, we have a huge, huge headspace. We're globally aligned. All of those categories are important for us and for Unilever. So it would be wrong to say one or the other. I think we have big headspace in all those 4 categories.
Within these 4 categories, new opportunities that are specific to the needs of the Indian consumer? Is there anything that the Indian consumer is telling you that's different from what you're hearing from your peers elsewhere?
Well, I think in large measures, many of the benefits and categories and formats, you take the example of home care, which is one of our big iconic categories. We went from bars to powders to liquids to capsules and potentially sheets. As formats of washing laundry, given the example Essie gave you on that in the morning. So we've seen the upgradation across all these formats. They've all come into India as well. But what does change are 2 things. All of these product formats are customized for the Indian wash habit, in fact, customized for many Indias. And secondly, price value also plays a very, very important part, that it has to be at a price point where actually the markets can be opened up. And I think I just want to make a point in closing around exponential thinking, because if 90% of India is yet to be built, if all categories have to be 4 or 5x, we have to start envisioning today, when we all sit in a room, in a not a linear fashion, non-linear fashion, what we can do in every category, because at this point, I think sky is the limit, but we have to be patient and focused on the long term.
Well, patient and focused, but let me get you to comment on what we heard from Minister Goyal. And he said that Indian companies need to price much more competitively when we talk about demand. Is there room at this point in time, given where commodity inflation is, to do that?
I think pricing is all very category specific and market specific, and in most categories, certainly we play, which is totally free market, is very, very competitive. We compete with local players, regional players, global players, D2C players. So I think pricing, we have to be very, very lean to make sure that we are just rightly priced for our brands, and we have portfolio brands ranging from Clinic Plus on one end in hair to Tresemme, and we'll be going up further in that market. So we serve all segments, from 1 rupee sachet all the way to 600 ml or a liter bottle.
Yes, and of course, 4 crore rupee cars as well that the Indian consumer is picking up on. So Santosh, what should we expect as far as growth for you is concerned, given the consumption trends that you're working with?
Yeah, I think on the pricing topic, I can also say even luxury customers are value conscious. So it's not sensitive at a price point, it's value. And for sure, but what to expect, I think the transformation will get in cars with some technology that we have never ever seen. A lot of time will be given back to the driver. So a lot of autonomous trends. Even in India, we are seeing a strong uptake for a lot of autonomous features, ADAS features, a lot of connected cars, a lot of e-commerce. You'll be surprised, we have done close to 40,000 crores in last 3 years via direct to consumer, out of which 8,000 crores of Mercedes-Benz cars were sold online. So when you put that number, it's a lot of e-commerce transactions also happening. So a lot of convenience for customers to shop online, to purchase online. So the buzzword is,
on the other side, there is no luxury without sustainability. So a lot of sustainability, not just electrification of cars, but recycling, repurposing will also come in.
Peter, let me ask you, we're seeing consolidation in the Indian aviation market. We've just seen the Vistara Air India merger also coincide with your new offering. Is this good news for airlines like yourself? Does it give you more pricing power? And what about the consumer? What should we expect?
Look at a country of the size and scale and potential of India. We should have airlines like banks, like consumer products, which are matching the size and the scale and the potential of the country itself. So the fact that now there are some larger airlines emerging in the market, it's exactly the same trend as what's happening in other parts of the world. So this consolidation phase that has taken place in the US, it has taken place in Europe, and it's taking place in India itself now. So, if we want to compete and bring India to the global stage, we need airlines matching that size. And Indigo clearly is going to be one of them. We're going to double in size in the next couple of years. Today we have a little over 400 aircraft and we have another 950 on order. So that's sort of the growth trajectory we're in. And maybe just to reflect on the pricing side, I think India, by a long margin, is the most competitive market in the world. And I would invite you to look at some of the prices between Delhi and Ahmedabad. and you see the prices as low as 2,500 rupees. I mean, we start today our business class fare for 18,000 rupees. So I would like just to underline the value-conscious consumer will be there, whatever market segment you're in. And I think at Indigo we serve all these different market segments. But that in itself, and I think that's an incredible asset for Indian companies, because if you can address the Indian market, the value-conscious, price-sensitive, cost-driven market, you should be able to compete international. So I'm very confident that with our international expansion and our Indian cost levels and competitive levels, we should be able to compete.
You should be able to compete. So India prepares you for the world. Now the question is, how soon do we actually take share? Global share is the big question at this point in time. I'm going to end by asking each one of you to leave us with a number. And I'm not asking for the next quarter, so feel free to be much more forthright with that. One number over the next 5 years that you're going to be focused on from a HUL perspective.
Market-making-led competitive growth.
Market-making competitive growth.
So market share would be my centric number.
So what would the market share look like in 5 years?
Well, difficult to quantify that as one number.
Still, ballpark.
No, I think it varies from category to category. We'll confuse everybody with the number, but we intend to, in most majority of business, continue getting share. And the way to gain share in a market as exciting as this in the medium term is to grow the market, because that's really how you get more competitive.
Okay, so gains in market share while growing the market. Peter, the number.
I would line out the number of 200 million. Today we welcome 3 lakh customers a day, 100 million a year. By the end of this decade, in 5 years from now, we should be double the size what we have today. 200 million a year.
200 million a year, that's a good number to go with. Santosh.
Wow, I heard doubling in 5 years by certain pundits here on the stock market side, but at least for automotive, even if it is 1.5 times, so 4 million going to 6 million should not be bad in terms of automotive market.
Well, it certainly will be a big move up from here, which will create opportunities for the economy and for industry. Ladies and gentlemen, a big round of applause to Peter Elbert, Rohit Java and Santosh Iyer for joining us here on The Wallet Wars. We wish you all the very best of luck. Thank you very, very much. Ladies and gentlemen, we have a packed lineup right after the break. After lunch, we've got Rajiv Bajaj, Rishad Premji. We also will be joined by Karan Johar, Adar Poonawala, N.R. Narayanamurthy, Deepak Parekh, and many, many more. So please do stay on and come right back after lunch for more conversations.
Thank you so much, panelists.
काफी के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है, तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। FRBM जो है वो 3% से नीचे है। ये RBI
डेफिसिट 3% से ज्यादा हो गया, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। RBI के
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट।
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है। उन्होंने कहा है। तो RBI की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, FDI का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप क्या आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देगी, बंद नहीं होगी। और ये वेलफेयर स्कीम लाडली बहना चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एनडीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आपके 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री। हम एक टीम बनकर इस चुनाव को सामने जा रहे हैं और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे। और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा? सर आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा?
अभी डिसाइड
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
I certainly believe they should cut interest rates. Growth needs a further impetus.
The Indian economy has sailed well and sailed very well through the prolonged period of turbulence.
India is known as the heartbeat of Unilever. It is a important pulse of the Unilever business.
India needs to improve ROTI, R-O-T-I, return on time invested. We have to move from parathas and everything else, kulchas, to getting really thin, good rotis which give us quick results.
We have been the biggest beneficiary of birth of CNBC-TV18, personally as well as the firm.
CNBC-TV18 marks its 25th anniversary with the Global Leadership Summit here in Mumbai. Celebrating its unparalleled legacy in business journalism, market visionaries, policymakers, India Inc. share their journey from disruptive ideas to market leadership at this mega event.
I certainly believe they should cut interest rates. It's an absolutely flawed theory that food inflation should be considered while deciding on the interest rate structure. Food inflation has nothing whatsoever.
Minister of Commerce and Industry Piyush Goyal says a rate cut is needed to give the fillip to the economy and the decision should be delinked from food inflation. He also says that the capex is picking up and growth should not be evaluated on a quarterly basis. RBI Governor said that RBI is taking a very consultative approach to expected credit loss framework, which will be transformative for the sector. He adds that the RBI will soon issue a draft policy for the ECL as well as a draft guideline for climate risk for feedback. Adds inflation is expected to moderate despite periodic humps. US gets its power from military, finance and creativity, and India needs to beef up its defense to become a global power, says Uday Kotak at the CNBC-TV18 Global Leadership Summit. Adds India must focus on return on the time invested as time is running out for us to become a global power. Markets failed to hold on to morning gains. Nifty Sensex trade with minor cuts. Broader markets outperform. FMCG stocks takes a hit while realty and auto gain. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Obviously, we do have a 25th anniversary. We are celebrating that with the Global Leadership Summit. But a quick look at what the market is doing. Like we were talking about, not much of a gain that the Nifty is managing to hold on to right now. As of now in the morning, it opened up with gains. As of now, trading quite flattish. 23,500, 560 is what it's managing to hold on to. Keep an eye out on that. Sensex also trading quite flattish. What we're watching out for is the broader markets, because today we're seeing broader markets see a outperformance coming in. So the Nifty mid cap and the Nifty small cap, that's managing to hold on to gains of more than 1%. Look at small cap, 1.5% gain is what the Nifty small cap is managing to hold on to. Nifty mid cap, 1% of gains. Let's look at some of the top sectoral gainers we have. We have Nifty Media that's holding on to gains. We have Realty, Auto, that is holding on to gains as well. So good gains coming in from this side. While in terms of the FMCG side, a bit of a muted day that is coming in for the FMCG sector. Not much of an excitement that we're seeing there. It was down almost 1% that we were watching at, around 1% in trade. Let's move on and look at some of the earning movers. A lot of action that is happening on the back of earnings. Last day today for earnings, and tomorrow maybe a few will be coming out, but tomorrow is a holiday in India. We have Eicher Motors, that's in focus on the back of its numbers. We have Thermax, Garden Reach, Torrent Power and PI Industries among some of the names that are in focus today. Look at Torrent Power and PI Industries, weak set of numbers. That's why we're seeing some bit of a pressure that is coming in for these stocks. A lot of volume buzzers also that we're keeping an eye out on. Westlife Development, that's seeing good volumes today. We are seeing Godrej Industries. Other than that, Eicher is also seeing very good volumes, as well as Geo Financials, which is managing to see good volumes. But like I was saying, think it's a big day for us here at CNBC TV18 as we are celebrating 25 years of leadership in business journalism. A landmark event, the Global Leadership Summit, brings together business leaders, innovators and policymakers to brainstorm transformative strategies and groundbreaking ideas, from the Commerce Ministry, Piyush Goyal, to RBI Governor, market veterans like Ramesh Damani, Manish Chokhani, Ramdev Agarwal, and the captains of India Inc., Uday Kotak, Rohit Java, Peter Elbrus, discuss the roadmap that will define India's economic trajectory in the years to come. Minister of Commerce, I beg your pardon, that is Commerce and Industry, Piyush Goyal, says that a rate cut is needed to give a fillip to the economy and the decision should be delinked from the food inflation. He also says that the capex is picking up and growth should not be evaluated on a quarterly basis. Listen in to what he had to say.
I certainly believe they should cut interest rates. Growth needs a further impetus. We are the fastest growing economy in the world. We can do even better. And frankly, the largest component of inflation is food inflation. I think it's an absolutely flawed theory that food inflation should be considered while deciding on the interest rate structure. Food inflation has nothing whatsoever to do with managing inflation. That's a demand-supply situation. I think it's time that industry also and businesses also look at consumer choices and consumer demand for more attractive pricing. I think if smart business people start offering better pricing, better value for money, I'm sure the market will give them a boost. I personally am one of those who believes that economies of scale, that the huge demand that 140 crore Indians provide, the demand of 1.4 billion aspirational young India, the demand that our growing economy, our growing income levels offers is unmatched.
Inflation is expected to moderate despite periodic humps. That's the word coming in from RBI Governor Shaktikanta Das. He adds that the RBI is taking a very consultative approach to the expected credit loss framework, which will be transformative for the banking sector. Listen in.
Today, India's economic growth remains resilient. Inflation is expected to moderate despite periodic humps, and the external sector is robust. Without being complacent, let me end by saying that the Indian economy has sailed well and sailed very well through the prolonged period of turbulence, and it exhibits resilience in the face of constantly emerging new challenges. With regard to the ECL framework, that is expected credit loss framework, even after issuing a discussion paper and receiving stakeholder comments, which we got examined by an external working group, we now propose to issue a draft circular for implementation of ECL. So the draft will be followed by issuance of a final circular. Again, we will get comments, and we are adopting this very careful approach because it, the introduction of the ECL framework marks a major transformation in the way the assets, the stressed assets or the buildup of stress, or the way the assets get classified.
And on the sidelines of CNBC TV18's Global Leadership Summit, my colleague Sohini spoke to the CEO of HSBC India, who commented on India's growth trajectory and the rising Gen Z customers. Listen in.
No, I think almost all of us recognize and agree that the next 2 to 3 decades are India's decades, right? There are multiple driving forces, demographics, the digital public infrastructure, the excellent financial regulations and regulators we've had, the improvement in physical infrastructure, this particular concert room itself, right? So the possibilities are all there, and I think it is just for us to execute, right? It is execute, and make sure we don't make too many mistakes. Yeah, so I think, for example, at HSBC, we are making an active effort to spend more time. Most of me and my senior colleagues are spending much more time with the Gen Z and the younger crowd, because that's my customer as well. right? And we need to understand, and it is a fact that this crowd, the younger lot, does think differently, does behave differently, has different priorities in terms of a lot of things. So unless you understand the audience, you cannot produce a product. So I guess just engagement, communication, keeping your eyes and ears open is the way forward.
Okay, let's just take a quick look at what's happening on the market front, right? Like I was saying, Nifty is not managing to hold on to anything exciting. But we have Nifty 500. Let's look at that's happening, because the broader end of the market, that is managing to hold on to gains. So let's pull up some of the names that we're seeing coming in today. Kirloskar Oil Engines, that's holding on to 7% gains. I believe that reported their numbers also. As of now, we have Global Health that has come out with their numbers. Let's pull that up, because it seems like it's perked up in trade. EBITDA on an overall basis, value basis, is up 4%. We've seen revenue see a growth, and look at the spike up that we've seen in the stock, because it was trading in the red and now it has moved on to the green. Margins a bit under pressure. But let's move on and get you some more updates coming in from the Global Leadership Summit of CNBC-TV18. We have Mangalam joining with us all the way from there. Mangalam, good afternoon. What is happening over there? You've been here since the get-go, since there. What is all the update that you're getting there?
All right, just before the star-studded panel gets underway at the Global Leadership Summit, we've managed to catch a couple of gentlemen before they grab their lunch and get onto this stage. We have Ridham Desai with us, and we have Piyush Pandey as well. Now, you would say, why do you have a finance man with an ad man together? I think the finance man will tell us when the earnings will come back, and the ad man will tell us how brands will bring their volume growth back as well. And of course, we have Nigel with us too. Nigel, Chartbusters gets down on the ground with the big people.
Well, Mangalam, I've been getting so many messages about what about the markets, how are things moving, and actually, because we're at the summit, I've not really had a look. But I promised all the viewers that I'm going to get you the main market man to help us with how are things shaping up. Well, Ridham, you go first. Tell us, how do you see things shaping up? We've seen this 10% correction. Mangalam has been telling us on a day-to-day basis that there is a slowdown in X sector. The urban slowdown is there as well. Is bulk of that in the price, the earnings miss, the slowdown that we're talking about post this 11% correction?
Okay, so I'll break this up into two parts. So the slowdown is over. That's historical news. That's not prospective. In the month of October, the government drew down its cash balance with the central bank from 3.5 lakh crores to 98,000 crores. So which means that over and above the GST that it collected, it spent 2.5 lakh crores. Okay? So in a couple of weeks, all the companies are going to say, oh, my business is looking good now. Because that's a lot of money to have been spent in 30 days. It's unprecedented, actually. I don't remember the government spending so much money in a 30-day time frame. On top of that, and I think he knows this better and Piyush will know it even better, we're entering into an unprecedented wedding season.
Indeed.
Right? 35% growth coming, and Indians spend a lot of money. So I actually think this quarter is going to be blockbuster for earnings. And October is behind us, that is in the price, that's done. Okay? That said, we have a big event risk on 23rd of November. Okay? The elections. And if the elections produce a result that the market doesn't like, then it will cause pain. And then I don't know if yesterday's low was the bottom or not. But if that election result is palatable to the market, then I think yesterday's low was probably kind of where we should have bottomed. I mean, it doesn't mean that stock prices can't fall, but I think more or less, at least individual stocks, I think, have done their jig.
Well, that's pretty good news. If you're saying that things are going to look up from here in wedding season, and Mangalam has been bringing us not too good news, but trust me, gentlemen.
There's one risk that we must keep in the horizon is on 21st of Jan, when the president comes in, the new president of the US, he will have a slew of policy announcements. And I think one of the worries that I have is a universal tariff. That's not directly going to affect India in a dramatic negative way, but it could have an impact on the world at large, which could then leave us with slow growth in 2025. And I'm not sure that's fully baked into share prices.
But will India perform relatively better, in this sort of a context?
Does any of your viewers... Is anybody actually concerned about it, right? Because ultimately you have to take absolute returns home. What do you do with relative returns, right? So, yeah, relatively India will do very well. But if everything is going to go down, India can't be going up.
Well, so Mangalam, Ridham's highlighted some of those pain points, but he's saying things will look up from here on, which is good news.
Which is absolutely good news. The important part is that all those pain points that he highlighted, Piyush speaks on a real-time basis to consumer companies. He knows what the ad sales were during the festive season. And more importantly, he spoke about the November 23rd event. I'm not going to take names, but Piyush has been dialing the phones of all the powers that be across all parties. So if you want an election update as well, he has it right here. Piyush, so two questions. One, consumption mahol or election mahol? Both of them.
When I start loving him, he gives you another picture in 20 days' time. Then I say, what's he talking about? Then he gets you to love him more. Then he brings it down. It's like a cricket match happening. 5 over mein ye hoga, 5 over mein wo hoga. But coming back to what you're saying, that we are emotional nation. Even last evening, I lived near the beach in Mahim. It was Tulsi ka Vivah. Patake were bigger than what you see in Diwali. So whether we have money or not, we celebrate our weddings. It's the wedding time that he's talking about. Of course it'll go up. It'll go up. I think India is a funny country. Numbers don't show you everything. There is a heart and the number which has to be matched. And I think as a finance man, he'll know that sometimes your heart beats. Dil se, that time you don't see your numbers.
Right.
That you say, okay, meri beti ki shadi hai, I will go and spend, rest we'll see. So it's a balance which he keeps pointing it out to us, but we have got a population. He says there's one life, I'm going to celebrate it.
Wonderful. So the third quarter is good.
This thing about me going this way.
No, I was having
Uska
fun
problem.
with you.
No. That is the reason is that actually equity investing is a test match.
Yeah.
But CNBC-TV18 is playing T20. T20 mein mujhe test match khelna.
In between is a series.
Well, you're speaking to a former Ranji wicketkeeper as well. But, speaking about the political match, what do you think the power play out here is? Maharashtra elections, he says the street does not, there might not be a good reaction if the result is not what the street wants.
I think I think it's temporary. It follows the national bit. If it goes this way in Maharashtra or that way in Maharashtra, it will have some impact, what he's saying. But I don't think it's going to be a long-term impact. It will only be a long-term impact if the central government and the Maharashtra government happens to be the same. That will be a positive one to my mind.
Nigel.
All right, Rhythm, the other factors, and now we are looking at the test match, since I want to be on the right side of things. So you tell us, what are you making of this FII selling? There was this talk that they are selling 10 billion, 12 billion. Now, on a day-to-day basis, I'm also wondering, when are they going to turn around? What do you make of it? Do you think bulk of that hot money that had to move out has moved out, if it is hot money indeed?
So they sold 10 billion. Who bought it? किसी को तो बेचना पड़ेगा ना if I want to buy. If everybody wants to buy, then who will sell?
Well, I am very happy because my SIPs are going in and I think I'm getting better rates. But what do you think?
So see, I think first of all, let's get the technical thing.
Yeah.
In the market, on a net basis, daily, forever that I have been here, I complete 40 years next year in the stock market, net flow has always been zero. So if somebody is buying, somebody is selling, right? So that's one. Now, with respect to the foreign portfolio flows, I think a lot of it has to do with the global situation. In the month of October, I think the US market started pricing in a Trump victory. And as I highlighted before, we're not sure about his tariff announcements.
That's what I was saying earlier. Just when I start feeling good, he pulls out his Trump card.
So if those tariff announcements turn out to be adversarial, they will hurt emerging markets. So a lot of EM repositioning, I think, took place. So it's very hard to ascribe numbers, but I would say 2/3 of this was to do with that. A third of it was to do with the earnings that were coming in, especially in the month of October, which were not good, and some of them guided also poorly. But things actually have started changing in November. And I do feel that at the margin, FII outflows have stemmed. But this is a discussion point in the panel that I'm hosting. It's a question that I have for Samir, so maybe people want to dial in on what Samir has to say about this.
Okay, all right, we noted that, yeah.
Just a second, what I was saying is that, we have a finance man and an ad man. Here's the ad man talking numbers, and the finance man is teasing, advertising his own panel as well. So you got to tune in on that one.
Funny bit, my finance man all these years, he used to say, you go and do great work, my money will come. He will say, first bring the money, then I'll give you money for doing advertising. It's a parallel that goes on. But I'd love to live with them. Without them, there's no money for me to do good work.
And without them having a lot of money,
good work, they won't have the money.
Actually, let me say something on a test match basis, because he made a very important point. So, you need three things to create output, to create income, to create prosperity. You need capital, you need labor, and you need land. They're called as factors of production.
Right.
India was always constrained on all three. Okay, we had a lot of labor, but we had skilling problems, we had labor laws. Land was always an issue. Capital was a major issue. The one thing that has changed in the last 10 years is capital is not a problem anymore. So don't worry about it. There are a lot of people willing to finance you. Land and labor, we are still dealing with it, but capital is no longer an issue.
There's a bit of connect with what you were saying, what I said earlier about Dil is very important to our people. So the emotion and the finance will find a balance between the two, and I hope both of us win.
All right, both of you all will win and India will win as well. Just a final question to both of you all. Piyush, one word of advice to consumer companies. How do they go ahead and sell their products a lot more? That is a general advice, and a more specific advice to one of your best campaigns ever, which was Har Ghar Kuch Kehta Hai. Asian Paints this time around. A fair amount of competition. Everyone's talking about this incumbent coming in and taking away market share from the leader. What should they do?
I think somebody talked about stay calm today. Who was it?
That was Rohit Java of HUL. Again, a consumer company.
Yeah. But I think you have to stay calm. It's like when you panic, and coming back to cricket, as you said, the wicket is bad. If you go in saying, wicket is bad, you're bound to get out fast. I'm saying stay calm. You will know where to hold your prices. You don't have to run and say that I'll drop my prices. You'll not be able to run your business. So my advice to everyone is, you reach this far, and to Asian Paints, you have reached this huge distance. Many competition has come in the way. Don't worry about it. Put your act together. Don't worry about what the other guy is doing in his net.
Sir, where were you when India was losing all those matches against New Zealand? We were not at all calm. We were just throwing away our wickets.
Yeah, again, it's like your market. When they went down, you got very panicky. When we were winning earlier, you were jumping with joy. So these things will happen. Here, ek to samosa fail hoga na beech mein.
Well, I'll thank you all gentlemen for that. So on that optimistic note, we are playing that test match. As Rhythm says, he believes that maybe bulk of the pain is already in the price. Hopefully things recover from here on.
T20 भी ठीक लग रहा है.
नहीं,
Test match तो हमेशा से ठीक था.
Full balance खेल रहे
you know, on the test match, Mangalam, on the day post the India-New Zealand test match, Mangalam and me, we don't know how to start the show. Because we're such diehard cricket fans, so I hope when the boys go down under, the outcome is even better. Stay calm.
But we are still better than our neighbors who go and burn their houses. I hope they don't.
The overarching message out here is things are looking a lot better. Stay calm. On that note, what we'll do is ask you to stay calm for a bit. Come back after this short break and you will have all the interesting insights coming in from the Global Leadership Summit on CNBC-TV18. Thank you so much for watching. Take a break. Come back.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
He is able to have a dialogue with all sides of the political.
Welcome back. You've tuned into Business Lunch on CNBC TV18, and let's talk about earnings because we do have Gokul Das that reported their numbers as well. Overall revenue saw growth. Margins also saw a slight bit of an improvement on a year-on-year basis. But what else are we watching out for in terms of numbers? To talk about the numbers, we have Siva Ganpati, the Vice Chairman at Gokul Das Exports, joining in with us this afternoon. Thank you so much, Mr. Ganpati, for joining in with us. And I want to start by talking about the demand trends that one is seeing. Because in the global market, and specifically US, which accounts for around 80% of your revenues, more than that, that has seen a bit of a subduedness, at least what we're seeing in terms of the imports that are there from the US market. How is it shaping up for you? What are the current demand trends that you could highlight over there?
Thank you for having me. The US retail demand has been pretty strong. Even for the YTD this year, for the calendar year, the retail demand has grown by 3%, over a 3% growth the year before. So the consumer pull is there. Last year, the retailers were having excess inventory from the year before, and that is why there was a sharp fall in demand from large retailers for manufacturers like us. However, most of those inventories have come down with the brands, and now they're back in the market. So we're seeing, especially from July onwards, we are seeing a fair amount of traction coming back at an overall market level. Gokuldas exports in particular, we have started seeing a demand flow coming a bit sooner because of several other macroeconomic factors going in our favor as well. So we are seeing a fairly good demand traction based, backed up by low demand in the previous year, backed up by, the need to move away from China, which has acquired a renewed sense of urgency now with the US elections, plus issues in Bangladesh and all other competing countries in the neighborhood. So in general, the demand scene is looking good from H2 onwards, and I think that will stay that way for some time.
Okay, so demand is looking good. Mr. Ganpati, thank you so much for patiently waiting by and joining us on a day where we complete 25 years as well. So thank you for being a part of the journey with CNBC-TV18 as well, and for your insights as always. So now that you're saying second half will be better than first half, can you give us some details in terms of what's happening on the freight side? Because a lot of companies who are big exporters have spoken about how maybe now freight rates would come down, and there has been that currency depreciation issue as well for you. Do you think margins will improve and you will be able to do what you did last year, maybe better than that?
So first of all, congratulations on your 25 years. That's an immense achievement. As far as the freight is concerned, we sell almost all our products on an FOB basis. So on an outgoing freight perspective, we don't bear the cost, the customers bear the cost. However, for the amount of goods that we import, raw material that we import, our freight costs have impacted it slightly, but most of it is passed through for us, so we pass it back on to the customers. But there has also been delays in securing some of those raw materials, because apart from costs going up, there have been tremendous amount of delays. So excess inventory in the high seas, delays in arrival, meaning and hence delay in loading it in our factories, etc. All of those are causing some amount of disruption, but we are handling it. But I don't see freight as a big problem because bulk of the freight, which is the finished goods freight, is all borne by the customers. As far as currency goes, our currency has been fairly flat with US dollars for the last 1.5 to 2 years. So, while some of the competing countries have seen a little drop in their currencies, like Bangladesh, even yuan. So we do have some of those challenges, but we have been, fairly able to combat it by higher productivity. Some of our factories are in Kenya. 4 of our 30 factories are in Kenya. And there we saw the Kenyan shilling actually go up sharply against US dollars. So to that extent, we did have some challenges in Q1 and Q2, particularly in Q2, because of sharp rise in local currencies. So for an exporter, when the domestic currency goes up, our cost of operations go up in US dollar terms. But we have fairly managed all of those currency volatility. We, at least for bulk of our operations, we hedge our currency, so we don't take any currency risks.
Okay, all right, Mr. Ganpati, short on time today, but a pleasure speaking with you. Thank you so much for joining in and giving us a sense of what the earnings look like and the outlook going forward as well. With that, we'll take your leave on this edition of Business Lunch. Thank you for watching. Stay tuned to CNBC-TV18 for more news and updates.
Globally, and he could become a very important peacemaker.
President-elect Donald Trump has not wasted any time on putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A-team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
Thank you, Minister. Thank you for gracing the occasion, the 25th anniversary of CNBC. As Shireen mentioned, we are in an election season, so thank you for taking time out from your campaigning schedule. So let me ask you a topical question. We can come to another election maybe a few questions later. But firstly, how are the elections in Maharashtra looking here?
Outstanding. I've just returned yesterday after a tour of Marathwada and Western Maharashtra. At one point of time, a stronghold of the Congress and Mr. Sharad Pawar. But I can clearly see the winds of change even in those areas. Mumbai, Konkan, of course, will be a complete clean sweep for the Mahayuti, the BJP and its allies. But all in all, now everybody seems to have accepted the reality that the Mahayuti government is going to come back. The people of India do want to see a government aligned with Prime Minister Narendra Modi's vision to make India a developed nation by 2047. And I do think, looking at the kind of governance that the government led by Mr. Uddhav Thackeray had given to this state, people don't want to see a repeat of that. So I can clearly see before my eyes, once again, Prime Minister Modi leading from the front. In fact, he's here this evening at about 4:30 p.m. at Shivaji Park. And we are all eagerly awaiting the message that he will give us today.
So if the Mahayuti were to get a majority, who would be the chief minister? Would it be Mr. Shinde? Has any call been taken on that?
We'll decide that once the elections are over. All the 4 partners in the alliance will sit down, and just as we've made all the decisions very amicably, this decision will be equally smooth. The good part is all the parties hold Prime Minister Modi in such high respect that they believe that whatever decision is taken collectively by all of them and blessed by Prime Minister Modi will be final.
Because in a sense, the BJP gave up the chief ministership when the Shiv Sena split 2 years back.
I don't agree entirely with that. I think it's not a question of giving up chief ministership or accepting it or demanding it. It's always a consensus that you draw up amongst friends. It has happened in the past. For example, in Bihar, we had many more seats, many more legislators than the JDU. But we still chose to agree to have Mr. Nitish Kumar as the chief minister. So similarly in Maharashtra, we thought that Eknath Shinde ji should lead the state the second time around when we came in after 2022. And I think he's done an absolutely fabulous job.
So one of the features of the Maharashtra elections is obviously the Ladki Bahin scheme, which is supposed to be a game changer. But there is also, a debate on the culture of reveries and freebies, and both groups, opposition parties, you often blame the Congress for the kind of, what you call excessive welfare in Himachal and Karnataka. Why is the scheme any different?
First of all, I'll just correct your choice of words. It's not supposed to be a game changer, it is a game changer. And almost every feedback that we are getting seems to suggest that women across the state of Maharashtra, and nearly 25 million women have already received 5 installments of 1,500 rupees each.
The next session. Well, we will do that, and as we approach the end of 2024, the financial markets are marked by notable volatility. The US dollar has reached a 2-year high. Major stock indices like the S&P 500 and Nasdaq are showing resilience, and bond yields are climbing, signaling potential inflation concerns.
Meanwhile, oil prices have dipped, adding to market uncertainties. These mixed signals leave investors grappling with a critical question. Is this the time to be bullish or bearish?
So up next, we will understand the state of global markets and see where the real opportunities and the risks lie. The discussion on time to be bullish or bearish will be chaired by Ridham Desai, the MD of Morgan Stanley India. Ridham, please do join us on stage.
May we also invite Mr. Rama Bijapurkar, author and independent director, India Blue Chip Companies, Mr. V. Vaidyanathan, managing director and CEO, IDFC First Bank, Mr. Nilesh Shah, Managing Director, Kotak Mahindra Asset Management Company, and Mr. Sameer Arora, Founder and Fund Manager, Helios Capital, to join us. Ladies and gentlemen, a huge round of applause for our session after lunch.
Good afternoon, everyone. Firstly, my heartiest congratulations to CNBC-TV18. 25 years, really long and wonderful journey, and it's been a pleasure to be part of this journey. So my heartiest congratulations to the entire team led by Shireen, Rahul, and the others. So we have 30 minutes. It's not a lot of time. There are so many things to discuss. I'm going to kick off with Rama, because it seems like the secret sauce, Rama, is the price of tomatoes. Is that the answer to everything now?
Absolutely. I think everyone who wants to be in the stock market should buy their vegetables and cook them for a week. But I live in the main street, far away from you. And I watch people to understand how they earn, how they spend. And I will say that There are a group of people, many of whom are in this room, the top 20%, to be generous with the number.
Top 0.5%.
No, not in this room, but many of whom are in this room, all of whom are in this room, you're right. The top 20% are doing okay, thank you. And everybody else is under stress. And I suppose if you buy the theory that you have to have investment to have a vibrant economy, to have all the usual stuff, to have jobs, to earn, to spend, you cannot divorce earning from spending.
Okay, so on that somber note, let me go to Vaidya. So a lot of people are complaining that credit growth is anemic. Is this a demand issue or is it a capacity issue?
See, this is more prudence. Because look, India's credit is growing by, let me say, 15 odd % until last year. But if someone is borrowing money, they have a real use for that money and they can put it to a return that is even higher than 15%. So, or if they're borrowing at say 12 or 13%, they're probably earning 17, 18% of the core business. So I would say a good credit demand is a representation of a good demand in the underlying economy.
And what about the capacity issue?
If you see India's credit market today, it's about $2 trillion. That's 170 lakh crores. And even if you compound by just 12%, not too much, just 12% for 20 years, this will be $20 trillion. Just think about it, Rhythm. 2 trillion becoming $20 trillion. Well, in our lifetime, 20 years. And even if you see the other way around, India's GDP, let me say 20 years from now, say $30 trillion, and 60% of that is credit, and that's $20 trillion. So which way you read it, the $20 trillion is correct. So I would actually say that India needs to expand its banking capacity. We need more banks probably. And we need serious capital. Today, India has about 25 lakh crores of equity capital in the banking system. It has to go up by at least 13, 14 times. So we have to keep this industry very attractive for investors. And it is everyone's responsibility, the government's responsibility, the incumbent's responsibility, the newcomer's responsibility. Even the regulator has a role in this. I think it is very important to create that kind of equity capacity to have that kind of credit growth.
So that's a very interesting comment. Samir, एक ही क्वेश्चन है सब लोग पूछ रहे हैं गोरे क्यों बेच रहे हैं?
I think they are mostly done with it plus minus a few weeks, because the question in the beginning was whether they are selling India to buy China. So that relief can be there that they were not selling India to buy China. But it appears that they were selling India or are still selling India to buy US or go back to US, because all the things that we've been asking here are being done there first, which is lower taxes, cut regulations, even at least keep corporate taxes in check and all that. But you know, this trade has already made whoever was in time maybe 25%. Let's say the Indian market is down 10, but the stocks are down say 12, 15%, and the US market is up some 7, 8, but regular stocks are up 10, 15. So after a 30% move, it would be a bit unreasonable for these investors to think that they have another 20, 30%, that they should still sell India, still buy those stocks that have done well. Plus minus a few weeks, I think they don't have to come back. But as soon as it's near zero, I think our friends will make the market go up 4-5%. And that again would make, everybody calm and things will move on. I think that will happen before this year end.
Okay, so let's come to our friend. Nilesh, is this just a correction or did the peak of the bull market go behind us?
I think we are at a stage where every correction is an opportunity to buy. There is a BC era and AC era. Before CNBC, when markets used to correct, we used to go to investors and say, don't worry, this is just a correction, markets will bounce back. After CNBC, now it's different. People come back on a correction day, Nilesh bhai, darna mat, we are sending money, gore ko khatam kar dena. And आज ये बेच रहे हैं तो ये भाव है, सोचिए जब लेने आएंगे तो कौन से भाव पे लेके जाएंगे. लगान मूवी का एक डायलॉग है, दुगना दाम देना पड़ेगा. हम भी वही डायलॉग रिपीट करेंगे.
I like that. I like that. So, Sameer, back to you. What do you think? This is a slightly longer term question. And don't tell me, that we should cut taxes because tax rates koi kaatne wala
No,
nahi.
now the good thing is they won't raise taxes.
So, what do you think India could do, say, 2-3 things, really potent things that could make foreigners more endeared?
So, by the way, it is first fair to understand the issue that the post-tax returns of India are not as attractive as other markets. So you don't cut, but there is a cost to that. Now somebody will say that why didn't you, the FII that is, why didn't they sell in July or whenever this happened and why now? Because you need an excuse and a justification, and when you find the first fault, then you pile on, and like in a fight and when you're resigning from a job, when you are divorcing, you find 100 items even though only one item was the real cause. But I think actually there's one more thing. We should not keep saying that it is FIIs leaving India to go to US or China. It is because India has had pathetic results for a large part, and these things don't change in 3 months, but they may change in 6-9 months. So the market, I think, will become very narrow, and this unbridled, this thing that if it is bad, doesn't matter, next quarter will be good, at least we will not play that. But there is some responsibility of the fact of the system or our GDP. The numbers have been very bad, and that's why these two are responsible for that part of the...
I'm coming to them, in fact, to you actually on this point. Do you think this recent economic slowdown has produced any stress in the system?
No, not really. I think fundamentally things are very resilient in India because of the new digital ecosystem that has come about. Basically, I believe that the guardrails in the country have become very strong. To just give you one data point, for example, now there are close to about 600 million trade lines on 4 credit bureaus each. Now, every month, close to about 35 million new credit lines are being sanctioned and disbursed, 35 million. And talking of stress, one thing I'm noticing is that the new to credit applications is only now 10% of the disbursal. It used to be 20% 5 years ago. So basically I sense that the Indian banking system has become more conservative over the last 5 years. I think it's got to do a bit with even what the regulator has been constantly cautioning. I think people are picking those cues. And the drop of new to credit from 20 to 10 tells a story of increased conservatism.
Another question that I keep getting from people is capital spending back. Are you lending for projects? Do you see that projects are taking shape?
Well, it's not caught up yet. I think that for a while now we've been talking about the capital demand coming back. I think it's been pushed back by 6 months and 6 months for a while, I think so. It's the micro entrepreneurs, what they traditionally call the RAM, the retail, agri, MSME. This machinery is pulling strong. It's about 1 lakh crores today, out of 100 lakh crores today, out of a total of about 170 lakh crores.
Okay. So Rama, somehow I feel that it's not like the overall consumer market is in pain as much as large consumer companies are facing pain because of a lot of disruption that has happened. And I remember many years ago, it was almost impossible to beat Hindustan Unilever at selling soaps. And a lot of structure in the distribution has changed, building brands has changed. How do you detect these things? Essentially, what in your view is the winning formula for a consumer company now versus say 10, 15 years ago?
So to begin with, I think the structure of demand is not as rosy as we think it is. We are a large economy of lots and lots of small income people. I think there's no getting away from that. It is also true that about 80% have absolutely very little surplus income, which means that any kind of shock, whether it's the price of tomatoes or whether it's a rise in the price of petrol or increase in EMI, whatever it might be, or the possibility or not having enough work, does get them to almost a zero surplus. So it's not like the Kamadhenu that keeps giving you demand. It is also true that the top 20% have over half of income. So that lot is safe. Now you will find that all the consumer-facing companies who have interacted with what I would call the India 2 and 3 are in pain. That's part of the reason, part is what you say. It is also possible to run a stock market entirely for the rich, of the rich, by the rich, with companies that do not interact with India 2 and 3. And there are most companies in India, barring a handful, do not actually address the mass market. But those that do are in a bit of pain. Add to it another whammy. I think it is true that things have local competition, small competition has caught up, because what do people do? What people actually do is to say that if I have to balance my budget, I will go to a price performance point that suits me better. Once upon a time, we used to call it the unorganized sector, saying that they're disorganized, they're rubbish, that's the point. But over time, the unorganized or the small sector has actually started getting leaner, meaner, fitter. So there is competition from there as well. I recently read the CEO of a consumer company saying, well, quick commerce is the reason I'm not growing. And I thought that's a bit strange. Why are you competing with the distribution channel? And if I were to decode it, it means that that distribution channel owns a bunch of customers. It wants it's a zamindari where it wants very, very high margins. I'm not willing to play in that channel because I have other guys. That's a strategic choice. So I think there is local competition, there is vulnerability, because that is the structure of our demand, and our economy is not firing on all cylinders. So incomes are generally muted. Plus, if you're not able to crash your prices any more than you already have, you have a problem. So most companies are now saying the magic mantra, premiumization. What does that mean? According to me, what it actually means, they're saying, is that I will go to a higher price performance point of products, which I will sell to people who can afford them, because that class is safe. But unfortunately, if you are one of the handful of companies in India where a large proportion of your revenue and your EBIT comes from the mass markets, you are in trouble.
Nilesh, question for you, more stock market related. What are the sectors that you are most bullish on going into 2025?
So one, if you are investing with 1 year horizon, stay away from equity market. Invest with longer term horizon. And second, it's India which is a rising tide. Within that, something will rise faster, something will rise little later. But there is this Sanskrit Subhashit which probably describes India's story quite nicely. Sukhasya mula dharmam, dharmasya mula artha, arthasya mula rajya. Sukh, happiness, investors' profit is function of dharma, which is governance. It's function of artha, which is trade, commerce, and investment. And the rajya is the state. Today in India, we have perfect alignment, and which can improve further, but there is alignment between governance practices. There is state which is enabling entrepreneurship. There is long distance to cover, but the change is positive. And this is resulting into facilitation of trade, commerce, and industry, which will result into investors' profit. So don't invest with 2025 in mind. As Vaidhi mentioned, think of $20 trillion credit and $30 trillion economy. As long as we have this alignment, we will be able to do well. And the perfect example here is the Deepam department under Sri Tuhin Kanta Pandey. From just divesting shares, now they are managing PSUs, and we have seen the valuation re-rating and the kind of value it has created for the shareholders. So sir, please keep on doing that good work. We are all beneficiary of the same.
Thank you. So one last round of questions, I think. So I'll start with you, Sameer. What will you short even at current levels?
Not I will short, I am short. So I am short many consumer names, many auto names, and a few micro lenders. My theory is that things that are doing badly don't turn around very fast, and things that are doing well don't stop doing well so fast. And I didn't know that Nilesh is so negative. Well, I think even next year will be good. It's just that you have to define what is good. So when you say, is it a bull market? will 12% qualify as a bull market plus minus? You can still theoretically get. Just to tell you one number, if you look at last 3 years returns of Nifty and last 3 years returns of NSE 500 index, the Nifty returns are lower than 5-year, 7-year, 9-year, 10-year, 15-year, 20-year and 25-year returns. The last 3 years are the lowest in our history, sort of, if you consider history. And the last 3-year returns for the 500 index, which also includes mid and small cap, are in the middle. Other than the last 5-year numbers, which look a bit out of place with any other period. But that also you can broadly see. If you make it 7 years instead of 5 years, they go back to being within normal. Normal means 13-14% for Nifty and 15-16% per annum for 500. So you are suddenly feeling bad, I think, because some of the results are bad. Not so much that, oh, this is too high, too low. People think that they've made a lot of money, but you tell them on the full portfolio, on the full fund, it's in the range that we've always made all our life.
Nilesh, from a policy perspective, what are the 2-3 things that you think can happen and could surprise us to the upside?
So one immediate thing which is worth doing, we all know US is going to impose tariff. As of today, they are going to look at the trade deficit of India with US, which is $36 billion, and the IT services exports, which we are earning. Now, that's a large number. We need to go and tell America that, look, please take into account 200,000 Indian students which are studying with you. $20,000 per capita, that's $40 billion. 17 lakh Indians have traveled to US, $5,000 per capita, that's $10 billion. So many Indians go to US for healthcare. And please take into account the payment made by Indians to Microsoft, Amazon, Twitter, Facebook. They don't book it in American book, they book it in Ireland and Nassau and Bahamas. If you do that, our trade deficit with America will come down dramatically compared to what they are seeing. Hopefully, they will not levy tariff on us, and they'll levy more tariff on China, and then that gives the opportunity to us. I met Mr. Prabhu over here, who is from Coimbatore textile industry. 2018, we were exporting 90 crore t-shirt. Today, we are exporting 80 crore t-shirt. 10 crore t-shirts have come down in exports. We need to work on this tariff to ensure that we export 900 crore t-shirt to America if they can buy.
Great. Rama, within this rather dim consumer sector situation, are there any bright spots, hyper growth areas that excite you?
Absolutely. I think everything is it's dim if you look at mass markets. If you look at what I call the class markets, everything's gangbusters. Look at high-end travel, look at cars. The car sector always bounces back because only the top 10% of India buy cars. High-end hospitals, everybody's replacing body parts at very high prices. There is, again, if a coaching class that sent children to Harvard was listed, it would laugh all the way to the bank. So I think that the anything to do with serving the high end of the market is actually underserved. If you start a helicopter service and list it today, Char Dham and between cities and to overcome traffic, it will work. We're starved of business class, so we're not serving the high end enough, and the lower end is not coming through the way you want it to come through. Within that, I think India has always been, mass markets have always worked for utility products that help you earn more. That's the two-wheeler boom, the smartphone boom, because it enables you to get more productive. Interestingly, if any second-hand, pre-owned or pre-loved, as it's called, shop or smartphones or cars starts listing, or two-wheelers, go for it. And finally, I'm very bullish on marketplaces, except that, as I said, my street is not your street. But marketplaces, to me, the new age digital marketplaces are the magic formula which aggregates small users, aggregates small suppliers, small buyers, have crash course through digitization, and it's a kind of win-win-win situation. So if we don't galagoto of this particular new business, new economy models, and allow them to come in, then I think that many of them do have the magic formula.
Wonderful. Last question for you, Vaidya. You may not agree with this premise, but just go into that hypothesis. Do you think there's a possibility that banks cease to be growth companies and become utilities?
As the economy grows, over the next few decades, any industry, whether plastic industry or manufacturing, whatever, they may have their ups and downs. But I can tell you, banking system will keep growing because banking is a fundamental fuel for the economy. So your credit GDP being 60% or whatever, it'll still be 30, 20, 25. That won't go away. The important thing that we as bankers and banking system should know is to keep track with the technology of the new ecosystem. So that is the only thing to keep, because so many digital ecosystems are coming about, Aadhaar, this, that, ONDC, DigiLocker, the whole ecosystem is coming. So our ability to keep pace with that ecosystem, develop technologies to do that, and to develop great customer experience, customer service, that is the only catch to it. I mean, that's the only precondition to it. But banking will not go out of fashion.
By the way, and Nilesh and Samir will agree, most bank stocks in India are now trading like utilities.
No, that may be true, but I'll tell you.
The market has already made this announcement.
I know, but
that's the opportunity.
Markets can be,
No, that's why I left this last question in the end for him.
No, absolutely, but markets can be myopic in the short run.
Yes. No, absolutely, but that's what's the opportunity.
That's the opportunity.
And in fact, just one more point where I would like to express my disagreement, though I'm the anchor here, so I'm not going my views, but I think that credit to GDP number in time will become 100. So
it could be even better then.
Okay, with that, I think we have totally run out of time. I hope you enjoyed the session. We couldn't really get into more details, but there's a lot of exciting time for India ahead, and I'm sure CNBC-TV18 is going to be part of that journey. So here's to the next 25 years. Thank you.
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है। तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है, और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। एफआरबीएम जो है वो 3% से नीचे है। ये आरबीआई
डेफिसिट 3% से ज्यादा हो गया है, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। आरबीआई के
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट,
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो आरबीआई की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, FDI का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप क्या ये आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देंगे, बंद नहीं होगी, और ये वेलफेयर स्कीम लाडली बहना चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा, और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं।
Hello and welcome. This is a very special day and a very special week as we celebrate 25 years of CNBC-TV18. Joining me now is someone who's been with us through these last 25 years. Christopher Wood absolutely needs no introduction. He was a journalist in an earlier life. He's a strategist. He's a global equity strategist, and he's also, I dare say, a rock star strategist. Someone who actually says it as he sees it, and he doesn't mince words. Chris, it's great to have you with us here.
Great to see you, Prashad. I'm honoured to be on doing this anniversary for CNBC after 25 years, and I've much enjoyed my interaction with the channel during this period, monitoring India's course, direction of travel. And it's culminated this year with, I have to say, an amazingly bullish crescendo.
No, absolutely, Chris. You know, and I think this is such a great time to speak with you, because a lot of questions here in India about what the US elections and the outcome really means for emerging markets and India specifically. So let me put that to you straight up, and then we can follow up on some of these individual points. What do you make of it, Chris?
Well, personally, I don't think for India per se it makes a huge difference. Obviously, for the world, it makes an enormous difference. But for India, I still think India is on track for 6 to 8% real GDP growth, 10 to 12% nominal GDP growth under the current, you know, in the next 5 years for the forthcoming Trump administration. But in the near term, it has the election of Donald Trump has created a negative headwind for emerging markets because it's reactivated a strong dollar. I'm not surprised to see that. My base case was that if Donald Trump won the election, most particularly in a convincing fashion, the likely initial market outcome would be a rising US stock market, a rising US dollar, and a sell-off in the Treasury bond market, which is what's happened. So to that extent, it's made it harder it's reduced the room for maneuver for Asian central banks, emerging central banks to cut rates. But the Indian equity story is not predicated on the RBI about to do a lot of rate cuts. So I don't think it's really a big negative for India per se.
In the US, I mean, the core interplay, Chris, seems to be a stock market and an economy which is picking up pace, if anything, and a central bank which is inclined to keep cutting. I mean, if Mr. Trump has its way, interest rates would be far lower. In any case, I mean, the guidance is that rates will go down quite a bit. I mean, that is a powerful combination for the largest equity market, largest economy in the world. Do you think money will keep going into US assets into 2025 as well?
Well, it's likely that US equities remain well bid going into the inauguration because Trump's administration promises first, the key positive is extension of the corporate tax cuts. The second big positive equity investors are looking at is the expectation there's going to be aggressive deregulation policies. That's why you've seen a big rally in the financial stocks. And there's also hope that energy prices will decline, most particularly as the big expectation is that Donald Trump's going to move quickly to try and address this Ukraine issue because he's made pretty clear he doesn't want to keep funding it. So all these are sort of near-term equity positive. In the medium term, though, which I would define as, you know, going into the middle to second half of 2025, the medium-term issue is what happens to the bond market, because rising bond yields in the US do have the potential at least to derail equities at some point. The other issue for the US stock market is not a macro issue, it's a bottom-up issue, but it's very important because the US stock market is dominated by these big US tech stocks. And the risk for these stocks is at some point the market starts to question the amount of money they are spending investing in AI, because that is going to cut back their free cash flow generation.
No, absolutely, and we will have to track these events. So let's just finish the U.S. points, and we'll come to India in just a bit, Tris, in some more detail. So, you said a few things. Let me first ask you. You wrote in one of your earlier reports when the election was still before the elections actually, that Mr. Trump, if elected, will end, some conflicts, maybe at least one of the two big conflicts. Do you still believe that?
Well, if you like Trump or loathe him, I think we have to admit he has a track record of trying to do what he says he's going to do. So basically, he's been pretty clear that he wants to end the Ukraine conflict. So I think we should assume that he will try and do something to address this issue pretty quickly. He's already had a telephone call with the Ukrainian leader. He's been describing the Ukrainian leader as the best salesman in the world. So that suggests he's focusing on the amount of money the US is sending to Ukraine. So I think he will be trying to end this conflict. But in the Middle East, I think the situation is much less clear.
One of the things you have, and we've spoken about this as well, you said, Mr. Trump has said, his policy as far as energy is concerned is drill, baby, drill. Should we expect sustained lower oil prices from where we are? Although I have to say, it's not as if oil prices have shot up despite, some of the highest levels of conflicts over the last couple of years.
Right. So basically, oil's been in this trading range of $70 to $90. And so the base case is we stay in that range. But there is a risk, there is a potential positive for the market, so we go below that range. The one thing about the drill, baby, drill is the question is, geologically, I've heard arguments in recent years that a lot of the shale energy has peaked. So in terms of production, so it's not clear to me the production will rise quite as much as Donald Trump has been highlighting, but clearly there's going to be a very different policy as regards energy. And that's why not only why the energy stocks have got a bid, but it's also why the refining stocks have been hit. But basically, I think the market's most focused, what's really driving this US stock market higher is the expectation of tax cuts extended and very aggressive pro-deregulation policies. But, we have to remember Trump's policies, many of them are inflationary in terms of moving tariffs. If he really announces these big tariff increases, that's inflationary. If he really throws out illegal immigration and cuts down on immigration, that's inflationary. Moving production to America is inflationary. So there's a lot of inflationary headwinds, which is why my structural view on Treasury bonds remains bearish. I've been of the view that Treasury bonds have entered a bear market since the Fed printed all that money in the spring of 2020. So base case, I'm expecting Treasury bonds at some point to go through 5% on the 10-year and higher, at which point it will start to hit the stock market. But there's one development, one very dramatic development, which has potential to turn my narrative on its head. Because what's been very interesting, we've had this announcement that Elon Musk is going to enter the administration, and Elon Musk has said he wants to cut $2 trillion of spending from the federal government. I mean, that is an enormous amount. If he actually did cut $2 trillion from federal spending from the federal government, that would actually be very Treasury bond bullish. It would be very US dollar bullish, but it would deliver a deflationary shock to the US economy, which in the first instance would be very stock market negative, although the long-term outcome would be very positive. But the question is Elon Musk really going to be allowed to cut $2 trillion from the federal government? That's taking on a lot of vested interests. But if anybody can do it, it's Elon Musk in a Trump administration with the Republican control of Congress.
In your assessment, what's the probability he actually does it?
Well, no, it's not my base case, but I'm just saying we have to keep an eye on this. Because we know what we know about Elon Musk. Elon Musk will do it if he's allowed to do it. If he's not allowed to do it, he'll walk out. That would be my base case. But I'm sure there's huge savings you can make in the federal government if you really look at the detail.
Absolutely. Chris, you said that Trump is known to do what he said he will do. And one of the things he said is he's going to tariff China in a very large way. But he's got Elon Musk on at his side now, right? I mean, and China is very important for Tesla. And you think, we'll see very high tariffs against China, or this will be different as policies, although I think he's campaigned on 60% tariffs, etc. But it's going to be much lower, maybe a little even softer as compared to Trump 1.0.
Well, I have to say I'm a little bit skeptical that Donald Trump's really going to put 60% tariffs on China. If he does, it's going to increase the cost of goods for many Americans. But I believe this is all part of a negotiation tactic. If you listen to what Donald Trump actually says on the tariffs during the presidential campaign, his basic line of argument is that he wants to threaten to raise tariffs to such an extent that overseas companies will be given an overwhelming incentive to move production to the US. So while he will raise tariffs, whether it's 60%, I personally doubt. But I think my view is if I'm in Beijing, if I'm the Chinese leadership, I would have opted to have Donald Trump in the White House, not the Democrats, because under the Democrats' policy would have been status quo. And status quo, as regards US-China relations, is an ongoing deterioration. And the policy which China most dislikes coming out of Washington isn't actually the tariffs, it's this very aggressive policy to seek to deprive China of access to advanced semiconductors. That's what the Chinese really don't like. And so the arrival of Donald Trump does offer an opportunity from a Beijing standpoint to negotiate a new deal with the US. And Donald Trump is intrinsically unpredictable in some respects. He's also intrinsically transactional. So I think from a Beijing standpoint, there's an opportunity to negotiate a new deal. And I think China would willingly trade higher tariffs for greater ability to buy US advanced semiconductors.
So, we earlier had someone who tracks US and global stuff closely saying that the way Trump and Republicans have swept the elections, control of the Congress, control of presidency, it's unprecedented, and it will have profound implications down the line. I mean, over the years, we can't tell exactly how. But listening to you, Chris, it doesn't look like it's going to be as dramatic. I mean, what is your sense? Direction of travel. Yeah.
No, I'm talking more from an Indian standpoint. I wouldn't change my investment strategy in India one iota because Donald Trump's been elected. But it could have dramatic changes in the US. I fully agree with that. Yeah.
Okay. Okay, all right. Now let's sort of close that part of the conversation, Chris, with just two or three things. If you have numbers in your head, the dollar index, middle of next year, where will it be? S&P 500, where will we be? We're at 6,000 now. And give us a sense on the 10-year US Treasury yield as well.
My view is firmly that I personally think this dollar strength is short-term. My base case on Donald Trump is the dollar strength is short-term, but I think it can run into the inauguration. On the stock market, I think a key issue, which I'm not really the expert on, but it is this issue of there's this bottom-up issue of the of the hyperscalers, and if the market starts to protest at the amount of money they're spending on AI CapEx. I think the AI CapEx investment boom continues next year, which is why I still have NVIDIA in my global equity portfolio. But where I've got greatest conviction is that the Treasury bond market will be selling off. And that the only way that, in my view, is not going to happen if Elon Musk is really allowed to do this dramatic surgery on the federal government. And if he does, then the stock market in the US becomes very vulnerable. In a world where the $2 trillion of spending is cut from the federal government, we're going to get a deflationary shock in the US, and that will definitely cause people to invest in equities elsewhere. But as I say, that is not my
Now let's come to India.
That is not my big.
Absolutely. Absolutely. Here in India, foreigners have been continuous sellers. One of the biggest sell-offs that we've seen. I mean, in the last couple of months or so. Are we near the end of it, Chris? What's the sense you get?
Yeah, personally, I think we're having a healthy correction in India, which has been led by the small caps, which I think is healthy. We've had, based on the latest data I've seen, we still have these huge domestic flows coming into the Indian market. And what's happened is we've had rising supply of equities because companies have been taking advantage of the high valuations to raise capital. And so we're having a natural correction caused by the indigestion of the supply. But I think it's all really quite healthy. The good news about the foreigners selling is the foreigners have the ability to buy on any sharper correction. But the really interesting point about Indian equity market this year has been these ongoing domestic inflows.
No, absolutely. It's been quite remarkable. Although at the margin, Chris, some are starting to say that maybe demand also is coming off after 3-4 years, even at the premium end. Consumption is starting to slow down. And it doesn't look like, looking at consumer price inflation numbers in India, that a rate cut is around the corner. I mean, at least not till February of 2025. So, are we at that point where we... Sorry, go on.
Sorry? No, I don't think the RBI is in any hurry to cut rates.
Go on, Chris.
But we have had a bit of a cyclical slowdown. Last quarter, we had earnings downgrades. So we do see a bit of a cyclical slowdown in India, but I don't believe it's anything dramatic. I think it's all quite healthy. The RBI had some preemptive tightening this year in terms of monitoring banks' loan deposit ratios. So I just think there's been some healthy preemptive action by the Reserve Bank of India in the recent past, which hopefully prolongs the credit cycle.
एमबीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ। वो तो उनके एमबीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा, हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग हैं।
Hello and welcome. You're tuned into Closing Bell on CNBC-TV18, and we've been getting a lot of conversations and insights from the Global Leadership Summit. But it's time to get some corporate conversations as well. Earnings are coming in thick and fast. Mr. Baba Kalyani, the CMD of Bharat Forge, is joining us now to discuss the Q2 numbers and the outlook going forward. Mr. Kalyani, good afternoon. Thank you so much for joining in today, and thank you for being patient as well. Apologies for coming to you late. There has been a lot that's happening, but thank you for joining CNBC-TV18. Always, it's 25 years of the channel running now, and your insights have always been very, very helpful for the viewers and us as well. Q2 earnings, this time around, the standalone business where the revenues came in flat this time, Mr. Kalyani, the consolidated business saw a decline of 2.3%. Can you explain how the demand trends are currently? Where do you see demand going in the second half? How does it compare with the first half?
I think fundamentally the Q2 performance was pretty resilient concerning, if you look at the underlying demand situation, which is there. We had a flat top line, but our margins expanded, so we had a better product mix. We had a better cost control, and that was a reflection of that. The real issue is Europe. Europe has gone into a big problem, both politically and demand-wise. We see demands coming down in Europe quite dramatically, and that's the reason why the top line could be a little better than what it was. But overall, we are all our businesses are firing on all cylinders right now, and we will continue to see growth going forward. Our defense business is doing well. Our aerospace business is growing extremely well. Our industrial business is growing very well. JSA has had a fantastic quarter. Our order intake from April to September has been over 2,000 crores. And so things are looking good. We have a few problems to solve in Europe, and I think in the next couple of months we will solve them.
So, considering whatever happens and Europe continues to remain the way it is right now, Mr. Kalyani, is it fair to say second half will be similar to first half in terms of top line and in terms of margins as well?
I think, yeah. I think I would say that.
Okay. Your defense business has done really well, and that's been the trigger point for quite some time now. It's a 67% growth on a YOY basis. Your defense order wins have been around 640 crore rupees in Q2 itself. Is this a growth rate which is sustainable? Because after a point, growth rates usually slow down. Is this something that you would witness in the defense business as well, or it'll continue to grow at that 60% plus mark?
Well, it won't grow 60% plus every quarter, but it will continue to grow at a healthy rate. You have to understand that our defense business is only 2 years old in terms of production and sales. So we've done remarkably well in 2 years. And most of our business, almost 90% of what we are doing now is all exports. So the domestic business is yet to come, and that's now in the pipeline, as you probably have heard in the news. And when that comes, that will be the next step of growth for us going forward.
Okay, all right. So domestic business, how that scales up will be key to track. Mr. Kalyani, in the month of October, the North American truck orders, they were down 6% on a month-to-month basis, but up 2% on a YOY basis. How is demand there? Because the conversation with analysts suggested that some fleets are being cautious as they order new trucks for 2025. Can you give us a sense of what's the on-ground situation?
Right now, the demand is good. Everybody's daily production numbers are still the same as the last quarter. I think to a large extent, it will now depend on the new policies the new government brings in the next 2 months. And we will know more about it probably once the Trump administration has all its cabinet put in place and some policy announcement come. But looking at some of the announcements like corporate tax cuts, and increasing oil and gas and all that kind of thing, I think the demand will continue to go up.
Oh yes, that's been the next big question mark, or I would say the next big trigger. Anybody who has a business in North America, what happens with Trump's policies going forward? JS Auto has done well, revenue growth of 32%, EBITDA growth of 60%. You have said in the presentation as well, this business will continue to register strong performance. Is there a target in place? What kind of CAGR are you looking at for this business going forward? How much will it continue to contribute to the overall revenue pie?
I think we would expect this to grow at least at 20% CAGR for the next 2-3 years. We have a lot of pipeline business that we want to bring into JSA. We have a lot of new customers now, which it didn't have before. We've just got the Best Supplier Award from Vestas from Denmark. So, there are lots of new opportunities that are opening up for JSA, which is good. And I think it'll do very well in the coming years.
Okay, all right. Mr. Kalyani, always a pleasure speaking with you. Thank you so much for joining in today and giving us all your insights. That's the word coming in from Bharat Forge. They expect second half to be like first half. Demand is steady, barring Europe, where there are some issues which the company is looking at solving as well. Well, with that, it's time for a break now. On the other side, all the action from the Global Leadership Summit continues. Stay tuned for that. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air.
Investing.
Stay alive and stay agile and adapt to Rajiv's point. One, I would say, we really defined who we stood for and our values very early on. We didn't define them, intentionally for the first 25, 30 years, but 54 years ago in 1970, we did. And I think making sure that you never compromise on that, making sure that that becomes your guiding light, making sure that you attract people who deeply and truly align to what you stand for, I think is incredibly important, right? I really deeply believe that culture matters infinitely more than strategy, and that can really help make or break a company. The second thing I would say is, we were entrepreneurial. We encouraged people to take on big roles young. We were risk-taking, we were not afraid to fail, and we took lots and lots of chances, some of them that worked out, some of them that failed miserably. You know, we got into the finance business in 1996, which was a major disaster, but we weren't afraid to try things, right? And the third thing I would say is a part of that entrepreneurial sort of spirit, we empowered people, and there was great autonomy. So I was joking earlier, right, that, you know, I'm the exec chair of the company, I can get my computer fixed faster than most people, but if I have to convince our CEO to do something that he doesn't want to do, it's going to be a very, very tough job for me, and I can't just dictate that. So there's great empowerment and great autonomy that comes with that empowerment. I think that's really helped the company as well.
You know, Rishad, I was watching an old interview or broadcast where you were speaking, and you said that, you know, I was trying to figure out when you're trying to hire somebody, what should you look for? Should you look for commonality? Should you think whether you can have a drink with that person? And you were advised none of that. Don't look for commonality. What would be your advice?
No, you know, I was talking to one of my board members and I was saying this. I was like, you know, when I'm looking for someone, do I like this person? Can I have a drink with in the evening with this person? Can I have a cup of coffee with? And he said that's the completely wrong way to look for people. You should look for people who are very different than you. They challenge you. They make you uncomfortable at times. But they're highly functional. And that comes from diversity of experiences, right? That comes from diversity of industries you've worked in, roles you've played, gender, ethnicity, sexuality, your life experiences. It just comes from being different. And I realized at one point, many years ago, I had someone in my team where every time I had to review him, I was stressed. You know, I was like, you know, he's going to push me, he's going to ask me difficult questions, etc., etc. But I found that brought out the best in me. So I'm a big believer in trying to find people and keep people in your team that are very different than you. You don't necessarily have to be friends with people you work with either.
But you have to have people who challenge your thought, right? Great to hear that. Rajiv, to get you in, leadership is not easy. It's lonely at the top, and every leader has a moment of reckoning. And when you talk about companies like Wipro and Bajaj Auto, there could be many such moments. So Rajiv, for you, one point that I always think about was perhaps 98, 99, when Bajaj Auto, ladies and gentlemen, I don't know how many of you remember, 1999 was perhaps the first time that Bajaj Auto first posted a loss in their two-wheeler business. How bad was that for you, Rajiv? Was that your moment of reckoning, or was there something else that's been there hidden in your heart somewhere?
See, first of all, I think it was the financial year 2000 when what had been a very, very successful and profitable company, as you correctly say, lost money on its two-wheeler business for the first time. Fortunately, the three-wheeler business and the spare part business kept us afloat. But before I answer your question, I must make it clear that at that time, it was my father who was in charge of the company, not me. So this problem is not created by me, first of all. But having said that, yeah, this was a difficult time. And to put it briefly, if you read the book, The Origin of Brands by Al Ries, you will see a lot of information which effectively conveys this, that it doesn't matter whether you're in software, motorcycles, or any other business, 90 to 95% of all new businesses, new products and services fail. Now that's really quite a lethal statistic. And this is true across the world, across industries. And what Al Ries teaches us is that they fail primarily because most of those products and services were brought out to serve a market and not to create a market, you know. So when you try to serve a market, i.e. to fulfill demand, and that is what most salespeople want to do, you end up being a clone of someone else, as opposed to creating your own market, as opposed to generating demand as against just fulfilling demand. And that is why my marketing guru, Jack Trout, I was very fortunate to know him, taught me that when you say, give your customer what he wants, that's only half the answer. The other half of the answer is give the customer what he wants and what nobody else apparently can or does give him. And that brings us to the whole point about differentiation. You know, the CEO of Coke said, when it comes to real estate, it's about location, location, and location. When it comes to a consumer business, it's about differentiation, differentiation, and differentiation. The problem with differentiation is it is so counterintuitive, you know, to do something that nobody else is apparently doing and hoping that it will succeed. It's a scary thought. So you tend to follow the herd. And to illustrate, I would give you a quick example that Hero Honda brought out the 100cc four-stroke motorcycle in the 80s. Bajaj Auto, remember, it was my father, was 7 years late with the same thing. And we tried to make the better product. The hard lesson you learn is people don't buy better, people buy different. And how do you make different and not better? This is very key to your success.
And that was quite a difficult and tough learning experience, wasn't that for you? Because for a long time in Bajaj Auto's history, you tried to target the 100cc segment where Splendor, ladies and gentlemen, the Splendor motorcycle you see on the streets of India, that was the product that you were challenging, and you felt that was a waste of time.
Actually, it's a great learning, if I may share that experience that, so they had a 100cc motorcycle, we had a 100cc motorcycle. Piyush Bhai here was our partner on that journey on behalf of Ogilvy. And we struggled and we got nowhere with that in India because somebody else was first to market. However, two things happened. In the domestic market, we switched track from a 100cc motorcycle to the Pulsar, which was different because it was not a better mileage motorcycle, it was a sports motorcycle. And that really marked the turnaround of the company's fortunes in the domestic market. Whereas the 100cc motorcycle, we took overseas to export markets at a time when Honda would not permit Hero to export out of India. And what happened in the end? The same 100cc motorcycle in India, Hero outsold us 5:1. The same 100cc motorcycles in all overseas markets, we outsold them 15:1. It's the same management, same brand, same quality, same cost, everything else being same. The fortunes in the marketplace were completely different, only because depending on who was first to market. So that is why in marketing we say, it is better to be first than it is to be better. That is very, very important.
Right. Rishad,
I don't know if you know this, by the way.
Yeah.
In 1979, Wipro was considering to diversify, Rajiv. And for some reason, we were considering the two-wheeler business because the view was there was a rising middle-class India and people would buy two-wheelers, or the technology business. And for whatever reason, the decision back then was made to get into the technology business. But I just thought I'd share that because he's talked so much about two-wheelers.
That's fantastic. Rishad, what I also wanted to ask you, when we speak about moments of reckoning, in promoter-driven companies, in family-driven companies, there can always be differences. When you're changing gears, when you're changing the leadership at the top. Were there differences in your thinking on how Wipro should chart out its future? In what ways did you mirror the thoughts of your father? Did he give you any advice when you were taking over as chairman of the company that this is something you must follow? Or at some point you said, no, Dad, I'm going to follow my own path over here.
Yeah. Parikshit, it's interesting, and I say this often, and people can take it for what it's worth, but I deeply believe this, which is I don't think we're a family business, right? I'm the only family member today that works in the company. So there's nobody else that works at Wipro. My father is a non-independent, non-executive director of the company, and that's very important, right? And for the longest time, we've been highly professionalized, right? So we are professionally run. I'm very clear on my role. I'm an exec chair, so I play an important role, but I'm very clear on the differentiation between ownership and management and how my role, to some extent, blurs on that. And that's an important point, just in the ethos and the autonomy and empowerment that I talked about earlier. Look, my father and I are very different in many ways, right? But I think the one thing that he was incredibly gracious about is when he retired in 2019, he truly retired, right? Because you can't have a big personality like that on the back of your shoulders. And what he said to me was, look, I'm always accessible and always there if you need something, but I won't be in your way. And he's a demanding board member and asks difficult questions and all of those kinds of things, but is not in my space in terms of doing work, and I deeply, deeply appreciate that. What have I learned from him? I mean, he's unfazed by success. It's not important to him. It doesn't sort of show up. I think I've learned that. The importance of just being grounded and unfazed by success, because good times come and bad times come, and you can't let them ride you too much. A deep openness to learn and willing to say, I don't know. A willingness to say, I need help. A willingness to sort of learn from any level of the organization, right? Just a deep sort of learning mindset, I think, is what I have picked up with him. The one area I would say I'm different is I would probably say I'm a bit more empathetic with people. I understand more easily, and I'm just, I enjoy people more perhaps than he does. And that's just a DNA thing more than anything else.
Right. So what advice, I'm sure there are many top industry leaders here today who will be heading their companies in a few years from now. What advice would you give someone who's being groomed to be a leader, who may take over some point or who has the aspirations? Because one thing you always keep hearing is you've got big shoes to fill.
Yeah.
And you were told that as well.
Yeah. You can't worry too much what other people think. It's exhausting to worry about what everybody else thinks, and everybody's giving you advice. And when you run the race, I think you've got to look to the side to know where people are, but you've got to focus in the front, because the more you focus on the side, the more it slows you down. So I really think you've got to focus and look in front. I really believe that. I would say that's the number one advice I would give. Deeply focus on your own journey. Don't worry too much about what the naysayers say. Don't worry too much about what other people's expectations of you are, because I find those are exhausting and they drain you and they slow you down, right? The big learning I've had for myself personally, Parikshit, is the best you can do is the best you're capable of. So ultimately, that's all you can do. And so if people have other expectations, you're just going to disappoint them, and there's some who you'll delight. But the best you can do is the best you're capable of, and ultimately the journey of competition is against yourself. It's really not against anybody else.
Right. Rajiv, I'm going to take the liberty of citing something that the former semi-chief M. Damodran had once said. He said he met you at a conference and you had just taken over as MD, and he told you that you're taking over from your father, the great Rahul Bajaj. You've got big shoes to fill. And ladies and gentlemen, Rajiv Bajaj said, my shoe size is bigger than my father's. Is that true, Rajiv?
See, my father was well known for being very outspoken, And sometimes this used to boomerang on me, because he used to annoy people who used to then vent on me. So I think God felt bad about this, and he made my foot size bigger than my father's, so that I cannot put my foot in my mouth and talk like he used to talk. So that is why my foot size is bigger than my father's.
Okay. What advice, Rajiv, would you give a leader of tomorrow, possibly your son?
See, I'll share with you some thoughts of the polymath Vaclav Smil, because they resonate deeply with me, and since so many people are on their phones, they're obviously not enjoying our session. So if I say something clever now, they will look up from their phones and listen to us. So these are 5 things that Vaclav Smil said, which I tell my people, and maybe through this, my son is also going to listen to it, because otherwise sons don't easily listen to what fathers have to say. So 5 simple thoughts of wisdom, I think. The first thing he said is read widely and with maximum curiosity. For example, people think I'm weird when I say that my motorcycle strategy is defined more by yoga and homeopathy than by anything else. But learning from yoga and homeopathy has taught me how to make a better motorcycle. So keep learning, read widely and with maximum curiosity. The second thing he said is keep reality first and theory last. Managers have to be very pragmatic. नहीं तो हम लोग के मीटिंग में तो क्या खाली ऊपर की बातें होती है, तो you have to धरती पे आओ थोड़ा, So be very practical, be very pragmatic, keep reality first and theory last. The third thing he said is leave money and status out of it. Basically, pursue excellence in what you do, not because money, value, valuations, market cap, matlab market mein topi lagana, as we call it, and status, fame, name, nahi. Chase excellence, money and fame will chase you. The fourth thing he said is manage your identity. Know who you are and stand there. I won't take his name, but the famous story of the businessman who said to himself that because I make good beer, which gives people a high, I can also give them a high by starting an airline. And then you know what happened. So manage your identity. Apni औकात में रहो, अपने पतलून में रहो, as we say. So that's the fourth thing he said, which means focus, keep your focus. And finally, very important, I think, have skin in the game, which means commitment. I mean, if we say today that we are committed to the future, it's because we have skin in the game. We just put out in July the world's first CNG motorcycle. Nobody's done it before, with fantastic benefits in terms of pollution, congestion, running costs for the Aam Aadmi. And we are investing heavily behind our electric scooters and three-wheelers. So, you know, these are the kind of values I would like to believe that all of us at Bajaj, and hopefully my son too one day, will imbibe and exhibit.
Right. You've spoken about building value, something that lasts, something that is pragmatic, and dharti pe raho. That is something very important, an advice that we need to give to startups possibly and leaders of tomorrow. Rishad, as one of the leading software and IT companies in the world, you must be meeting a lot of startups every day. So when somebody gives you a pitch saying that we'll achieve unicorn status in 5 months, or we have a valuation of, say, $5 billion, $6 billion, how do you see those statements?
Look, that's the first red sign in my view, Parikshit. I mean, you know, you've got to focus, as I think, I love what Rajiv said, and you've got to focus ultimately on building businesses that sustain, and then ultimately value will come. You cannot start your journey saying, I want to build a value of X, Y, and Z. That's, you know, very turning off. And so that's a first red sign that pops up when people talk about valuation as opposed to building valuable businesses. And I think, frankly, I know there's some venture people in the room. I just find that we've overhyped in our country this whole focus on unicornism. Right? We celebrate that too much. And there are thousands and thousands of other companies that don't make it but serve a need and are successful, but they don't make unicorn valuation, and it doesn't make them non-successful companies.
Rishad, you've evolved as a leader. You've worked on yourself. And I think that's a big advice to people out there, that you have to change, adapt, be vulnerable. I don't know how many of you would know, but Rishad started his career with Bain & Company.
With G, actually.
With G.
Okay.
And you've had tough times. All of us, when we're starting, we want to make those sacrifices. We want to put our health, family, mental health, emotional well-being, everything aside to achieve that one goal. We want to show our leader that we're there for the company and we can be groomed for tomorrow. But we're not doing justice to ourselves. Tell us how you've changed. Of course, you've always stood by your values, integrity. But in the last 5-6 years, what are some of the things that you've prioritized and changed your thinking?
No, but I learned this very early on when I was at Bain, and I had a very young analyst working for me. And we were working on this very intense project for 3 weeks in a row, and he prioritized himself on some elements, and I loved it. You know, it was his father's birthday on a Saturday. We were working 7 days a week for 3 weeks in a row on some private equity project. And he said, look, Rishad, I can't come in this day because it's my father's birthday and it's incredibly important. And I was incredibly frustrated, but I was frustrated not so much because he had said that, but because I wouldn't have said that, right? I would have thought of myself as too much of a slacker, not prioritizing the right things, etc., etc. And that's frankly continued really to the last 4 or 5 years when I started thinking a little bit more about myself and my own health. And I've just focused a lot on a few different things. I've focused on sleep. I'm very purposeful about sleep. I'm very purposeful about exercise. And I'm very purposeful about eating right? And the eating right thing began really last year, but the sleeping and the exercise began 5 or 6 years ago. And I've been tracking this closely over the last 5 or 6 years. And I just find it has deeply helped my mental health. Just, how I show up. Just my orientation, my positivity, whether I'm happy or not, whether I'm irritable, whether I'm constructive, whether I have a can-do attitude, whether I snap at people, all of those things. And I've really found that it's so important to focus on these things because we're all human, whether you're the MD of a company or whether you're somebody starting from campus, we are all human. And if we're not focusing enough on ourselves, it's going to show up later on. And so at least one thing we're doing at Wipro very intentionally now is talking a lot about mental health, talking a lot about keeping well, providing access to lots of tools and people and systems where people can access that. And it's remarkable how people are using it and appreciating the fact that we're talking about these things because I think it's incredibly important.
Right. Rishad, one sense that I get from both you and Rajiv is laying out a strategy for the future. I think a lot of us sometimes feel is, what is the role of a leader? Should I be focusing more on marketing? Should I be focusing more on R&D? Getting more investments? Maybe on the finance side? Cost cutting? What should I be really doing? Rajiv, you've often spoken about putting a long-term strategy in place. When you're doing that, how have you defined the role of a leader for yourself and what you need to do for the company?
Parikshit, I like again what I read in another book by Al Rees, where he gives what I thought was a very good definition of the job of the CEO of a company. He said, the job of the CEO is to find the future in the current activities. So what are the fundamental current activities of Bajaj or Wipro or any company? I think there are two things. They are the skills we possess and the cost structure we have. So once again, it goes back to the story of the transition of Bajaj I was telling you about. How do you take the skills and cost structure you have, the people and products you have, the brands and the culture you have, and take them forward and adapt as the outside world changes? You know, so my job, as I saw it, when I look back now over the last 34 years I've been at Bajaj, has been to take it from being a scooter company to a motorcycle company to a global company to an EV company. So my job has been to keep finding the future in the existing activities of the company. But in this, one thing is very, very important, and it is a word that is called alignment. You know, if you read the book of the famous director Quentin Tarantino, apparently, I haven't read it, but apparently someone told me at the end of a very nice book, he says, if 60 years of making films has taught me one thing, it is this: we will all make a great film only if we are all making the same film. So when you go through this transition, you know, if somebody wants to make a big motorcycle, somebody wants to make a small one, somebody wants to make an expensive one, somebody wants to make a cheap one, somebody wants to make a cute one, somebody wants to make a sporty one, we will never make a great motorcycle. So how you help your company and your team adapt in a manner that everybody is aligned, as Guruji B.K.S. Iyengar, my yoga guru, used to say, that yoga is alignment of one foot with the other, the hand with the leg, all of your body with your mind, and your mind with a higher place in the, in the universe. So in the same way, the job of the CEO, I think, is to keep everybody aligned to a higher purpose as you adapt and take yourself forward into the future. That's how I see my job.
You know, Rajiv, today, the automobile industry, and same for Wipro, the IT industry is going through a lot of disruptions. AI is the biggest disruption, and in EVs, the technology is a major issue. Nobody knows where we will finally go. You've often said that this is a moment of reckoning for the automobile industry. The battle is between the established mainstream auto players and how they embrace the new technology, and the startups, or upstarts, as you call them. So who's winning, and what's going to define who wins this battle? And who lasts for the next 75 years?
So there are three terminologies here. There is startup, then there is a word which I like to call most of them, which is upstart, and then us, the winners or the champions, right?
All right, that is an interesting conversation. We'll cut across to the summit in just a bit, but it's market close, so we have to get the rates going as well. The Nifty is absolutely flat for a brief period of time. We were below the 23,500 mark. We recovered from those levels, and at the close line, we are just flat on the Nifty, but with some negative bias. And briefly, it has turned into the green as well. So some green on the screen for a bit. The mid-caps, they have been outperforming for the larger part of the day. 281 points higher on the mid-cap index right now. It's up 0.5%. Small caps also giving it company. So the small cap index also should come up for you on the screen. It's up almost 0.9%. In terms of the movers on the Nifty, of course, Eicher Motors, we have to talk about that stock. Good set of earnings, and that is the reason the stock is higher in trade, and that has been the top gainer as well. 6.5% higher, and giving it companies Hero MotoCorp, the stock is ending higher by around 2%. Overall, if we look at the sectoral gainers, it's really the media index, the realty index that are higher. Auto index also giving it some company. The advance decline ratio absolutely in favor of the advances currently. We do have around 1,400 stocks on the advancing side for 1,100 stocks on the declining side. Major pressure came in from the Nifty FMCG pack, and that is the reason we saw that fall from the highs on the Nifty as well. 1.3% lower on Nifty FMCG, followed by the CPSE index. The BSU banking names also did not support so much, and Bank Nifty, despite that, saw a gain of around 127 points. So basically, that is what happened in the markets today. A flat close, but I think that has come in after a long time after the cuts that we've been seeing in the last couple of trading sessions. So some relief in terms of no more losses for the markets for sure. But we'll do one thing. We'll slip into a short break now. On the other side, we'll get you all the action coming in from the Global Leadership Summit. That will continue. So stay tuned for that.
Online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
He is able to have a dialogue with all sides of the political spectrum globally, and he could become a very important peacemaker.
In recent years, the global economy has gone through a period of continual and unprecedented shocks. This was a period of great volatility, as I have described it elsewhere, quite distinct from the earlier era of the great moderation. Complex and varied shocks of a global pandemic, supply chain disruptions, wars, geopolitical conflicts, and climate change hit the global economy very hard during this period of global volatility. These were not typical shocks dealt with in standard textbooks or having standard policy responses. Now, sailing through this turbulent period has therefore been a daunting challenge for every country, including India. After almost a synchronous adoption of expansionary policies following the pandemic, central banks across the world resorted to an equally synchronous monetary policy tightening when high inflation bounced back in the face of supply chain disruptions and the onset of the war in Ukraine. Overall, these policies across the globe appear to have worked well. That is, these policies of the central banks in tightening the interest rates and tightening monetary policy when the war commenced, and prior to that in loosening and going for an expansionary policy when the COVID pandemic hit the entire world. I think this time around, the policies of the central bank across the globe they have worked well. Soft landing has been ensured, but risks of inflation, as I speak to you here today, but risks of inflation coming back and growth slowing down do remain. I'm talking about the global scenario now. Indian situation has its own characteristics. I'm now focusing on the global scenario. The headwinds from the geopolitical conflicts, geoeconomic fragmentation, commodity price volatility, and climate change continue to blow. During this entire period of great volatility, which I referred to a little while ago, maintaining price and financial stability have posed difficult trade-offs, as evident among others from the banking sector turmoil in certain advanced economies in early 2023. The challenge has always been the challenge for central bankers in particular has always been between doing too little or too late on the one hand and doing too much or too early on the other. Reading the interplay between monetary policy actions and the developments in the financial sector, as well as the evolving situation correctly, and timing the decisions are always challenging. Central banks have by and large performed well this time around. In this challenging global environment, let me highlight certain contradictions globally which we observe at the current juncture. First, government bond yields, I'm talking about the global situation. First, government bond yields are rising even as many advanced economies have embarked upon an easing path through rate cuts, underscoring the fact that treasury markets are influenced by a host of global and domestic factors that are much beyond mere policy adjustments. Incidentally,
Hitendra, an absolute pleasure. Thank you so much for joining us here at the Global Leadership Summit. So let's start by talking about where we currently stand as well as what you see for India over the next 25 years. If you talk to anybody, and we heard many speak about how India is the economic outlier today on the back of the kind of growth rates that we are seeing, as well as the volatility that the world is seeing currently. As you look at the next 25, what are you going to be watching for? What's the prognosis?
Well, I think it's, well, first of all, happy 25th to all of you at CNBC-TV18, right? So I think it's very difficult not to get excited, carried away, full of optimism, full of positivity for what lies ahead for us over the next 25 odd years or so. I think the core issues are all, the core drivers are all known. I guess it's the demographics, very difficult to get a country of 1.4 billion people miraculously under the age of 28, right? I mean, some parents 25 years back were doing wonderful things and we are reaping the benefits of that. The wonderful work done by the Reserve Bank of India and the Government of India on the digital public infrastructure, the Governor spoke about. So far it's transformed payments, right? But the moment it starts transforming credit, that's when you see the next 25 years should be about digitization of credit.
But how close are we to actually taking off on that, the digitization of credit? When do you see the inflection point?
We are live with that. As a country, we are live with that. As institutions, we are live with that. As HSBC, we are live with it. But if what the Reserve Bank Governor said, just as they have created UPI, which is open architecture for payments, if they are making unified lending interface, which is then, it's like the master ring which connects you to all the databases, that has profound implications. So demographics, young population, happy population, digital public infrastructure and its implications for credit, the physical infrastructure, the 11,000 crores that the government is spending. I think amazingly, I don't know if people are aware that the capex spend of the government has grown at a CAGR of about 18 or 19% last 4 years. That's remarkable, right? I mean, small companies don't manage to grow at that rate. This is country's capex. So it's all for us to use. And if 25 years from now, we are not close to the $13,000, $14,000, $15,000 number that defines a developed economy, I think many of us in this room and on the television should feel a little bad about how we misused the opportunity or lost the opportunity.
Well, speaking about missed opportunities as well as opportunities that we should leverage and bank on today, if I were to ask you the single biggest opportunity that from a policy perspective the government needs to double down on, and from an industry perspective industry needs to double down on, what would those be?
I think in my view, since it's a blueprint for growth, I think if we are to do justice to the growth opportunity that I know everybody in this room believes in, I don't think it'll get done unless we significantly increase the amount of investment we do in human capital. Right? We have 1.4 billion people. We have the average median age of 28, 500 million people below the age of 20, but too many of them are coming out of schools, colleges, universities, even engineering, without really being fully employable. So the number one thing I think as a country we need to do is simply increase the amount of spending we are doing on our human capital. We need better primary schools, normal schools, colleges, universities, centers of excellence. We are producing 5 to 10 million STEM engineers, but how many of them are really doing dramatic work here? So if there is one you have to choose, you would choose that. If I can add one more, I think we need to do much more to make the level of women participation in labor force. There are just far too many women not doing anything gainfully for the economy. They're running their homes or looking after their kids or the parents or whatever. I think these two things have the maximum possible implication. But at a here and now level, I think there's a lot of business people here. The ease of execution, the last mile, the enforcement of contract. If, when people ask why is private sector capex not flowing in, why is FDI not flowing in, many reasons are there. There is maybe not enough demand, what we spoke about with the Commerce Minister. But the reality is we do need to make sure that the last mile, the land acquisition, employing people, shutting factories, changing supply chain, just getting your contract enforced, we need to do a much, much better job.
Well, let's address that issue about chasing capital. And we were talking about foreign investment with Mr. Kotak. And, the worry now is what is going to actually happen as far as foreign fund flows are concerned with the new Trump administration coming in. But outside of foreign direct investment or FPI, what about unlocking domestic capital? And we've started to see that happen. I mean, look at SIP numbers, record performance as far as SIP numbers are concerned. How are you seeing that change, and what implications does that have as far as India's savings rate is concerned if we move to this sort of mega financialization that is currently underway?
I think two different issues here, right? Your savings rate is a function of what you earn and what is your inflation and what you consume on, and then where you put that money, whether you put it in SIPs, whether you choose to put it in bank deposits, or whether you buy gold or the more conventional real estate. But there is the good thing to this equity story, which is that people are becoming much more aware. The moment you put money into the market, you start tracking it. You start becoming financially literate a lot more. You understand what is earnings per share. You understand what is earnings, what is listing, and all those things. There is also a side which some of us are getting concerned about. Like, I'll give you an example. I was invited to give a lecture at a university. I prepared very hard. I actually worked quite hard on the speech. I thought I'm going to impress the students. When the speech got over, I said, any questions? And the question was, yes. What do you think of HPCL stock price today? Right? So there is this element also.
I thought that only happens to us.
So maybe because of CNBC-TV18, so you take part of the blame for it. But so there is the great side, which is financial literacy is coming early. There is also the not so great side. In the last 3-4 years, people think this is a way to live. You just get up in the morning, buy a stock, a week, a month, or later it's always higher, as has been the case. And as the cycle now is turning a little bit, so you will get, but financialization of savings is a great development. But financialization between bank deposits and stock markets, frankly, there is no difference. Between gold and this, yes, there is a difference. Between real estate and this, there is a difference. But at a broader level, for the path to the economy's, Viksit Bharat or whatever, I think the main thing is we have to have more people working and earning wages which are increasingly lower middle income and then middle income, etc. And that path, I know lots of discussions today following this discussion as well. That, I think, as Mr. Bajaj was saying, once we all agree that these are the things we need to do, we need to make acquisition of land easier, we need to make commercial courts, hundreds of thousands of commercial courts or things like that, then get behind it. To the point on FDI or FPI, I think my sense is whenever any business can, with the reasonable degree of safety, predict costs, inflation, policies, taxation rates, then they can produce their goods at X cost and know that at Y price they can sell it. That's when the capital comes in. Wherever capital doesn't come in is because most business people are struggling to see with clarity that level of visibility to revenues, costs, policies, taxation, etc., etc. And I think as a country we need to create a FOMO around that, right? You need, I come from a global company. I know that every global company is looking at India very, very closely. Every global board is looking at
What are the questions being asked of you? Of global investors, of your own board, for instance?
You know, the question that is asked often, and global boards are but we are not able to answer properly, is what are the big risks? You know, it's very difficult. I've tried to think about it quite a bit, right? You know, you say this is young population, great, stable government, great, you know, stable.
So it's sounding too good to be true.
Yeah, but it's never, life is never linear like that. So COVID came out of the blue, right? Nobody knew about it like that. But what are the boards? I think 2-3 things. One is, what is the risk that we have not understood? Second is, clearly, are we going to be treated as an equal? Right? Is there going to be fairness of treatment or so? And third is, when does this $2,500, $2,600 per capita income, which restricts demand for many, many goods and services, go at least to 3,500 to 4,000 so that the population expands by a few 100 million or so. So I think everybody is at the crossroad, at least in the Fortune 500 companies, of how much, when do they come in and how big do they go in here? So,
well, you know, since we're talking about line of sight and visibility, let's talk about HSBC and your own plans in India. You've had a long history, a long committed history here in India. Given the opportunities that you just spoke of, as well as the road ahead, I mean, how are you playing the India story from here on?
yeah, so before I answer the question, I can see the HSBC stall right opposite me there. I request everyone to go there. There's a lot of good material out there for people to consume.
Nicely done, nicely done. Very, very well done.
I knew I was going to sit on this chair, right? That's why we kept it there. So, but see, HSBC has been in India since almost 1850 odd or so, right? So we are still called a foreign bank, which I don't know how to get out of that. I mean, I am as Indian as anybody else.
Foreign holding.
But HDFC Bank, you don't call that. Its shareholding is not too different to ours.
Mr. Parekh is right here. We'll ask him that question.
But to answer your question, listen, we are all in on the country, right? We are doubling down. I keep saying internally, we are tripling down or so. You will see us when you go off to Bombay Airport or Mumbai Airport tonight or tomorrow morning. Please see, we'll be all over the place, right?
Yes.
We are trying to. We have seen significant increase in our corporate customers wanting to make acquisitions abroad. Of the 15, 20 acquisitions that have got done by Indian companies abroad, we've been part of 13 or 14 of those. We bank 50% of the MNCs that have a presence in the country. We also bank 50% of the unicorns. Right, so I think we are finding opportunity everywhere and anywhere. As Mr. Premji before us said, the challenge for us is to make sure that we don't try and do everything. Right, I don't want to be in microfinance as well as be the M&A banker of the country. Right, so we got to choose the pockets in which we can do the maximum service. But we are very open for business. We are growing at a rate faster than we ever have in our history, and in the next 5-6 years, we'll hopefully do what the bank has managed to achieve in the last 165 years.
Didn't manage to achieve in the last 165 years, you hope to achieve in the next 5 years. That's the ambition and that's the target that you've set for your team.
No, that's the target the team has set for itself. I'm just agreeing with them.
Well, you know, let me ask you this. Essie, the Chief Growth Strategy Officer and the CMO of Unilever, said that India is the heartbeat for Unilever globally. Is India, HSBC India, the heartbeat for HSBC globally? How relevant is India for HSBC globally?
So funny, because one of my colleagues who was there when the Unilever Chief Marketing Officer was there, she's pasted that statement to me that we need to also do something similarly. See, HSBC is we are the world's global bank. Okay, I know we had the tagline world's local bank, but we really now want to operate as the world's global bank. Any Indian wanting to go abroad, be it a company or an individual, or any individual or a company abroad which wants to come to India, we already have 50% of that market share. We are trying to figure out how to get the balance 50% or so. India is the top priority market for the group currently. We are a fairly large group. Our contribution to the bottom line is growing at a much faster pace than the group one. So I don't want to use the same line because then it will look like copied from the marketing company of the world. But at this juncture, I know our board and our executive committees, when they discuss growth, ambition, what we want to be 5 years, 10 years, 15 years down the line, the number one country that comes there is India.
So HSBC is banking on India.
Oh yeah, of course. I hope India will also be banking on HSBC.
I was punning there, but you know, you talked about how you are catering to Indians who are looking at global markets, Indian companies that are looking at global markets, and this links back to several of the sessions that have talked about that as a theme. How confident do you feel? What's the visibility that you get in terms of Indian companies looking at global markets much more seriously, whether it's from an M&A perspective or actually starting up operations outside?
Yeah, I think the one theme we are picking up, and again to this audience here, if it's relevant, I think a lot of Indian companies are realizing that relative to valuations in India, you are able to acquire quality assets in manufacturing powerhouses like Germany and Switzerland and places like that. That is one. Second, in those countries, as in some parts of India, the next generation doesn't really want to run the business. They would rather cash out. And the third thing, if there are inefficiencies in the way that particular business is being run, the Indian entrepreneurs with their ability to really squeeze out costs, make better supply chains and put management teams inside, I think this is the reason why people are going outside. And I think that trend will increase. Now, whether they buy there and from there, procure the material from here, bring in efficiencies and keep the units there to sell to the rest of the world, that is a case-to-case thing. And I think this is one of the trends that Indian companies are already picking up and need to pick up much more, because you get wonderful technology, wonderful channel, right, a distribution channel, and sometimes strong brands available at a fraction of the price that you could do locally. And that's one way to catapult it. And like I mentioned, of the 20 odd acquisitions in going back last 12, 18 months or so, we've been part of 12 or 13, and we are in discussions with multiple. Also, if I may add, just on the point of Indians going abroad, I think the number of Indian students, for example, going abroad, see, that's a huge thing. And a bank like ours is able to open the account of the student while the worried parents, because Indian parents do like to, I get calls, my beti only has $5,000, and I have to say, it's a lot of money, $5,000, don't worry, she can. But, they like the credit card before they go. And similarly, you can pay university fees. You can pay 600 universities through our app and all that. So we are seeing business growth everywhere, and I'm going to use this platform also to let people know about our product proposition.
Yeah, you've clearly done that many times, Hitendra. You've done that many times during the course of this conversation. But let me end by asking you about the other big change that we've seen, and I see a lot of the young startups here in the audience, and we're going to hear from them shortly. But this move from valuation to wealth creation via the IPO route, via the Dalal Street route, it's taken momentum. We're seeing that momentum accelerate. What's the expectation from here on? And is that a game that you're going to prioritize?
No, so like I mentioned, we bank 50% of the unicorns. We have a lending fund for startups. I think we are the only bank which has about a $600 million fund which is dedicated to lending only to startups. So that means we join many of these companies when they are not even on the radar of the capital market or of the investment bankers or whatever. We know their business a little better than most other people. We know the governance and the conduct and the culture values of culture and values of those organizations. I think it's a wonderful story. Even if 50 companies fail, the one company that creates hundreds of, we saw Swiggy, some hundreds of people have become at least worth $1 million in the last 2 days or so. I think these stories inspire a lot of people. I think the one great change in India, I think definitely we have to accept, is the startup culture. Whatever it has done, and Mr. Bajaj was a little critical of the upstarts, etc. But the reality is many of them have failed once, twice, thrice, 4 times. I mean, 25 years back, if you failed once, you were anyway written off, right? You were just written off by the financial system or by others. So I think it's a wonderful thing. The fact that so many people will become millionaires, many of them will break out and start their own business thereafter.
Yeah.
So it's like a mushrooming of a wonderful practice. I am very happy to be part of it.
I'm going to put you on the spot. End this session with a song.
No,
come on,
no,
you have to do it. You have to do it. A song that gives us a glimpse into the mood and how strong the mood is, what the Josh is like as far as your mood on India is concerned. Go for it.
This is really putting me on the spot. Give me a hint.
Come on. You can do it.
I will just sing Ye Dosti.
Mike.
No, it's there. I'm mic'd up. So, but I think the audience wants to listen to better things.
You have to do it. You have to do it.
You really want me to sing?
Yeah, really.
Okay, ये दोस्ती हम नहीं छोड़ेंगे हम मगर तेरा हाथ ना छोड़ेंगे. Thank you.
Hitendra Dave, ladies and gentlemen, a big round of applause. Thank you very much for always being a great sport and appreciate you joining us here today. Thank you very, very much.
Well, thank you, Mr. Dave.
The feelings take control. The feelings take control. Mama told me to be loved.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A-team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
In 2019, which was only 5 years ago, the total public market cap of venture-funded startups that had gone public in India was less than $10 billion. Today, the public market cap of venture-funded companies that are public is over $100 billion. So clearly, everything has changed. And what we're going to try to do in the next 22 minutes is get our panelists here, who I'll introduce in a minute, to share their perspectives on what they're seeing today, but more importantly, what's going to happen over the next 5, 10, 15 years. Kunal, we're going to start with you. Kunal is, as all of you know, the founder and CEO of Cred. Kunal, you sold your last company, Freecharge, 2017. It's been, what, 3 + 4, 7 years. What's changed in the last 7 years? I gave some sense of what's changed in the last 20 years, but what's changed in the last 7 years? And also maybe in the course of that, just talk a little bit about what exactly is Cred? What do you guys do?
Actually, I'm curious, how many of you use Cred over here? Okay, not so bad. Decent market share. First of all, Rajan, I've been a veteran. I realized that some of the youngest founders who are in the ecosystem, I'm reaching their parents' age now. So it's quite scary, like how the ecosystem is evolving. I exited the company actually in 2015 and not 2017, but and it's almost like 10 years since that. I have been lucky to invest in many, many companies. I have also seen the transformation of the same internet ecosystem and how consumption is completely changing. But I think the biggest change is the confidence that investors, entrepreneurs, and the next set of entrepreneurs are having on the ecosystem. Earlier, it was easy to assume that these guys are going to amount to nothing, and it was almost a topic of ridicule. It's still being ridiculed, as you notice. But the point is that these things are just changing so quickly. And we should all understand one thing, that no matter who we are, we always assume the next generation is absolutely messed up. And thankfully, they turn out to be much more efficient, much more smarter, and go on to do great things. So it's just a matter of time that we are going through this evolution. Coming to Cred, we were fortunate to build Freecharge before, understand how the ecosystem works. The biggest realization I had was that India's consumption is still very concentrated. When you talk about the $2,000 or $2,500 per capita income, if you take the top 25 million families and take them out, the per capita income drops quite dramatically. So when it comes to internet businesses, I would say 80-85% of all internet businesses kind of rely on these 20 million customers in some ways. And we just focus on these customers, and we found that if you can serve them with a very distinct focus, it's not like in the internet companies that you're focused only on 25-30 million customers. Internet's supposed to be this hundreds of millions of customers that you're supposed to be focusing on. We focus on these customer base. We make it easy for them to have good financial behavior. And because we attract a certain quality of customers, we makes it easy for banks, brands, merchants to come and cross-sell things on our platform. It's a simple business model for those who use it, and those who are not using it yet, this is a good time to download the app.
All right, great. Thank you. Thank you, Kunal. Amrit is the co-founder and CEO of Zetwork. Amrit, you should talk a little bit about what Zetwork does. But in a country until very recently where manufacturing just wasn't a thing, right? Like if you go back 5 years, although we had Make in India, manufacturing really wasn't a thing. I think it's great to see India now having some very, very interesting, rapidly scaling manufacturing startups. So Amrit, tell the audience what Zetwork is, but then also talk a little bit about, how come we're seeing manufacturing startups today? What's happening in India today that's leading to sort of companies like yours emerging?
Yeah, so we started in 2018. We are essentially a platform business. We connect small factories with large industrial demand. Our customers essentially want to bring new products to market. Typically, the way they would do it is they would give the order to a large factory, and then those large factories would produce those goods. We created a new model where we partner with lots of small factories to give a similar output in terms of on-time deliveries, quality, etc. But by bringing a lot of new capacity online and introducing it to the marketplace, we are able to offer more choice to our customers and lead to better outcomes. And these are largely for industrial goods and consumer products. Going back to your question, I think, it's an interesting time to be a manufacturing-focused business. Like when we started 6 years back, I think Kunal mentioned this concept of ridicule. We were very ridiculed. Like, you guys look smart. Why are you spending your time on something so unsexy? I think what has fundamentally changed is, I think the public markets have paved the way in some shape or form. There is a lot of appreciation of new stories which are solving not just a make in India problem, but really showcasing our abilities in the global markets. We have definitely seen evidence of that within our company as well. Like a third of our revenue comes from the US. These are companies which used to buy from China before and are now buying product in India. So getting that flywheel, starting with the public markets, seeing maybe some examples in the private markets with us, probably is inspiring a new generation of entrepreneurs to tackle problems which traditionally seemed very hard. I think the VC axiom has always been that hardware is hard. Maybe you have more to say about that, but I think there's more examples today that yes, it is hard, but solvable.
Great, thank you, Amrit. Kapil, let's move to you. You know, the first SaaS, which is software as a service unicorn in India, was Freshworks, 2018. Today we have close to 30 unicorns that are SaaS unicorns, right, building software from India for the world. But until Unicommerce went public, I think this idea that you can build software products, sell it to Indian customers, and build a large company was not a thing. It's sort of like manufacturing wasn't a thing, it wasn't a thing. So Kapil, I think you and your team, huge kudos to you guys. You built Unicommerce, you took it public. So maybe for the group, just tell them a little bit about what does Unicommerce do, but then more importantly, what's happening with Indian enterprises? In fact, last night, I was with an e-commerce company that I told them that I'm on this panel, I'm going to have you on it. They were quite excited. We were like, hey, we use Unicommerce. So talk a little bit about that.
Sure. Thanks, Rajan. It's a pleasure to be here. And I think, I hope each one of you here shops online, and when you're shopping online, the backend of that is powered by Unicommerce. So Unicommerce is India's largest e-commerce post-purchase enablement SaaS platform. We are processing nearly 25% of India's e-commerce volumes. So nearly 1 billion transactions get processed annually through our platform. When you're ordering online, you see the website.
1 billion transactions.
Yeah. So when you're ordering online, you see the website on which you're placing your order, and you see the delivery boy that's coming to your doorstep. Whatever happens in between is getting powered through the software that we provide, which caters to various capabilities like order management, inventory management, warehouse management, all non-sexy things, but that's what is the backbone of whatever the smooth experience that you see while you're shopping online on Flipkart, Amazon, any brand website or quick commerce. The backend of that from the brand side is getting powered on Unicommerce. We work with 3,600 plus brands and sellers across many categories: fashion, footwear, FMCG, pharma. Some of the notable names include Le Mama, the example that you took, Boat, Lenskart, many traditional brands like Imami, GNC, Fab India, etc. And we are able to work across sectors and scale. We took the company public, as Rajan mentioned, early this year, and we were the second most subscribed IPOs of 2024. But it was a great validation that you can build a SaaS company in India for Indian ecosystem and actually grow this to a large scale. In fact, our vision is to become a one-stop shop for e-commerce enablement. And in line with that, we've also recently acquired just this week a company called Shipway, which also gives us capabilities across the entire e-commerce value chain. So beyond just order, inventory management, warehouse management, we can now do courier aggregation, marketing automation. So it becomes a one-stop shop solution for all e-commerce brands and sellers.
Great, thank you, Kapil. And just so those of you that don't follow e-commerce, India's e-commerce GMV, gross merchandise value, is about $70 billion. Over the next 20 years, we should get to about 2 trillion, right? Because China's e-commerce market is around a little over 2 trillion. So, you know, I think a lot of folks wonder why is it that Unicommerce trades at the multiples that you do, which is basically, you know, you power pretty much every single e-commerce company in India. E-commerce goes from 70 billion to, you know, call it 2 trillion, and there you go, right? That's sort of what you get. All right, let's now move to sort of scale of each of your companies, because I think a lot of folks, as Kunal said, used to ridicule startups. I think now it's kind of hard when you have a company like Zomato that trades at 27 billion a market cap. I want to talk a little bit about scale and how quickly companies are scaling. And Amrit, I'll start with you. Maybe to the extent you can, talk a little bit about the scale of Zetwork. And when was Zetwork founded?
2018, yeah.
2018. So Zetwork is basically 6 years into this company's journey. Talk a little bit about the scale that you're at and also what you're seeing, not just in India, but globally, on global appetite for Indian manufacturing.
Yeah, so I mean, last year we did close to 11,000 crores of revenue, of which 3,000 crores was exports. So we made in India and we exported. And yeah, those are numbers which we feel proud of. And I think the more interesting thing is we don't have a global comparable. So when this is something we learned from investors is, hey, are you the Uber of India? Are you the Zomato of India? And we often didn't have good answers to those. And the reason we didn't have answers to those is this is a very unique problem to India that we are solving. And when we started the business 6 years back, that was not very well understood by capital markets. I think somewhere along with our journey and few other companies, that is a big change we are seeing today. We are seeing, Zetok of X or some variants of that. And the key message here is, I think, solving a unique problem which is unique to you is more important than solving, a similar problem which has been done in a different market. And that is where true value can sometimes come in a short span of time.
Got it, and thank you, Amrit. So I want all of you to notice this, right? Like, company was launched 6 years ago. It's got 11,000 crores of revenue, 3,000 crores of exports. And it's an N01 company. What we mean by that is it's unique when it started, right? Now there are other companies that are trying to replicate it. In fact, I was at Google for 8 years, and every single day somebody would ask me, what's the Google of India? Well, the Google of India is Google, but the cred of India is cred, and the cred of the world is cred. And so is Zetwork. And I think that's what you're seeing in the Indian ecosystem today, right? Kunal, let's go to you next. To the extent you can, share the scale, not just in terms of users, but any other financial metrics that you can. As well as I want you to share one insight about the Indian consumer, because you have an insight a day, Kunal, on what's happening with the Indian consumer.
So cred, just like Zetwork, we will complete 6 years in 2 weeks from now. And it feels like forever because most of our building was during the COVID time. We currently command a large market share of, let's say, the affluent customers of India and kind of credit-worthy customers of India. In terms of scale today, nearly 35 to 40% of all credit cards in India are managed on the platform. And what we do on top of that, we cross-sell a bunch of things. We are north of $300 million of revenue. A lot of the stuff is public and growing quite rapidly. But the more interesting thing, Rajan, you'll remember, we had no monetization 2.5 years ago. So all the monetization happened in the last 2.5 years. We were building the platform and distribution before. So, and thankfully, we are operating in a category where the gross margins are quite high. We kind of focus on the business and operate as a pure internet business. On Insight, Indian consumers are unique, but I'll talk about something different than Indian consumers. While we see all these startups listing, the one unique thing that is different than what it was before, for the first time, we see wealth sharing happening at the scale that last time we saw this was Infosys, where employees made a lot of money, but now we are entering a time where a large percentage of employees of these companies that are getting listed are getting wealthy. And for the first time, we are moving away from just pay me salary and be happy, and to moving into the stock. And that's going to create a new wave, in my view, because I've never seen a lot of people from startup joining these big companies, but I'm seeing a wave of all the execs now moving to this side, because now everybody has tasted the blood of stocks.
Absolutely. And thank you, Kunal, for sharing that. So I want you all to keep in mind, Cred was started 6 years ago. 2.5 years ago, Cred had zero revenue. And today it's over 2,400 crores, which is the last published number. I know it's much higher than that, today, right? So the pace at which Indian companies are generating real revenue is quite incredible, by the way. And you'd be surprised how profitable both these companies will be very soon. All right, let's move to Unicommerce, Kapil. Talk a little bit about, it used to be that Indian enterprises, with the exception of maybe even the top 100 large companies in India, right, really didn't want to pay a lot for software. But that is changing. But tell us a little bit about what's changing, enterprise behavior, buying behavior.
I think few things that are changing. One, we are seeing this shift from on-prem to SaaS because the use cases are becoming very complex now and they're fast evolving. Like, we are operating in an industry like e-commerce where things are changing very fast. Like direct-to-customer, omni-channel were fringe use cases pre-pandemic, but now they are becoming mainstream. Every brand wants to have a D2C web front. quick commerce until last year, everybody was questioning whether it will survive or not. And today it is a salient contributor to many of the categories. It's changing every quarter, every 2 quarters. And that's why we are seeing enterprises shifting their tech spends to SaaS solutions, because they can keep up with this changing landscape, because it's fast evolving. And more importantly, now it requires a strong interplay of different systems talking to each other, which can only be achieved through SaaS. The other thing, the other notion, other myth about Indian enterprises is that they will make you build a moon but pay pennies for it. That's changing. I think Indian enterprises are seeing value of a credible SaaS solution and are ready to pay for it, because they are able to take away this big complexity out of their head so that the businesses can focus on their core. A lot of e-commerce businesses realize that they have to deal with a lot of complexity on the user side, so they can give it to Unicommerce to manage the entire supply chain, and then they can focus on their core completely. And we are increasingly seeing even mid-sized enterprises ready to shell out money, give reasonable pricing to be able to scale the enterprise size. And that's why now with Unicommerce, there is an example that you can actually build a large business, profitable business, selling to Indian enterprises and make money out of that.
Got it. Okay, great. I'm going to now go to fundraising, both in the private markets and the public markets. I'm going to start with you, Kapil. As I said, 2019, which was 5 years ago, the market cap, combined market cap of all venture-funded startups in India that had gone public was less than 10 billion. 5 years later, that number is over 100 billion, right? And if you go back to 2019, there were less than 5 venture-funded startups that had gone public, both India as well as anywhere in the world. That number today, if you look at venture-funded startups that have gone public, that number is over 30. And every year we expect that number to double, okay, every year. 30 will double every year. So I want to obviously start with you, because the biggest thing that's happened to Indian startups is IPOs. Every startup wants to get profitable, go public. One big lesson you've learned taking Unicommerce public, and this is actually both for the startup entrepreneurs in the room as well as watching.
I think it is now very heartening to see this trend of this growth at all costs getting debunked. I think it is an era of sustainable growth where I see even young founders being very, very conscious about building unit economics. Sure, you can invest for growth in the beginning, but there is a path that right from the beginning, founders are keeping that in mind. I think one of the things that was really liked in our story was that we were growing consistently and we had very stable financials. We were profitable for many years, and that is one thing that was really appreciated. And obviously, e-commerce, we've just scratched the surface. Like in India last year, about 4.5 billion shipments were processed. If you compare that with China, 130 billion plus shipments were processed. So there is a huge opportunity as far as e-commerce is concerned. And I think if whoever comes to me for advice for taking company public, I think the biggest advice is that you have to first demonstrate consistent financials, profitability for a sustained period of time. Many founders are thinking that we do it for 1 or 2 quarters and then take the company public. I think what the public market is looking for is sustained financial growth and sustained revenue growth. You cannot have these troughs and crests of growth. Sustained and consistent performance. I'm a big believer of compounding, and that can only come through sustained growth in revenues and profits.
Terrific. So I'm going to ask both of you a question. You can decide not to answer it if you'd like. This wasn't in the prep questions I sent you guys. So India today has Zomato's 27 billion market cap. InfoEdge and Make My Trip are both north of 10 billion market cap. Swiggy went public yesterday, 10, 12, 11, 12 billion market cap. So we have 4 companies, venture-funded companies that have gone public that are over 10 billion market cap. Every year, our projection is every year India will have 5 companies going forward from 2025, 4 to 5 companies that will go public with north of 10 billion market cap. Okay, we are beyond the sort of 500 billion to a billion market cap. I'm not saying what your market cap is going to be because nobody knows. But when are you guys going to go public? And you don't have to give an exact date, time, month, etc. But like rough sense of Amrit, when do you think?
I read an article yesterday that we're going public. So
what did the article say? I didn't read the article. So what did the article say?
No, I think we're thinking about it. Probably, I think, great examples here. And there's a lot of people have paved the path. So we're thinking about maybe next year or the year after. Yeah.
All right, 25 or 26, Kunal?
I don't know the answer, but I think the best question to ask any startup is, when are you going to make a lot of profit? Because if you do that, you can decide to go IPO.
Okay. Let's build on this. When is Cred going to make $1 billion of FCF, free cash flow, a year?
That's a great question. If we operate in environments where a lot of businesses that we do are controlled through regulatory environments, and a lot of the times we have to choose business models and choices as the regulatory landscape evolves. We operate in a market where India's 50% of PAT and 50% of market cap are in financial services. And all fintechs put together today do not earn more than 0.2% of that profit or revenue right now. So the answer to that is that we're operating in the largest category that exists. It's a matter of time.
Yeah, and also, just to build on that, like Zerodha, which is bootstrapped, has $1 billion of revenue and 500 million of free cash flow already, and the company's never raised a paisa. Okay, we are a little over 2 minutes left. So last question, I'd like each of you to talk a little bit about 10 years from now, right, a decade from now, how big can each of your companies get? And it can be revenue, it could be users, it could be whatever metric you'd like. And then that's question one. Second question is, what do you think will happen to our startup ecosystem 10 or 15 years from now? Some characteristics, in whatever dimension you'd like. So I'm going to start with you, Kapil.
I cannot comment on the revenues, but our revenues are linked to the number of transactions. As I mentioned, there is a significant headroom of growth for the transactions. Just looking at China's example, China is already 30 times that of India's transactions. And the good part is we are in an industry like e-commerce where things are changing every quarter. So we are seeing this innovation happening every quarter. So I think we are interestingly at a cusp of 3 trends, which is e-commerce, supply chain, and technology. There are interesting things happening on each front. AI is like an overabused word now, but we are, although it's not come into the supply chain space as much as it has probably done in marketing and support yet, but we are seeing very interesting developments happening in the e-commerce technology space, which is to do with omni-channel retail technology. Similarly, on supply chain, we are seeing a lot of innovations on automation, robotics, etc. coming in. So I think 10 years, like, it's hard to predict. Like 2 years ago, who would have thought that D2C omnichannel will become mainstream or quick commerce will become mainstream? So 10 years is a very long time frame, but a lot of exciting stuff is going to happen in e-commerce, in supply chain, and broader technology sector.
Got it. So like 10, 20, 30, 40 times bigger. Got it. Kunal, we'll go to you next. 10 years from now, how big is Cred?
27 to 30% of US market cap is tech companies. India's market cap on tech companies is probably less than 2%, 5%, whatever you want to put it at.
It's about 100 billion on 5 trillion, 2%.
Yeah, 2%. And I told you 2 metrics. One is that tech will become highest part of market share. Financial services will remain 50% till we become developed nation. So let's call it till Viksit, we're going to be largely financial services on market cap and something. When you combine both of these Venn diagrams, you can easily imagine a few $100 billion companies. We wish we are one of them.
There we go, 100 billion market cap next 10, 15 years. By the way, we do think that India will have its first $100 billion market cap venture-funded company before the end of this decade. Maybe it'll be, but there's a few others that are in the running. Amrit, Zetwork, let's wrap with you. How big can Zetwork get?
I mean, again, I'll just answer it thematically. Like, we sit on 3 very important themes. We are a very big part of helping the Indian economy grow with making manufacturing more efficient. We're helping India replace dependency on China, and we're also helping the world reduce dependency on China. I think in 10 years, it is easier to predict what will not change. Our customers will want goods cheaper, faster, and better. And hopefully, we are the partner of choice for the world's leading brands to participate in that journey with them.
There we go. All right, with that, we're going to wrap up. Let's give a big round of applause to our 3 founders. Thank you.
Thank you, Rajiv Anandan, for taking us through the expert panel with startups, not upstarts. Thank you very much for that conversation. Now, as we look at 2 key drivers...
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है, तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। एफआरबीएम जो है वो 3% से नीचे है। ये आरबीआई
डेफिसिट 3% से ज्यादा हो गया है, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। आरबीआई के
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट,
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो आरबीआई की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, एफडीआई का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देगी, बंद नहीं होगी। और ये वेलफेयर स्कीम लाडली बहना चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमवीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आपके 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजीत पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री। हम एक टीम बनकर इस चुनाव को सामने जा रहे और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे। और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे या
बैठेंगे हम?
I certainly believe they should cut interest rates. Growth needs a further impetus.
I think the next monetary policy is coming up in the first week of December, so I would like to reserve my comments for that.
India is known as the heartbeat of Unilever. It is an important pulse of the Unilever business.
India needs to improve ROTI, R-O-T-I, return on time invested. We have to move from parathas and everything else, kulchas, to getting really thin, good rotis which give us quick results.
We have been the biggest beneficiary of birth of CNBC-TV18, personally as well as the firm.
Top policymakers, corporate leaders and market experts have congregated in Mumbai as CNBC-TV18 celebrates its silver jubilee. Here's a quick recap of the big newsmakers and the headlines. The first big newsmaker of the day is Union Commerce Minister Piyush Goyal. He called for the RBI to reduce interest rates and give growth a spurt. Speaking at the Global Leadership Summit, Goyal also called for food inflation to be de-linked from the headline inflation. This was also a recommendation made by the Chief Economic Advisor to the government in his last economic survey. RBI Governor Shaktikanta Das was also at the event. When asked about Minister Goyal's remarks, Governor chose to keep his cards close to his chest. Take a look.
I certainly believe they should cut interest rates. Growth needs a further impetus. We are the fastest growing economy in the world. We can do even better. And frankly, the largest component of inflation is food inflation. I think it's an absolutely flawed theory that food inflation should be considered while deciding on the interest rate structure. Food inflation has nothing whatsoever to do with managing inflation. That's a demand-supply situation.
Just before you came on, we had the Union Commerce Minister telling us that he's worried about interest rates and was asking that food inflation should not be counted, that there should be an interest rate cut. Any response at all, sir?
I think the next monetary policy is coming up in the first week of December. So I would like to reserve my comments for that.
Commerce and Trade Minister Piyush Goyal also called on India Inc. to get competitive with pricing to tap into the demand India has to offer and capture market share. He also welcomed Elon Musk, Tesla and all global electric vehicle makers to set up shop in India.
I think it's time that industry also and businesses also look at consumer choices and consumer demand for more attractive pricing. I think if smart business people start offering better pricing, better value for money, I'm sure the market will give them a boost. I personally am one of those who believes that economies of scale, that the huge demand that 140 crore Indians provide, the demand of 1.4 billion aspirational young India, the demand that our growing economy, our growing income levels offers is unmatched. That's a choice that Mr. Elon Musk will have to make. We will be very happy to welcome all the companies from across the world to come and invest in India, to make electric vehicles in India. This government over the last 10 years has consistently focused on sustainability. We are giving a number of incentives and schemes to promote more and more adoption of electric vehicles through our FAME scheme, through the recent PM e-bus Seva Yojana.
And from one big newsmaker to another, RBI Governor Shaktikanta Das cautioned that risks of inflation are coming back globally despite a soft landing. But he also said that Indian economy is sailing smoothly despite global turbulence. Delivering the keynote address at the Global Leadership Summit, Governor Das asserted that the RBI is taking a very consultative approach to expected credit loss framework.
With regard to the ECL framework, that is expected credit loss framework, even after issuing a discussion paper and receiving stakeholder comments, which we got examined by an external working group, we now propose to issue a draft circular for implementation of ECL. So the draft will be followed by issuance of a final circular. Again, we will get comments, and we are adopting this very careful approach because it, the introduction of the ECL framework marks a major transformation in the way, the assets, the stressed assets or the buildup of stress or the way the assets get classified. Today, India's economic growth remains resilient. Inflation is expected to moderate despite periodic humps, and the external sector is robust. Without being complacent, let me end by saying that the Indian economy has sailed well and sailed very well through the prolonged period of turbulence, and it exhibits resilience in the face of constantly emerging new challenges.
And speaking of inflation, the wholesale price index for October accelerated to a 4-month high of 2.36%. This was largely due to a rise in food prices. Food inflation quickened nearly 12%. Potato prices are up a massive 79%, and onion prices are up 39%. Onto the market action of the day. Sensex and Nifty declined for the 6th straight day as the sell-off continues on Dalal Street. The losses were limited today as the market swung between red and green for large parts of the trading day. Mid-caps and small-caps managed to buck the downtrend today, but this has been another week of sharp losses. Sensex and Nifty declined 2% this week. The mid-cap index is down 4%, and the Nifty Bank index is down 3%. Barring the IT index, all sectoral and indices ended the week in the red. Here are some top market experts at the CNBC-TV18 Global Leadership Summit with what they make of the current market environment.
The price that you pay is the only thing you control as an investor. So when there are times like what we're going through now, is not the time to lose the faith, but to actually double down. So enter at good prices. The soil in India is fertile for entrepreneurs and business. So stay the long haul because you will compound a lot of money. And 3, back the right leadership. You can be in the best business with the wrong jockey on the horse, as you call it. But if you find the right jockey, he's going to make even a stupid horse run well.
What has happened for the first time in 75 years, I don't think people have understood that, is that first time a US president has unchecked power. He has the House, the Senate, the White House, the Supreme Court, the popular vote. If any Republican opposes him, he will use his base against them, so they will not be elected. The Democrats are in a state of shock. They cannot do anything because they tried impeaching, prosecuting, criminal trials. Nothing has worked against him. And now the worst fears of the America First MAGA movement can now be seen being implemented. So I'm really afraid that they might say, we'll put tariffs on there, which are economically suicidal to do.
There's a clear challenge in the earnings not coming through. And so when does it work? Like Dr. Narayana was saying, the demand, at the end of the speech he said, demand has to be looked into and it should be discussed. So I think what all macro managers they will do as we go forward, it will come, right policy decisions will be taken at right time. So we have to have a little more patience. Maybe the earnings growth may take another 6 months. Next year could be roaring one. So, but it will come, that much I know.
India's trade deficit surged to $27 billion in October from $20 billion in September as imports grew faster than exports. Goods exports rose 13.4% in October, reaching $39.2 billion, but imports climbed 20% sequentially to $66.34 billion. The widening gap has surpassed economists' expectations. Kotak Mahindra Bank founder Uday Kotak shared some ideas that could help India transform by leaps and bounds in the next 25 years. These include a disproportionate spending on defense, more open trade borders, among others. That's not all. Kotak also said that India needs to improve ROTI, his self-coined acronym for Return on Time Invested.
You're getting into a world where power is power and raw power will matter. If India has to become a global power of a scale and size which we aspire for, India needs to disproportionately get stronger on its defense from where it is. I see a lot of global companies having their brands in India. I would love to see more Indian brands globally. There are so many businesses here which must have the courage to go out and say that we will have our brand, consumer brand, globally. And frankly, on that, India is a long way away. If you look at quick service retail, India is a unique country where it is working. Most countries in the world, it has not worked. So that's where Indian innovation has made it work. It's a very good sign. It's positive that we can do things which the rest of the world has not succeeded in. And from that point of view, some of this value creation in India is real and sustainable. There's one thing for India to transform into the future. India needs to improve ROTI, R-O-T-I, Return on Time Invested. When we look at execution of projects in our country, anywhere, I'm not talking private sector, public sector, wherever it is, chalta hai. TK approvals have taken us 6 more months. I've got labor shortage. I don't have this machine imported. The concept of time and importance of return on time invested. Therefore, India has only 23 years to go. And if you want to be a developed country with $15,000+ per capita, this kind of roti is a tough one.
On that note, it is time for us to head into a short break. But coming up next, more newsmakers from the Global Leadership Summit. When we come back, stay tuned.
का क्या बड़ा हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy?
Welcome back. CNBC TV18 is celebrating its silver jubilee with a grand global leadership summit with top policymakers and corporate leaders. FMCG firms have been under pressure due to urban demand concerns. Addressing this, Rohit Java, the MD and CEO of Hindustan Unilever, said that it was time for the company to focus on increasing market share and improve the quality of their brands. He added that now was the time to keep calm and carry on, and that demand would make a comeback.
Give or take a few quarters here or there, and we had rural discussed a year back in a similar forum, and now rural is coming back. We're discussing urban today. So we should just stay the course and remember to do 2 or 3 things. Number one, focus on becoming better every day. So be superior, offer our consumers the best solution. So focus on market share. Number 2, increase the quality of our brands, make sure that they are the most unmissable, and keep investing in market development. Because this market is about development of categories and growth, so therefore we must stay on strategy, come what may, in whichever market conditions. So that's what I'm telling myself and everyone in the company. Keep calm, carry on, and keep developing the market and investing for the future. Most categories certainly we play, which is totally free market, is very, very competitive. We compete with local players, regional players, global players, D2C players. So I think pricing, we have to be very, very lean to make sure that we are just rightly priced for our brands, and we have portfolio brands ranging from Clinic Plus on one end in hair to Tresemme, and we'll be going up further in that market. So we serve all segments, from 1 rupee sachet all the way to a 600 ml or a liter bottle.
Rishad Premji and Rajiv Bajaj, the two honchos at two very successful legacy companies, shared their views on leadership at the summit. While Rishad explained why differentiation was key when it came to hiring talent, Rajiv Bajaj had an advice for budding business leaders: keep reality first, theory last.
You should look for people who are very different than you. They challenge you. They make you uncomfortable at times, but they're highly functional. And that comes from diversity of experiences, right? That comes from diversity of industries you've worked in, roles you've played, gender, ethnicity, sexuality, your life experiences. It just comes from being different. And I realized at one point, many years ago, I had someone in my team where every time I had to review him, I was stressed. I was like, he's going to push me, he's going to ask me difficult questions, etc., etc. But I found that brought out the best in me. So I'm a big believer in trying to find people and keep people in your team that are very different than you. You don't necessarily have to be friends with people you work with.
Again, it comes back to being agile, to adapting to the future, and doing it in a certain way. Again, to explain myself, I will use my experience from yoga. Guruji Iyengar once told me, the purpose of yoga is not the asana. The purpose of yoga is to use the asana to know yourself. So my goal at Bajaj actually to win is, Bajaj should become the most boring company to work in.
Okay.
Whether you're working in R&D, operations, supply chain, marketing, there is no need for so much activity and noise and strife on a daily basis.
Okay.
And outlining their 5-year growth plan, Peter Elbers, the CEO of Indigo, expects the firm to double in size over the next few years, while Rohit Java, managing director at CUL and CEO at HUL, said that the company will focus on gaining market share across segments over the next 5 years. Take a look.
If we want to compete and bring India to the global stage, we need airlines matching that size. And Indigo clearly is going to be one of them. We're going to double in size in the next couple of years. Today we have a little over 400 aircraft and we have another 950 on order. So that's sort of the growth trajectory we're in. The value-conscious consumer will be there, whatever market segment you're in. And I think at Indigo we serve all these different market segments. But that in itself, and I think that's an incredible asset for Indian companies, because if you can address the Indian market, the value-conscious, price-sensitive, cost-driven market, you should be able to compete international. So I'm very confident that with our international expansion and our Indian cost levels and competitive levels, we should be able to compete.
Most majority of business continue getting share, and the way to gain share in a market as exciting as this in the medium term is to grow the market, because that's really how you get more competitive.
Okay, so gains in market share while growing the market. Peter, the number.
I would line out the number of 200 million. Today we welcome 3 lakh customers a day, 100 million a year. By the end of this decade, in 5 years from now, we should be double the size what we have today. 200 million a year.
200 million a year. That's a good number to go with, Santosh.
Wow, I heard doubling in 5 years by certain pundits here on the stock market side, but at least for automotive, even if it is 1.5 times, so 4 million going to 6 million should not be bad in terms of automotive market.
And with that, it is time for us to head into a short break. We will be live with the Global Leadership Summit in a couple of minutes. Keep it with CNBC-TV18.
2018 25th anniversary. It's great to have you. And what we are discussing tonight, ladies and gentlemen, is whether we are at a breakout moment as far as India's manufacturing sector is concerned. So straight up, Mr. Jindal, we had Uday Kotak here this morning saying that India needs to up its game as far as competitiveness is concerned. We can no longer be protectionist on trade. We need to be far more liberal. How do you respond?
So just before coming here, I heard this comment and I said, Uday is not in manufacturing.
So he can make that comment freely, is it?
So I wish he was in manufacturing, then he wouldn't say this. So I was saying that, we are not yet the factory of the world. Let us first become the factory of the world, and then we should open up our doors for competition. Let there be no tariffs, nothing. I mean, United States, even after, let's say, 100 years or 150 years of developed nation status, even today they have tariffs. Europe is putting tariffs, right? And we are saying that we should open up. Then we will kill our manufacturing here. We are not a great manufacturing country in any case. Today, our manufacturing GDP is only 17% of our GDP, right? And we must get to 25-30%, what China is. But if you open up and we become liberal, then we will kill our industry.
So you talked about tariffs. Donald Trump says tariffs is the favorite word that he has in the dictionary, and he has promised that he is going to go full throttle as far as tariffs are concerned. What is that going to mean? We don't know the quantum, we don't know what finally will happen, but given the threat and what he's done in his previous term, what will it mean?
No, what Donald Trump is, in my opinion, he's very clear. He is a very clear-headed guy, whether right or wrong, but he has a clarity of thought. And he says that for me, America is first. I want to build America. I don't care about the world. For me, America is the world. And therefore, I want my industry to grow. I want America to grow, American industry to produce goods. It's not that Chinese should supply to me and then I will consume. I don't want to become only a consuming country. I want to produce and consume. So therefore, I want to put tariffs. Yes, tariffs do make you, let's say, lethargic. You become more uncompetitive to an extent. So therefore, you have to gradually bring down the tariffs to become competitive. But you have to allow the kid to grow up before you start running the race.
So let me throw that argument back to you. You said you have to allow the kid to grow up. So where are we, sir? Haven't we adulted yet as far as Indian manufacturing is concerned?
Not at all. Not at all. That's what
Teenager or preteen?
Preteen.
Preteen?
Yeah, we are just kind of 4-5-year-old.
Really?
Yeah, absolutely, in manufacturing.
Yeah.
Because you see, China, if you open up the records and see, China in 1990, what kind of protectionist China were? In 2000, what was their protection levels? And what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have 0 tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
So you're saying that there is a case for higher tariffs to be imposed?
I'm not saying higher tariffs, but there has to be, the government must have a very clear view that what they want. They want the heavy industries to come up in this country. Because steel industry, for example, I'm just taking steel as an example because I belong to steel industry. If you don't want the heavy industries to come in India, you want to rely on Chinese steel industry to build Indian ecosystem, Indian SMEs and MSMEs. I have no problem. I can go somewhere else and invest. I don't have to invest here. But I love this country. I would love to invest here. I have grown here. I have earned my bucks here, right? So I would love to invest here. But this thought that MSME and SME is more important than the heavy industry. If the heavy industry dies, MSME, SME dies. So you have to. You're
sounding pretty sanguine about growth as well as the future.
Not really. I mean, yeah, but this is a fact that you have to, because steel industry needs huge investment.
Yeah.
Right. So for making huge investment, you have to make profits. If you can't make profits,
fair enough.
Then you can't. My shareholders will not give me money to invest, right? So then I can't build more industry. Today, for example, India needs 20 million tons of steel every year, which China needed, let's say, in year 2000. We need it today. So 20 million means $20 billion of investment every year. I don't think if any other industry requires that kind of investment. We are willing to do that as an industry. But there are only, in every country, there are only 4 or 5 players which invest in any industry, right? So $20 billion amongst 4 or 5 players is a huge investment.
Yeah.
So which we are doing, but if we don't make money, we can't invest.
Okay, so let's talk about, you said that, if the conditions are not right, you'll go elsewhere and invest. I mean, in a matter of speaking, I'm not saying that you're going to do that, but I'm talking about, for instance, your own international plans, your own international expansion in markets like the US, for instance. Are we going to see more of that being built out? Personally, no.
As I said, I love India. I love to expand in this country. And this is my karma bhumi. So I want to do here, and but I want the right policies. I want that the country must really think about it, that how to develop the heavy industries.
So what do you want? What is the number 1, 2, 3 thing you want from the government?
For example, we cannot be a country which exports minerals and import finished products. We cannot be. There has to be a complete no. I've been advocating this policy for a long time, more than 20 years, that please don't export minerals. Please allow Indian industry to consume the minerals, add value, and export the products, right? But we are exporting minerals and importing finished products. This is a complete no, number one.
Okay.
Number two, there has to be a level playing field.
Right.
A country like China, which has got huge surplus, nearly 500 million tons. We consume 150 million tons of steel. China exports nearly 150 million tons of steel. So therefore, there is no way that we can compete with China. I mean, it's not that we are not competitive. We make much more profit in our balance sheet in a normal year than the Chinese steel companies do. But the Chinese are, they are all state-owned companies.
Yeah.
And for them, profit is not very important. It's more like a job creation. It's an ego-boosting thing that every province has this steel plant.
Yeah.
Right? So that's their thought process. So they go on expanding their capacities. Because, one state says that, oh, Shanghai has bigger capacity than Beijing.
Yeah.
Or Shaanxi has bigger capacity than Luzhou. That kind of thing they have, competition.
Right.
Healthy competition. But therefore, they don't care for the profits. But we don't make profits, then we don't have state exchequer writing check for us. Then we don't get money.
Yeah, that is one of the aspects of Mr. Jindal. It's almost a blow-hot, blow-cold relationship with China, isn't it? I mean, you just talked about all the reasons why we should not do business with China. And through the COVID period, you were very clear we shouldn't do any business with China. But now you're doing business with China. You've been a joint venture for the electric mobility space with a Chinese company. So do you believe that there is a need to be pragmatic on how we engage with China?
No, absolutely. With any country. In fact, even Pakistan, for that matter, we should be pragmatic.
To deal with Pakistan?
We should be pragmatic.
Yeah.
We should not say that no, nothing doing. So when I said we should not do business with China when Galwan happened, because I was very clear that we cannot deal with an enemy state. Pakistan, for that matter, is an enemy state.
Yeah.
But still, if we work properly, with a control mechanism, we should open up and do business. Because
with Pakistan?
Even with Pakistan.
Okay.
Because a very poor neighbor will always hurt us. So therefore, we should think, we should have a long-term, but this is not a foreign policy discussion that we are having. But my point is that with China, we should, because China has already developed this technology on electric vehicles. Today, 60% of their new car sales are electric or new energy. India, we have 2%. And this is the way forward. We import all our fuel for the cars. All petroleum products are imported, 85, 90% is imported. So it's in our interest that we transition ourselves to a technology which is domestic, which is local technology, local.
So bring the
raw material.
technology in from China, but manufacture in India.
Exactly, absolutely. Because technology exists in China. We must develop it over time in India, but we must bring the technology and develop the products in India.
I want to understand from you, what is the aspiration now on the EV side? I mean, you've got this joint venture that you've inked with MG. Take me through what we should expect in the next 5 to 10 years as far as JSW's EV ambition is concerned.
So the idea is that to give the consumers a very good product, very good quality at affordable price in the EV spectrum. And I believe that JSW can do it extremely well.
Okay, so that's the proposition, but what does the roadmap look like? What are the numbers that you're targeting?
Numbers is in next 5 years, I would like to, idea is to produce 1 million cars.
And 1 million cars in the next 5 years?
Next 5 to 7 years, yeah. By 2030, let's say, 1 million cars should be on the road of JSW, whether it is MG or not MG, but under the JSW umbrella.
Okay, that's a headline that you're giving us, Mr. Jindal. But, you know, on manufacturing, you said we're not even a pre-teen yet. And everyone is at this point in time saying that this is the opportunity. It's the big Make in India moment. You rightly pointed out we're still about 16% share of GDP. When do we get to that 20-25%, which has been the target and the aspiration? How do we get from pre-teen to teen to adulthood?
I mean, it's a matter of time. We were discussing recently that India is not spending enough money on innovation, on R&D. Indian industry is not spending enough money. Though the government is trying to help or trying to nudge the industry to invest more in R&D, but we are not doing it because, as they say, that if you are hungry, first you would like to eat, and then you want to do puja, or then you want to worship, or then you want to do something. So right now the industry, I think, is still growing, investing in the growth, and then it will go into the R&D, because it's the most important thing. Somebody was asking me why we can't have an NVIDIA from India, why we can't have Microsoft from India.
Yeah.
But the point is that because we are not spending enough in R&D.
Why aren't you spending?
Because we don't have enough money as a country.
It's a capital problem.
It's a capital problem. It's a mindset problem, because you know the mindset when you are investing, so you have a limited amount of cash available. Either you invest in expansion, which is needed for the nation, for the country's requirement, or you invest in your R&D and your growth and your R&D technology.
Yeah.
So you feel that which is giving you better ROI, and straightforward answer in the boardrooms are that let's go for expansion. Because if you invest in R&D, whether that would be successful or not, we don't know. And there are so many people investing in China, in US.
And so you prefer to buy the technology as opposed to investing in it yourself?
As of now, yes.
As of now.
Yes.
So let me end then by asking you, Mr. Jindal, you know, over the next 5 years, by 2030, you talked about how very few players are actually investing. There's a private capex challenge. How much is JSW across the group going to be investing in India? How much will you invest outside of India?
In terms of numbers?
Yes.
So, it's not very easy, but
given the demand visibility.
Yeah, so we have made a very ballpark number that between now and 2030, 2030-31, fiscal 30-31, we would be investing close to $70 billion in India, and maybe $2 billion outside India.
70 billion in India, 2 billion outside of India. Any more IPOs on the anvil?
I'm not sure about it. Not for the moment.
Not for the moment. Any new areas of opportunity? Any new businesses like electric mobility? You decided to get into that? Anything else on the anvil?
Not yet. No, nothing at the moment.
The plate is full?
More than full.
More than full. Sajjan Jindal, many thanks for joining us. Ladies and gentlemen, a big round of applause for Sajjan Jindal here, talking about India's manufacturing moment. Appreciate you joining us here this evening, sir. Thank you very much.
Thank you for having me.
Thank you, Mr. Sajan Jindal and Shireen, for that wonderful conversation. Request you both to kindly remain on stage.
And I'll invite
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC.
Ladies and gentlemen. Mr. Parekh, you're welcome to take the podium or the mic. Thank you. Thank you. Thank you very much, Mr. Jindal and Mr. Varadkar.
Good evening, ladies and gentlemen. Since CNBC has been very kind to me, I have to be kind to them. It's a pleasure to be here today. This summit is of special importance because it celebrates the landmark of 25 years, as it says here, unparalleled business news reporting. For many of us, CNBC is not a news channel, it's a way of life. and an integral part of our daily routine. Once hooked on the channel, CNBC-TV18 is all-pervasive, in our homes, in our offices, and anywhere on the go. Your channel helps turn the financially illiterate to literate, startups to stars, sparks new business ideas, empowers with insights, and chronicles every move of the markets. And an era of heightened television media hoopla, CNBC-TV18 has for 2.5 decades anchored itself on the principles of trust and reliability. 25 years of remarkable reporting, a leader to excellence, and an unwavering commitment to the truth, fair and unbiased, have been the hallmark one has come to learn, one has come to expect from CNBC-TV18. Fact-based, lucid reporting has been your cornerstone. Loyalty, leadership, and expertise has been the integral element of your journey to success. The news never pauses. Every minute there's a feed to report, a soundbite to capture, and a universe in ether to harness. I admire each and every one of you from CNBC for so unstintingly borne the responsibility of bringing to the viewers both range and depth of personalities, newsmakers, and pivotal stories, and so much more. Your presence has been a good service to the nation. Your dedication has been beyond legendary. Kudos for all that, and may there be many more milestones for you to achieve. Typically, at this time of the year, there is much to reflect upon the year gone by and much crystal ball gazing for the year ahead. As far as the global economy is concerned, clearly 24 turned out to be better than anticipated. The big win was that there was no recession. Global inflation came off, and the super cycle election year reiterated that the pillars of democracy are still intact. The fears that AI would sow the seeds of extreme chaos into the 24 elections, widely spreading misinformation and deep fakes, did not play out, even though the risk still exists. The opportunities around generative AI are now better understood. In equal measure, the over-exuberance of AI being a silver bullet is tempering. There is better understanding and better realization now that AI is productive, is an enabling tool, and not one that will render much of the workforce redundant. The rules of the game are still evolving and imbibing. A uniform global regulation on AI governance is critical. For India, for us in India, capitalizing on AI entails raising resources to fund increased energy needs, decarbonizing the grid, scaling up the number of data centers, and building factories for the high-end manufacturing of chips. A few weeks ago, when the CEO of NVIDIA, Jensen Huang, was here, and he aptly said, this is India's opportunity to reinvest itself from the world's back office to the world's front office and be a leader in AI, because we in India, he said, have the talent and the human resources to do so in India. For us in India, exciting times lie ahead. The heft of being among the fastest growing major economies will continue for some time to come. Fueling this ambition calls for a faster pace of GDP growth and investments. So what we need now is higher GDP growth rate, much higher than what we've been having in the last few years. And for that, we need more investments. Now, where is the investments going to come from? Today, India's voice matters on the global arena. For the West, India is often viewed as a counterbalance for China's growing heft. Yet the characteristic of Indian diplomacy, Indian model of diplomacy, has served us extremely well. This was best being played out with India's increased import of crude oil from Russia in recent times. India's ability to seamlessly pivot to other countries where it can import crude at the most competitive rate. Excellent global relationships, external relationship enables us to make smarter choices back home. Our initiative, India's government's initiative of expanding BRICS, demonstrated its leadership on a multipolar global south. Most recently, laudable military and diplomatic efforts on the India-China disengagement reflects our credibility in navigating more complex geopolitical environment. Evidently, India's future is about attaining scale, attaining increased production. The aspirations of being a $30 trillion economy by 2047 and a per capita income of $18,000 is not inconceivable. It is possible. Because of what are favorable demographics, rising income levels, low penetration of discretionary goods and services, being perceived as a favorable destination for manufacturing and service offshoring, and the significant improvements in physical, regulatory, digital infrastructure have been transformative for India. In recent period, there has been some concerns of a possible slowdown. Here it is important to note to be more discerning with the data. From a wide suite of high-frequency indicators, there will be variations in different points of time. We all know that government spending was curtailed for a quarter during the election time. So this is a timing issue. It is not a structural change, the present slowdown. Central government capital expenditure is expected to gain traction from here on. There were unseasonal rains in August, which fed into higher inflation data, particularly in agri-products. But expectations are that inflation rates will start coming off from December onwards, especially when the base effect becomes more favorable. GST collections were subdued for the months of August and September, but saw a pickup in October. Services PMI strengthened in October, as did passenger vehicle sales, which were subdued earlier. Urban consumption was a bit tepid, with a tilt to premiumization, but rural consumption has picked up on the back of a good monsoon. Rather than reacting to small changes, one needs to look for the longer-term trends. Sure, we will have some blips. There will be periods of slower growth in certain sectors, but they are cyclical in nature and not symptomatic of a long-term slowdown. It is also true that recent corporate earnings have been lackluster. Core sector output has been lower, but steel and cement have shown improving trends. Some pockets of the financial sector have had a slight uptick in retail asset quality deterioration, yet it is not a systemic risk. It is important to reiterate that Indian banks, as well all the financial sector today, all the financial sector players today are well capitalized, and corporate leverage is much, much lower today than it was in the past. There are no concerns on the twin balance sheet problems which we saw many years ago. Now the critical issue today is how are we going to fund India's growth? Our growth ambitions are enormous, but who's going to fund it? How is it going to be funded? And what financial transformation is needed to meet the needs of the next generation? In India, public capital expenditure has been at record highs, but there are constraints on spending owing to the commitment to the path of fiscal prudence. In India and globally too, banking sector has been subject to higher capital requirements. Regulators remain cautious of non-bank finance lenders or shadow banks, even though they play a very important and integral part in the financial system. While one respects the domain of regulators, for a few bad apples, invariably the entire financial sector gets penalized with much tighter and higher restrictions and regulations. The reality is that banks are not lending sufficiently to meet the growth of our country. Retail depositors don't feel incentivized enough to save through bank deposits. So banks are struggling to raise deposits. After decades and decades, our corporate debt market are still so shallow. We have many insurance companies now who are asset management expertise, particularly on the equity side. But investment guidelines of insurance companies have for years remained the same. And scope to increasing private sector investment is limited because most of it is taken away by mandatorily investing in government securities, both state and central. The market, even the market for top-rated companies, top-rated paper is still extremely small. So what is India Inc. doing about it? It is turning to flexi, non-traditional or alternate investments, which typically entails rates of interest which are 4 to 6% higher than traditional norms for banking. Foreign funds seem to be much more confident of lending to Indian companies, which is unfortunate, than the Indian financial sector players themselves. And it is the foreign funds that are making merry with higher spreads. This should not be the case. Globally, deep-pocketed alternative asset managers have increased their penetration in the private credit market, which is currently estimated to be over $2 trillion. Last week, I was in Singapore and I met many investors, fund managers who were investing in equity for the last 20 years in India. Most of them are saying we are starting credit funds because we see massive opportunities of lending to Indian companies. These will be foreign currency loans to Indian companies. These private credit funds in turn raise money from institutions like insurance, pension funds, endowment funds, which are long-term investors. Private credit typically used to fund small and medium companies. But now, private credit lenders are able to cut significantly larger checks. Some say private credit is eating into the space that was traditionally the domain of the bankers. Regulators feel that the risks are high as regulatory supervision is much lighter with alternate assets compared to banks. So what is the way forward? There's definitely a need for increased funding access for mid-level companies as well as large companies. A developed financial sector, a developed financial system needs some amount of flexible funding, some amount of structural finance, some amount of mezzanine finance, and some amount of buyback finance, buyout funding, which we all do not have. If companies get access to timely funding, it helps to overcome unforeseen circumstances. To my mind, the key risk is when credit funds transact excessively amongst each other, because then there is no transparency of what is actually transpiring. Perhaps banks and private credits have to coexist. Some banks and private credit firms have strategic partnership. Here, the bank provides the credit solutions to their customers through private credit firms. Doing the due diligence, the banks does the due diligence themselves with a fee, and they use the balance sheet of the foreign private credit suppliers. Yet it would be unfortunate if banks and NBFCs curtail lending to sectors that India needs for growth. Several banks have now built up massive capacities and strong capacities in infrastructure lending, but are now reluctant lenders post the twin balance sheet crisis. Good lessons were learned from the crisis, but we should not get paralyzed from the fears of the past, which we are getting. As long as there's no malified intent, lending institutions need to be encouraged to support business growth within the country. I've always maintained that India grows when India builds. We need to build much, much more. Hard infrastructure, soft infrastructure, and especially upgrade our grid and telecommunications infrastructure. Data centers, global capability centers, warehousing, these are all new opportunities for the real estate sector. But banks are not allowed to lend for land in real estate. So if you want to buy land, you cannot go to banks. You have to go to private credit. You have to go to NBFCs. And you have to pay much higher rate. And in urban areas, land forms a major portion of the cost of a building. We need to increase all sources of energy, thermal, renewable, nuclear, hydro, and biomass. For India, it is not about choosing one dominant source of energy, but increasing capacity as quickly as we can. And all the incremental building that India needs to do for future mandatorily needs to be done in a sustainable, green manner. When one looks at retail finance, given the low levels of penetration, the runway for growth is also immense. Let me give you a few examples. Consumer credit to GDP. In India, consumer credit to GDP is at 40%. And it's the lowest amongst the larger countries. In the US, it's 74, but even in China, it is 62. We are still at 40. Mortgage to GDP is low as 11%. In other Asian countries, it is in mid-20s. In US, it is 52, and in the European countries, it is in 90s. Insurance penetration is at 4% compared to a 7% global average. So the massive opportunities to increase in these financial sector. That's why you have so many insurance companies and asset management companies. We are very excited to see the increase in retail investors, especially those investing in the SIP, systematic investment plans. But it is also important to increase awareness that retail investors should not fret when there is a market downturn. I worry because there's a large cohort of new investors who have never seen market cycles at all. If these investors, it is these investors that one needs to counsel and instill confidence of staying invested for long periods of time. To conclude, I do hope India sees a calibrated reduction in interest rates sooner than later. We should not choke India's growth. One recognizes RBI's inflation mandate, but there are ways around this. When interest rates are lower, households can buy more, businesses can expand production, and the private sector can increase capital expenditure. Alternatively, a small reduction in CRR could also help. India will prosper even more if we resolve to have problem-solving mindsets and work collectively to overcome all our challenges. Industry and the government need to collaborate jointly on what needs to change, to be honest about what is broken and what needs to be fixed. It is a promising future and an era of new opportunity awaits us. I'm extremely optimistic about the future of India. And let me again end by thanking CNBC for inviting me and giving me this honor, which I never expected. I was just asked to come and speak, but thank you, CNBC.
Thank you, Mr. Parekh. Stay tuned for such an exciting chat with Siddharth Roy Kapoor, Karan Johar, and Adar Poonawala.
Comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
he is able to have a dialogue with all sides of the political spectrum globally, and he could become a very important peacemaker.
The man who is looking after the India-US relationship through the ages of the US-ISPF. Mr. Chambers, good morning. Can you hear us? It's a very early morning in California. We're just trying to get Mr. Chambers. There you are. Good morning, Mr. Chambers. How are you?
Good. If this is Shireen, you always call me John, and I am excited to be there. I just try to keep up with your energy.
Well, you know, I'm trying to keep up with your energy. I know it's 4 a.m. there in California, so we really appreciate you joining us here at the Global Leadership Summit. But John, let me start by asking you about your view on India from a foreign perspective, from a foreign investor's lens. I know you've been a long-term, perpetual India bull. How high is the confidence today?
The confidence today is higher than ever, Shireen, and you knew that was going to be my answer. But the way you deal with emotion is with facts. India will become the #1 economy in the world. I think we were the first ones to predict that several years ago. It will be the fastest growing economy in the world, and the increase of standard of living for all 1.4 billion people. The confidence in dealing with the world's largest democracy, candidly with the second largest democracy in the U.S., has never been stronger. The startup mentality and the infrastructure build-outs that your prior guests talking about instills confidence. And candidly, with the election of President Trump and the key appointments as Secretary of State and National Security Advisor are very, very strong allies of India. So I think the confidence is greater than it's ever been. So it's impossible to double down and double down and double down again. But that's really what I'm saying the world's going to do in terms of India's future.
So double down on India. That's the big call there from John Chambers. But John, you talked about the new Trump administration. You talked about some of the key appointments. Let's talk about what the Trump regime could mean for global growth, which is already fairly fragile at this point in time. And what are the expectations from this new Department of Efficiency with Elon Musk and Vivek Ramaswamy at the helm?
Well, you've asked probably 3 questions, Shireen. First of all, you watched the U.S. stock market in response to the election. It responded very well. President Trump focused on the economy, our immigration issues, and crime, and he won in areas that the Republicans have traditionally not carried, including the average working American. It was probably the broadest win I've seen in quite a while by any leader on either side. President Trump and Prime Minister Modi, as you know, are great friends. They get along extremely well, and their communications is great. And with Marco Rubio, you will see him match up perfectly with Jay Shanker in terms of the focus from the Foreign Affairs leader and from the Secretary of State. And in terms of National Security Advisor, most of you know Mike Waltz is very, very pro-U.S. and India relationships, comes regularly to the country there. So I think the combination of the two are going to drive the U.S. and India economies faster together than before. And actually, Shireen, I think we will set the pace between our two countries for our countries to lead on AI. It doesn't mean other countries around the world won't drive it, but I think our startup community and our ability to increase our standard of living and drive our stock markets as well as job creation are going to be very good under this new combination.
Elon Musk and Vivek Ramaswamy?
I like them. You know, we have real character leaders of our high tech and our high business. Shireen, you probably find me boring in comparison, but it is exciting, and they do keep us on our toes. But it does speak to the strength of a democracy, where you have people that can speak out and speak out with enthusiasm and belief. And both of those individuals are huge believers in the future of India and the relationship between our countries. If you look at it across America, regardless of political party, the confidence and trust in India and candidly the love for your country has never been stronger. But it's also a win-win economically, where we can generate probably 1% more GDP growth than the U.S. from a tight partnership over this decade per year, and India can probably generate 2 more points of GDP growth because of the partnership. So I think this will be not only India's decade and India's century, I think it will be India and the U.S. together on everything from artificial intelligence to defense to job creation, and the model for other countries in terms of how countries that are great democracies work together and innovate together.
You know, you talked about collaborating on AI. The Prime Minister said AI stood for America and India. But John, you know, realistically, what is that going to mean in terms of future collaboration, in terms of the private sector collaborating in areas like AI? We're already doing that in many ways. But what's the aspiration? What's the potential for growth from here?
When you look at it, Shireen, there's been 2 major technologies that changed the way the world works, lives, learns, and plays, affected our lives in every way. The first was the internet, and now the second one will be AI. It will change your standard of living. It will change what you do in your job. It will change how you're entertained. It will cure cancer by using it effectively. It will drive the stock markets for the next decade. It also will move at probably 5 times the speed of the internet and 3 times the impact. That's a nice way of saying what used to happen, for example, in startups in your room, it would take 2 years to develop a product, 1 year to get 5 to 7 customer references that are paying on it. You're in year 3 at $1 million run rate. And by year 5, you'd be at a $5 million run rate, and you're a unicorn in the making. Today, my companies do that like VJ at Pindrop, or what Saket is doing at Safe Securities, or what Bipple did at Rubrics. They develop their products now in 2 to 3 months. They hit a 5 to 7 customers within a quarter or 2, using VJ as an example with Pindrop on deep fakes. He's at a $2.7 million run rate after 2 quarters. He will be at the $5 million run rate in 15 months. It is 3 to 5 times faster, with the impact even larger. So every company, regardless of industry, will go AI. Every government, every defense, and people's lives, you will have an AI assistant at your hand in your mobile phone, or in terms of your individual personal assistant at work.
So John, you know, you talked about investing in startups here in India. You're also backing Indian founders who are based in the Valley. So what's the outlook? How many checks are you going to be signing in 2025? What is going to be the size of the checks that you sign?
Okay, so the answer is 60% of my investments just happen to be with CEOs and a founding team, either that were started in India or in the Silicon Valley, Atlanta, Texas diaspora group. I think that ratio will continue because of the great engineering teams you all have put out and how startups in India are growing the fastest in the world. You know that your IPO market in India is the fastest in the world. US is a little bit slower. In terms of my checks and the balance, you'll see me continue to invest in all 22. They will be around artificial intelligence, and all of them will have artificial intelligence as a foundation. I'm betting heavy on security. My average investment is $3 to $5 million in terms of the approach. I've been very fortunate that in a very last tough 2.25 years, we had 2 major exits in terms of M&A, 2 of the 3 largest with OpenGov, in terms of a group in Pensando, the largest defense exit with Dedrone being purchased by a large defense contractor, Rubrics and cybersecurity with Bipple's team going public, and they're doing a great approach. So right now, we've been very fortunate versus some of our peers. We're going to continue to reinvest and doubling down on India, if not quadrupling down.
Well, we hope you do quadruple down as well, John. But let me ask you for your comments, wearing your former Cisco hat, on what we're likely to see happen on the infrastructure side, on the chip side, with the wars that are currently underway in the industry. How much are we likely to head into a phase of significant consolidation? Is that something that you believe is just a question of timing? It's not if, it's when.
Well, it depends on the three categories that you covered. Let's start with semiconductors. I happen to be very close to everyone from NVIDIA to AMD to Broadcom to others in terms of the industry overall. All of those are very active in terms of consolidation, movement into AI growth, and candidly, all of them are very active in terms of investing in the India and U.S. corridor. I don't think you'll necessarily see a consolidation there. I think you will see challenges to NVIDIA evolve because clearly, if you want to know how the AI is going, it's much like Cisco when Cisco was the leader in networking. If you want to know how the internet was going, just watch Cisco's growth to 60 or 70 or 80% per year. NVIDIA is the bellwether in terms of the industry, but others are going to focus on it. To your question about cybersecurity, you're right. It is set up for consolidation. I was just with a customer advisory board yesterday, interestingly enough, a pin drop talking about the deep fakes, and the 20 customers there said, John, we have an average of 50 cybersecurity companies in our environment. They don't talk together. That one's probably set up in terms of more of a consolidation. I hope to play a role there in terms of my startups. For people in the room, if you want to have a safe future, become an expert in AI and cybersecurity. The two of them will come together in terms of resolution. In terms of your big question, Shireen, I think this might be the first time ever when you go from mainframes to mini computers to PC, client servers, to the internet, to the cloud, and now to AI, where the prior generation might actually produce half the leaders in the new technology. That's not occurred before, but I think with the hundreds of billions of dollars that Microsoft and Google and Amazon and Apple and Meta are putting in, they will be a force here, and then I think you will see some of the players in the room, hopefully some of mine as well, also become a force. So for the first time, the large traditional players, maybe 2 or 3 of them will really make this transition and be in leadership roles. And again, I think it's the startups that are going to light it up. For those of you in the room, regardless of your industry, manufacturing, government, healthcare, you've got to have a AI strategy and foundation. And as investors for FDI others, they're going to say, where are you on your AI implementation? Where are you in terms of driving your productivity at 7 to 10% a year, which I think you can with AI. 2025, some predictions. I think you'll see 2025 be the year where AI crosses the chasm. Everybody talks about it today, but if you talk to the average person in India or the average person in America, it is not affecting their day-to-day activity, either at work or otherwise. By the end of 2025, I think we will see it in a broad level at all of our, both of our countries and in all of our business and personal lives. It's going to move with tremendous speed and excitement. Disrupt, or you're going to be disrupted.
Well, you're talking about disruption, John, but before I let you go, given your experience of not just building a company or building or looking at market intersections and inflection points, but also investing in startups, what's the message to the Indian entrepreneur?
The message to the Indian entrepreneur, I believe in ownership and sharing that ownership across your entire company. I think you see VCs both in India, but more and more coming from America to say, let's partner together. I think it's important to dream bigger, Shireen, as you and I have discussed many times. I think one of the many things that just makes me so proud of India, and I've been there 50 times, but my wife traveled with me the last 2 times this year. She fell in love with the country as well. It's a wonderful company, but your innovation and your dreaming is great. I think we can dream even bigger and make that happen together. So I'm the most bullish person on India for the last 2 decades, and I couldn't be more pleased about the future. But the message to the people in the room, dream bigger, execute on good plans. When you get knocked down, that's part of the development of your company. Understand why you got knocked down and get back up, and then go at it again. You'll be stronger after you get knocked down than if you never got knocked down. And I think we have to imagine the future and what AI can do for the companies and for our countries.
John Chambers, it's always a pleasure. Thanks for joining us here at the Global Leadership Summit and imagining the future with us and for us. We truly appreciate your time. Ladies and gentlemen, a very early start for John Chambers there, 4 a.m. in California. Thank you very much, John, for joining us. It's also
3 decades.
Well, a fantastic opportunity is what you see for India. Mr. Vatsa, let's talk about your existing bets on India. Also, let's talk about the new opportunities that you intend to place your bets on. Let's take us through your current portfolio, how good you feel about that. But more importantly, what's next on the India card?
I'll tell you about the past, but so we've got $7 billion invested in India, and we expect to have another $7 billion over time. Some of the companies that we have are Digit Insurance, which is our insurance company. We're an insurance company, and this is our 39th year, Shireen, that we've been in business and built it from a very humble 10 million in business to 33 billion across the world. And like John says, there's a huge opportunity in India. And so we've got Bangalore International Airport, we've got Thomas Cook of India, we've got Quest, we've got the Go Digit. What we're looking is for honest businessmen, all businesswomen who want to build a company. Honest businessmen and businesswomen build a company with a good track record that they've already have, and not looking to sell it, to build it over time. So Fairfax, for example, I've been running it for 39 years now, and it's very decentralized. And I've said we're stewards. We're not owners, in the sense that even though I control the company, I've said publicly for many years that I can't sell it. I'm not able to sell it because we want to build this company for the next 100 years. And it's got a terrific culture that we've developed over time, following the golden rule. Treat people like you want to be, treat everyone like you want to be treated yourself. And that, by the way, Shireen, is in all the scriptures of the Hindu faith, the Muslim faith, the Christian faith. Treat people like you want to be treated yourself.
I think that's great advice that you leave us all with, Mr. Vatsa. But, you know, you talked about Thomas Cook, you talked about insurance, you talked about the Bangalore airport. So there's infrastructure, there's travel and hospitality, there's, of course, financial services. Where do you intend to double down on in terms of future growth and future investments?
If India grows at 10%, Shireen, there's no limit to opportunity. I can't tell you specifically what we're going to do, of course, but we're looking for good people, honest people who run an honest business with a track record, who want to build something in the future. And we've been very fortunate. India is filled with people like that.
Bigger bets on banks?
We're looking at all possibilities, Shireen. I won't specify any item, but yeah, we're looking at all the possibilities.
Mr. Vatsa, you know, one of the issues that is currently being talked about in business circles is the relationship between India and Canada, which is plummeted to a new low. I don't want to get into the politics of that, but from a business point of view, Canadian pension funds are big investors in Indian companies, in Indian assets. Do you believe that the geopolitical tensions will impact the spending or the investment capacity?
Like you said, I don't get into the political aspects, Shireen, but I don't think it'll affect investment in India.
That is just, I mean, just when he was getting into the meat of things, but I think we got a sense of what Prem Vatsa was saying there, that Canadian pension funds are unlikely to change their view on India, given the geopolitical tensions. Ladies and gentlemen, Prem Vatsa there joining us from Toronto. If you can hear me, Mr. Vatsa, thank you very, very much for joining us here on the Global Leadership Summit. Appreciate your time. Ladies and gentlemen, a big round of applause, and Shruti and Ritu, over to you.
Well, thank you, Shireen, for taking us through that conversation with Mr. John Chambers and Prem Vatsa. As always, we're looking forward to hear what they do next with the India investments. Well, we're going to move on to what's next, and that is, as India's economy grows, so do its ambitions on the global stage. With more than 50% of the population under 30 and an average GDP growth rate of around 8% or so in the last 3 years, India has the momentum to reshape its position in the world economy. But for India Inc. to truly go global, we need to look beyond our borders, competing for larger pools of international revenue and scaling our businesses to world standards.
Absolutely, Ritu. And our next session, India's Right to Win, focuses on exactly that. What will it take for India to build world-class and world-sized companies? To help us explore this further, Shireen would request you to come up on stage, and joining her for the discussion is Mr. Anish Shah, MD of Mahindra & Mahindra, and Ms. Falguni Nair, founder and CEO of Nykaa. I request Mr. Shah and Mr. Nair to please join us on stage. Ladies and gentlemen, a huge round of applause. Over to you, Shireen.
Ladies and gentlemen, it is our privilege to welcome Falguni Nair and Anish Shah on the Global Leadership Summit stage. Thank you to the both of you for joining us here today. What we are now talking about is India's right to win. And Falguni, I'll start by asking you, because through the course of the day, we've heard many speakers here talk about why don't we have an answer to the US companies like Facebook and so on and so forth. With what you've been able to do with Nykaa, really creating an Indian-born platform, tech platform, what's your take on that? Are we on the cusp of being able to do that? Are we on the cusp of being able to move from an arbitrage economy to a product economy?
Yes, my answer would be yes. I think what I see is that in many of the digital businesses like e-commerce and others, we hear from our global partners that the technology that India is now offering is really ahead of what they see amongst a lot of digital retailers globally. So of course, I mean, I'm not talking about some of the retailers from US, but time and again, even from US retailers, we hear that the technology in India is quite sophisticated. So I think the investment in digital economy that we've seen over the last 10, 15 years definitely puts us in a good place. But, like the strength and size of the domestic market is important to dream big and to want to compete internationally. And that is just happening. Like, I think the way Sajjan said, I also feel that India is a young economy. And going forward, as the strength of our economy grows, you will see more ambition to go for the globe.
Well, you're a young company as well at Nykaa, but I know that we're starting to see the seeds of international ambition being sown. Over the next 10 years, Falguni, I'm not even saying 5, over the next 10 years, do you believe that international expansion is going to be a significant driver of growth for you?
I think what happens is that international is attractive, and especially GCC, where we've entered, and there could be more markets like that. However, India remains such a big opportunity that bulk of our energy and investment will continue to go in India. Actually, when we travel globally and you see the size of many of the countries and the economies, and India is a very large economy, and I think except for US and China, we don't understand. But, US, we may get tempted, but otherwise, India is a very sizable economy.
And the consumption cycle, at least to the market that you're catering to, has just about started to take off.
It's just about started to take off. There are high growth rates in India and abroad. So we remain very excited about discretionary consumption in India. And I personally feel that the coming decade could be one of the best for digital and retail in India. And we, with a combination of both, bringing to the consumer through personalization and all that technology can do, we remain very excited.
Do you have a number that you can leave us with in terms of where you believe the industry will be? Not just where Nykaa will be, but where you believe the industry will be on the back of the consumption boom that you're expecting?
I think there has been acceleration in beauty growth globally and also in India. And I think the best time for beauty is yet to come. And similarly, while in the really near term, it seems like physical retail is also moving ahead as strongly as digital, but the advantages of digital remain very strong, and I remain convinced about it.
Convinced about digital? She didn't give me a number. I'm going to come back and try my luck again. But Anish, let's talk about India's right to win. From a Mahindra Group standpoint, and you operate across different jurisdictions, you operate across different companies and different products as well as services. What will it take for India to truly start to eke out niches in the global market?
Shireen, I would argue that that has started to happen already. But for it to happen consistently and at scale, it starts with ambition. And there, what we are seeing is a vision for a Viksit Bharat that requires manufacturing to grow 16 times in the next 23 years. It requires exports to grow 11 times in the next 23 years. In order to make that happen, we need quality, ease of doing business, and a lower cost of doing business. And there are a number of initiatives that at FICCI we have been working with the government in terms of helping outline what will it take for industry to get there. And in terms of the progress we are seeing, the efforts we are seeing, they're all there, and we are very bullish, if I can represent the industry from a FICCI standpoint, as well as from a Mahindra standpoint, in terms of where we see India today and where it's headed.
Okay, so confident about where we see India today, but those are also fairly audacious targets, growing 16 times, growing 11 times. We just had Sajjan Jindal speak before the two of you, and his point is that as far as Indian manufacturing is concerned, he said we're not even pre-teen. We're still below pre-teen, far distance to go as to adulthood. I want to understand from you, what continue to be the key constraints on the manufacturing side, Anish?
Let me share some facts first, Shireen. If you look at the automotive industry, we are competing with all the global majors in India. Some have exited, some continue to stay, and Indian companies are actually doing extremely well. At Mahindra, we have tripled capacity in the last 4 years, and we still cannot keep up with demand. So I would argue that we are actually in a much better place
Than we were.
Yeah. If you look at the tractor industry, Indian companies make up 80% market share despite all the global companies being in India for the last 20 years. And therefore, there is something that's out there for Indian companies. There's a lot more R&D that's being done. We are developing our vehicles in India. And we are developing vehicles that, from a quality standpoint, compete with the best in the world. And I would just say wait for our electric vehicles.
Well, I think the wait for your electric vehicle is the anticipation. I think it is coming closer to the 26th of November when we'll hear more from you on the electric vehicles that you're launching.
That is right. So we will reveal them at that point in time. And we are very confident that they will stack up in quality versus anyone else in the world.
That's what I want to talk to you about. I think what we're also picking up at this point in time, and there's two different points of view, that one, India should open up, the other, that look, we need to protect Indian industry. What is your view? Do we need to impose import tariffs on the likes of Tesla as they look at entering the Indian market?
So first is that the Indian industry needs no protection. We've had no protection for the last 20 years, and that's made us better. If we had protection, we would not be having the quality that we have today. With regard to duties, there's a completely separate set of questions that needs to be asked, because the questions are around non-tariff barriers, along with tariff barriers, the inverted duty structures, and all of that need to be addressed together. And frankly, they should, because that will make Indian manufacturing a much stronger place.
So yes or no to tariffs?
I would say that it has to be done together, because if it is cheaper to manufacture cars outside India, then Indian companies will look at it and say, can we go outside India, put up a plant there, and then import into India? So it's a more complex topic from that standpoint, and therefore it is something that needs to be addressed, because we want to export to the world. And for that to happen, we need FTAs around the world.
FTAs is one thing, but what's the export ambition? I know when you and I spoke, you said that this is going to be one of the focus areas. It is going to be a key growth driver for the Mahindra Group over the next 5 to 10 years. What's the export ambition for you?
Very significant. In South Africa and Australia today, we have a 6 and 10% market share already. And there we hope to get to 20% and then go beyond that to ASEAN countries, to Europe and the US as well.
So how much will come in from exports as a percentage of revenue over the next 5 to 10 years?
Over the next 5 to 10 years, from a percentage standpoint, still smaller, because as Falguni said, the Indian opportunity is huge. And we are seeing just tremendous demand in India for our vehicles, which also in some ways constrains what we can send outside, because we are building capacity as fast as we can and it's being used up, which is a great problem to have. So therefore, Percentages wise, next 5 years would still be lower, but as we look at a 10, 15-year horizon, I'd start expecting a much higher percentage of exports.
A much higher percentage of exports. Falguni, let's talk about competitiveness. And I think that continues to be the central theme that is up for discussion as well as for grabs here. As someone who's observed Indian business, been part of Indian business, and now is running a business yourself, how has the needle moved on competitiveness, and what more do you believe we need to do if we have to ensure that we get that right to win globally?
See, NICA's source of competitiveness in the global market comes not so much from, duties or any kind of, the cost doesn't matter in our business as the culture and speaking to the consumer matters. And I think what is India's big advantage is the amount of Indians we have abroad.
Yeah.
And Indian culture is really spreading. I was just talking to some friends from Hong Kong, and they said new restaurants have come up in Hong Kong, Indian restaurants, and a third of the consumers there are Chinese. And nobody believed that Chinese will like Indian food. Yes, British will like Indian food, but not Chinese. So I think...
Is gobi Manchurian Indian or Chinese?
No, I'm talking probably about tandoori chicken in China and in Hong Kong. So I think, in my opinion, what we are seeing is that there is a lot of Indian way of living that is getting popular globally. And that gives us more ambition to say that we can take our brands global. So it's not coming from really so much about the price advantage as knowing the consumer. Because our industry is all about knowing and being able to talk to the consumer through social media in a way that they relate to it.
Yeah, and I want to talk about this consumption boom and throw some more lights and data on it as well, Falguni. I mean, what are we talking about? I know when we last spoke, you said that, on an average, if people had 2 or 3 items in their cart, now they're experimenting and it's going up to 5 or 6 items, for instance. Break this up for us. What are the big trends that you're witnessing at this point in time? What really will drive this big consumption boom that everyone seems to be talking about, everyone seems to be betting on?
So I'm talking about beauty and personal care, and personal care includes every item of consumption from oil to soap to shower gels or everything. And with that, the Indian per capita consumption was as low as $6 per capita. After 10 years of effort by NICA and the entire industry, we are still at $16 per capita.
Okay.
Developed countries like US are at $250 per capita, and obviously Korea and Japan are at $450 to $500 per capita. So I think Indian consumption is so small and reflective of India's per capita income, which was so basic that we were spending money on what I call as consumer staples.
Yeah.
As you call it, roti, kapda, and makan. And I'm just hoping that time has come for discretionary consumption. And as Indian incomes go up, and definitely at the top end it's going up, we will see a lot more discretionary consumption. Because, in my opinion, personal care, beauty, as well as fashion are basic consumption. If we don't spend on that, what will we spend on?
Well, if you have enough money that you can use for discretionary spending, that's the question, and then you will spend.
But what does an individual live for? To better the lives. And what should the country look for? To better the lives and believe in it. And we have the education, we have the young population.
Yeah.
And I think we should be enablers for a better life and believe in it rather than be always defensive and feel that there's nothing happening in our country. I think from a very young age, I've seen that India doesn't look good at a point in time, but as a moving picture, it looks very good.
As a moving picture, it does. But Anish, let's talk about the consumption bet and this, per capita boost that we're all talking about. Your electric vehicles are not going to be cheap. They're on the sort of premium end of the pricing segment as well. What's the thesis there? Why the decision to actually go at the luxury end as opposed to the mass market side?
So our objective, Shirin, is to offer luxury products for the mass market. And that is what you will see with our electric vehicles as well. We've operated in SUVs, and for us, having a sharp focus in terms of what we do is important. Our approach is do less, but whatever we do it very well.
Speaking about doing less and doing more with less, one of the other issues that's being discussed at this point in time is, does private sector, does private industry have the appetite and the capacity to now start to invest in R&D? And I want to put that question to both of you. Creating IP, you're trying to do that at your end as well, Anish. How much has the R&D spend gone up as a percentage of revenue over the last 5 years? How much do you see that increasing too as you chase this right to win globally?
So R&D is critical. That is the foundation of our success. We set up Mahindra Research Valley. We have 4,000 engineers there now. And they've developed all the products that we've launched over the last 5 years and obviously before that as well. And we've seen the success in those products. So it comes from R&D, and we're starting to see more companies across the industry do that. Without that, we are not going to meet the ambitions that we have.
So what will that number look like in terms of how much you spend as a percentage on R&D over the next few years? And how IP-driven are you likely to be?
I would say very high. Now, in terms of percentages, it's not fair to compare us with global standards on that, because we operate much more frugally than most other companies globally do, and we can deliver products at a much more frugal rate.
Falguni?
No, I think even for a young company like Nykaa, the writing is very clear that if you want a sustainable competitive advantage, R&D is way to go. But I think the ecosystem is also not there. There is not enough, conversations around it, not enough talent around it. And I think the country will have to go in that direction. So let's hope we can all make the beginning.
Make a beginning, that's very, very clear. So I'm going to ask you, Falguni, to start by laying out the 5-year roadmap for Nykaa. What should we expect for you? We've also got Karan Johar waiting in the wings. Perhaps he's going to have something put into his cart from Nykaa this evening, but we'll have to wait to see. Waiting in the wings here, the 5-year roadmap for Nykaa.
I think Nykaa would love to go into wellness. I think wellness is a good long-term sustainable business that we'd like to pursue beyond beauty and fashion. I think I continue to remain very excited on India and obviously bringing great, research-driven products to Indians that Indians love. So I think
wellness, private labels, services, or products?
Wellness, private label products is what current focus is, but in the long run, it could also be services, for sure.
It could also be services. Anish, 5-year roadmap for the Mahindra Group across each of your growth engines as well as your growth gems.
Electrify India with our electric vehicles, enhance farm productivity to hopefully address the food inflation problems, have a series of services businesses that we do today to be able to provide very high quality services, not only to Indian consumers, but to consumers around the world.
A number that you can leave us with to quantify this vision?
Multiples of growth over the next few years.
Multiples of growth. Falguni, a number you want to leave us with?
I think we continue to chase industry-beating growth, let's put it that way.
Well, we hope that both of you continue to chase industry-leading growth and deliver on that promise. Ladies and gentlemen, a big round of applause for Falguni Nair and Anisha. Thank you very, very much. We hope that you do take the right to win global, and we look forward to hearing more from you on that story. Appreciate you joining us here. A big round of applause for Falguni Nair and Anisha. Thank you very, very much. Thank you.
Thank you, Mr. Shah and Ms. Nair.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the
A very good evening, everyone. It's great to be here. Hi, Karan, and hi, Adar. It was less than a month ago that the Indian media and entertainment industry woke up to the news, pretty sensational news, that Dharma and Adar Poonawalla were coming together to do a 50-50 joint venture, and that Dharma Productions would now be a partnership between Karan and Adar. This news was greeted with a tremendous amount of excitement, I think, in the Indian media and entertainment community, because as we know, a lot of consolidation has happened on the studios and the platform side, but we haven't really seen that much activity on the content creation side with regard to outside investment coming in to the industry. It's been a traditionally closed industry as far as outside investment is concerned. So Karan and Adar, I'm sure you're sick of the memes that have been circulated, but I can't help but say, Adar, I hope you're not going to be changing Covishield to a K. And Karan, I hope Brahmastra Zeneca is not going to be the name of your sequel to Brahmastra.
No, but I'm definitely changing the company to Pharma Productions now.
That's a good one.
Which was the other name.
That's a great
And the other one was Kabhi Khushi Kabhi Serum.
That's perfect. Now, this is CNBC, so unfortunately, I'm not going to be able to do any more of those puns. I need to be all serious and businesslike. But since it is Karan Johar, I have to ask him what he was manifesting when he decided that Dharma Productions would now move into this new generation of raising capital. Because, as we know, films has been his passion, his father's passion, and Dharma Productions has been a passion project for all these years. So what were your personal and your business considerations? It'll be great to get a sense of both, because that'll give us a sense of where the media and entertainment industry is headed as well.
Thank you, Sid. Firstly, thank you so much for moderating this session. I couldn't have asked for someone better to do this. Thank you so much on behalf of both Adar and I. I have to say that contrary to what people might know of or feel of Dharma Productions, actually it's a rather nascent company where it comes to multiple productions and building it in a studio model. We actually began our journey when you were very much part of the family with UTV at that time, with multiple productions that we started with Wake Up Sid and I Hate Love Stories and a film called Qurban. And I signed my first deal, so to say, with Ronnie Screwvala. So the Parsi community has been very kind to me. And subsequently, we built Dharma Productions right up to 2023. So in a sense, our journey of producing multiple films and content has been 15 years old. Prior to that, it was just films that I directed, that my father had curated over the years, which were very few films, really. And there came a point of time where I felt that we needed, for our own growth, we needed the investment. We needed to kind of not partner with everyone and increase our profitability. And therein came the decision to sell stake and, build in a partnership with somebody. At that point, we did all the due diligence, we did all the, work, and the idea was to kind of create further verticals at Dharma Productions. Besides, we have Dharma, we have Dharmatic, we have an ad division at Dharma 2.0. But, the whole idea to build our own distribution network, perhaps, or maybe dabble in the music arena and many other verticals is something that I dreamt of, but I needed the partnership for that. And in many ways, when Adar, who's been a dear, dear family friend for many years, spoke to me and we decided to come together on this, I felt it was the best decision for us because it was the coming together of somebody, like-minded people, and also someone who possibly would allow me my creative vision and yet contribute so strongly to the growth by giving me his terrific business insight. So I thought it was a great marriage of two minds, and it really wasn't a big decision for us because when it came to partnering with Adar, it was just easy. It was like both Apurva and I, who built the company together, both knew that he was the best possible partnership for Dharma Productions and for where we want to take it.
No, thanks. That gives a great sense of what the considerations were when you were looking at doing this. And Adar, I'd love to ask you, from saving our lives over the last, decade, what is it that led you to believe that this was something that you wanted to get involved in? Because, of course, you've known Karan for many, many years, but one never really thought of you as being someone who had a great amount of interest in the media and entertainment business. So it'll be great to get your perspective on how you see the business and how you see this partnership as you go forward?
Thank you, Sid. You know, I was kind of as shocked as everyone else was for making this move. Let me just share some of my thoughts of why I went ahead very quickly to do this. You know, we've all been influenced by movies and films and shows from whenever, as far back as we can remember. But when this opportunity of partnering with an iconic brand and an iconic person like Karan, his ability to tell stories, to influence and change people's minds, making iconic films, putting out content like this, it is a soft power. There's no doubt or question about it. Now, how a corporate group could use that soft power to project and tell stories about what they are passionate about, or how it can help with our businesses, is yet to be seen, and that's something we're strategizing over. But you know, since this is such a serious news channel and we talk about IRR and all these kind of things, questions were asked, why did I pay so much? What was the basis of this valuation? And I didn't reply to any of those questions, because how does one quantify, you know, IRRs and the typical ways of EBITDA margins, and what's the clear line of sight to growth, and all these very serious financial questions one asks when you make any investment. These were the intangibles that I saw partnering with Dharma and with Karan. And of course, it's not such a bad business opportunity as well. You know, there's other verticals like music, distribution, building up more production on our content creation. These are things that will drive, you know, the next 5 to 7 years of growth at Dharma. And these were some of the reasons, and I did it. And let's not forget, it's not such a bad idea to have a little bit of fun also. It's not all about just, you know, making money and getting returns. So these were the reasons and, you know, thinking behind why I decided to partner with Karan.
Yeah, no, I mean, you said, I guess people were asking you why you paid so much money. Karan might say it wasn't so much money.
Yeah.
I didn't know I had a value. I found out. You know, I have to say this, and I probably am not going to come across very clever when I do, but, you know, it's just the way I want to come across is who I am. I was traumatized in so many of those meetings. You know, when we spoke, there were things and terms that I'm a creative artist. What is a put and what is a call and what is an exit?
A drag and a tag. I never thought we'd hear the words coming out of his mouth, and drag and tag.
And then he kept saying, you know, I will drag and you will tag. And I was like, I know what drag is in a totally different way. And I know what tag is from a price tag that I pay in the retail zone for. I know what put is and call is in a very different way altogether. But I had no idea what was happening when those Excel sheets would come in front of me. And, you know, your reality is staring at you and you think that you've done something so wide and vast. And then there is a value put. So when people tell Adar, you know, like, you've paid so much money, I'm like, has he really?
I said that deliberately to give you a chance to say exactly that.
Because I feel like, firstly, I have to tell you, the dynamism displayed by Adar Poonawalla was almost inspirational to me and to everyone on. We cracked the major part of this deal on a Zoom call, I want to tell you. And he was like a superstar in that. Like, it was literally, he had a few questions which were answered, and then he was like, okay, so when do we sign? And I'm like, for 1.5 years, we're deliberating, we're talking about put and call and exit and entry and everything that you can think of. And then, like, he comes in, sweeping us off our collective feet. And I'm like, this is probably how I would have loved to do business if I could afford to. And I can't afford to, of course. He can. But I just thought it was also the most essential thing is, I'm here today feeling even more accountable and responsible than I ever was. Prior to this, I was like running my own ship, right? Apurva and I were two people. We ran our company like siblings. He took care of finance, admin, legal, everything, all the stress points, and I did the creativity. Today, I'm talking about profit margins, profitability, reducing costs. How do we show to Adar how immensely profitable we're going to make this conglomerate? And to me, that is giving me the most exciting sleepless nights. I never thought that I would feel this accountable in my life, and this is great accountability. This is what I think my father tried to make me and Apurva's tried to make me for the last 25 years of my life. Adar Poonawala has done it in 3 months.
I'm so happy you said that, Karan. Thank you. I hope this is recorded and kept in the archives forever. So
well, unfortunately, it is recorded. Everything I say today, I'm staring at Ajay Bijli, a big reason why we're here today. And I want to say the prices are really great at all multiplexes. The popcorn is cheap.
Now the current security investment
I'm
is
so
finding the
scared
popcorn
I'll
cheap.
get into trouble. I'm just staring at Ajay Bijli and I'm like, the Bijli, everything in those cinema halls is cheap. Go watch movies, guys. We need you. We need your footfalls.
What would you say, Adar, to those who might be looking at this industry and have all these myths surrounding it that sort of keep them away from investing in it? Because, as you know, it's been an industry which a lot of people have circled around, but we've never had this kind of a structured investment from someone from outside the business who's come in. You've had a lot of strategics coming in, of course, you know, the studios from the West. You've had the Netflixes and the Amazons and, you know, hopefully the Apple TVs, etc., who are also looking at it. But on the content side, I believe there's tremendous potential in taking the sector forward, being able to hold on to IP, being able to monetize that in the way it should be. But what's held it back really has been the lack of capital and the myths that surround the industry that have just lingered on for this long. So it'll be great to hear from you on what you'd say to people who might be looking at this business.
No, so I think a lot of other corporate houses or funds and investors perhaps haven't traditionally invested in this area is because generally an investor wants a clear line of sight on growth, scaling up, profitability, etc. We all know this industry has its ups and downs, you know, with films doing well, some doing badly, some may go over budget. Now, if we can manage that risk, keep growing in terms of scale of creating more and more content, you've got so many OTT platforms and now some others coming about. I'm very bullish in this area. Now, when exactly is it that we're going to hit, you know, big profit numbers or whatever? You know, it's tough to say. So you have to have a little bit of passion and patience in this area. It can't be like what you've seen in e-commerce or in other manufacturing sectors. There's always going to be some kind of gestation period. So we're going to go through that over the next 5 years. And, you know, if we have this conversation in 2 or 3 years' time, I can tell you if some of those myths were true or not.
Fair enough. It's up to us as an industry to dispel those. So Karan, as far as you're concerned, this obviously is a big move forward. Do you see yourself becoming a studio now completely and holding on to the IP that you're creating and therefore being able to monetize that and building value for the long term?
Absolutely, and the idea, of course, so the good thing is that, you know, we have, the IP has been a huge part of, you know, our valuation as well, built over, you know, a large period of time with all the films that we've done. We've held very strongly onto our IP for everything that we've done. The real issue sometimes were because of the funding that you had to always partner with an existing studio on the bigger and larger films. And with that, even when we made big hits, we were always sharing the profit. In this scenario, it gives us the opportunity of actually increasing and enhancing our profitability by owning the film entirely. But yet, there will be those massive brahmastras that we will make that will need the support of a studio. If I make a film that is over 250 crores, 200, 300 crores, it's not possible to fund that totally at our stage even now. But yet, it's the middle budget film where the cost to profit is super high. Those are the films that you can actually fund entirely on your own, and you can enjoy and reap the benefits of that big breakthrough profit that is to happen. Because I believe the real bread and butter, the real money comes from that middle budget film. Because in the big budget films, you know, while you might make that money up, and it's a large journey to cover that money, and then, you know, the cost of capital and then the cost of P&A, the margins are not very large. But when you strike it in a 65 to 80 crore window film, and you really hit the large number, that is the film I'm chasing. So more than the tentpole film, I'm chasing the middle budget film that gives me a larger return.
Because they're the revenue multipliers that much more when
everybody
it's a
thinks
hit.
bigger the film, bigger the money made. It's not always true. Because bigger the money spent is also the bigger, larger journey to recovery, you know, so that's what we do. And then the verticals that we are in the near future going to make some announcements about verticals that we're going to begin, and we do hope that everyone eventually wakes up to the fact that we now truly mean business.
So would you do the same thing on the streaming side as well? When you're making series, etc., would you adopt the same model? Maybe the larger tentpole ones are ones that you don't necessarily need to fund yourself, but the middle ones you might look at actually going in and investing?
No, so I don't believe in that model. I believe a series should be greenlit by a platform. And then you should go ahead and make it. Because there are, you know, we've seen those content creating houses that have put in a lot of investments, created tremendous creative equity, you know, and by making series, but many of those lie unsold. And eventually, you know, you need to kind of make sure that your series that you're putting all that might on, the money on, gets a platform in a house. So I'm very clear that in Dharmatic Entertainment, we want to widen the scope of our work for sure, but we want to make sure that it's attached to a platform before we start putting any money into it.
Got it. Also, would there be some projects that you look at from an international perspective which is taking India to the world? Because I think Korea in the last couple of decades has really shown us with their movies, with their music, with their TV, with their food, the soft power that they've managed to really take around the world. And
I've been doing K-dramas before they did.
That is true.
So I'm quite used to it. So literally. No, absolutely. And I think a few of our projects, definitely. For example, we had a breakthrough film called Kill that released last year that was picked up by Lionsgate internationally. A large international sale happened thanks to our presence at the Toronto International Film Festival where we struck that deal. Subsequently, the film is now being remade in English and also in Tamil and Telugu, and we sold those rights. So we do plan to produce the second part of Kill also, and we hope to have the same international success. Similarly, we are producing a film with Neeraj Ghewan, who is a Cannes award-winning filmmaker, and we've planned to take that film, you know, to the international festivals and have sales internationally. Few of those decisions we are definitely going to make, but few, Sid, because I don't understand this concept of planning a crossover film. Because I do believe once you cross, it's all over. Because, you know, it's really not always going to be viable and beneficial. So I don't think you can plan a film for an audience.
Yeah,
a film has to acquire.
It is something that happens organically
Today,
at
for
times.
example, I'm not sure, like, you know, when Lagan was made, or Lapata Ladies, both attached to Aamir, where he planned those films for him. He made great films. The fact that it's going to win an international audience and the love of an international audience has to be a thing that happens post the film's release. So I don't think you can plan or strategize an internationally loved film made out of India.
What do you think are the other ways in which the media and entertainment industry can maybe look at the way that other industries have scaled up to be able to drive us to our next level of growth? Do you see any things that we can do as an industry to be able to really have that exponential growth that maybe the IT sector saw in the 80s and 90s, or any other industries that have had that step up?
I think the government has been quite helpful wherever needed, and we can have conversations with them to see how we can promote and penetrate the rural parts of the country a little bit more. And if you can get more screens there and ways of getting into people's homes in villages and other areas, there's talk about having those cinemas, which are not exactly big screen cinemas like, you know, you see in the urban areas, but more penetration will definitely help scaling up and becoming more profitable. Also, the kind of films that one likes to watch may not, or what we call good films, may not necessarily do so well at the box office as we know. So, you know, when you're looking at it from a business perspective, if anyone else is also investing, one needs to keep making those kind of films, and also the kind of ones which are iconic. What, you know, for example, Karan has made from Kabhi Khushi Kabhi Gham, Kuch Kuch Hota Hai, all those iconic ones, which are remembered, and then you have a library that's built up like we do, you know, which one can monetize later in the future as well.
What do you think is the state of the theatrical business right now, Karan, and where do you think it's going to go? I mean, we do talk a lot about phases within this business, and you have your ups and your downs. We're probably in a cycle right now, which we've never really been in before, where the bigger films are doing bigger business than they've ever done before, and films that might not have done this business before COVID are going through the roof. And then there are some films that come and go, even with very big stars. So it's clear that the audience seems to be becoming very discerning about that trip to the theaters. What do you think we need to do as a content industry to be able to...
I believe we have to read the room. We've got to read the room as filmmakers. You have to know that today there's a lot of content available at, on streaming services. But there is still a huge desire for a community watch to go to the cinema. So you have to understand, please let's make the high concept films, the films that draw you to cinema halls immediately, not the films that you have access to, on a daily basis on a streamer. So besides the tentpole films, it's the high concept films or the films made sensibly, because the star cast really today is not just the only driving force, it's the trailer. It's the very first impression. So we have to, I always tell filmmakers, this may sound like a sales pitch, but plan your trailer. If a film is giving you a great theatrical trailer, it's going to give you a great theatrical opening. Anything generic is going to slip through. Anything been there, done that is not going to work. So you have to plan your first unit. It has to be a unit that makes sure that an audience is going to say, I booked my ticket, I'm going to go see. And that is happening. As we speak, we've had a great 2 years. According to me, there have been some thunderous numbers as well, like you said. We've touched the 600 crores. We'd never done that before. We've done that. And we also have touched 100 crores with a completely new cast. A creature film with a new actor called Abhay Verma has done 100 crores. That is the power of theatrical audiences. We just have to give them what they truly want. We have to read the room, which we have to start assessing within ourselves.
Well, I'm being told my time is up, but I do want to give you guys, both a chance to maybe tell us what your vision is for Dharma 5 years down the line. Like, what would you believe you'd be really happy if Dharma were to accomplish within 5 years?
I think I'll leave that to Karan, because he's the man with the vision and the creative sense behind it. So, Karan.
I'm a filmmaker. When you ask a creative artist what my vision is, it's of course to creatively conquer, and that's all I can really aspire to do, to make beautiful, brilliant stories. Scale is not the only, thing in operation. I want to tell the biggest stories, but I also want to expand the infrastructure of our company. I want to build verticals which go beyond what we already have, which I had the vision for, but couldn't do it earlier, and now I can. And I want to make those verticals immensely profitable in the long haul. So the vision 5 years later, if you and I chat 5 years later, I hope I can tell you that this partnership of Pharma Productions has been an immense success story, and we'll be here again to tell you that.
Thank you, Karan, and thanks, Adar. I just want to say on behalf of the entire Indian media and entertainment creative community that this was an incredibly inspirational announcement that happened, within the last month. And I think it's led to a lot of people thinking that the creative industry, the content creation business, if we're able to capitalize and we're able to bring the right funding, the right partners, the right growth into the business, then I think the next decade could genuinely be India's decade.
And I do believe what Adar has done, I hope, does become, something that others as well follow through, because it would be wonderful for that fresh burst of oxygen in our business coming in from outside of the business, because I do believe, and I hope that this is one of many other further collaborations. Even if Adar has to go forge forward and do it again, I'll be proud that he began with me.
Cheers to that. And, hopefully at CNBC's 30th anniversary, we'll be discussing a lot more examples like this. Thank you, everyone.
Thank you.
Thank you so much. Thank you very much.
Thank you.
Thank you, Siddharth Roy Kapoor, Adar Poonawalla, and Karan Johar. That was quite an engaging, fun, candid conversation. Thank you so much for joining us here tonight.
Thank you. We're going to move on to our next session because we're thrilled to present a fireside chat with one of India's most influential entrepreneurs who has just taken his company public. Yes, we're talking about Swiggy, because recently Swiggy has partnered with the Government of India to launch a groundbreaking skilling initiative which is aimed at empowering India's workforce with essential skills and creating new employment opportunities.
Well, the Swiggy Skills program is aligned with India's Viksit Bharat Bharat 2047 vision, and it reflects how Swiggy is shaping the future, not just through digital innovation, but through meaningful societal impact.
To take this discussion ahead, I invite Shireen Ban back on stage to explore how this Swiggy Skills program aligns with India's 2047 vision, empowering the workforce and creating opportunities that will contribute to India's long-term economic transformation.
Ladies and gentlemen, please join me in welcoming Sri Harsha Majeti, the co-founder and group CEO of Swiggy. Shireen, over to you.
Thank you very much, ladies and gentlemen. I'm just going to read out some numbers for you. This is on the back of what happened yesterday on Dalal Street, where we saw Swiggy quite literally deliver its IPO. So Harsha, it's great to have you here. 1 lakh crore rupees on day one of listing. That was the market cap that this gentleman and his team managed to deliver yesterday on the last street. A big round of applause, ladies and gentlemen, for Harsha and the team at Swiggy. 5,000 employees have become crorepati's. 11,000 crore rupee IPO saw bids of over 40,000 crores. So once again, from all of us here, Harsha, congratulations. I'm not going to start by asking you about the numbers that you think I'm going to ask you about. What time did you finish partying last night?
4:30 a.m.
4:30 a.m. Was there a sense of relief at the end of it when you actually saw, when you were ringing the bell on the NSE? What was it? Relief? Excitement? What was going on at that point in time in your head?
Actually, it was relief and excitement in that order. 80% of the emotion was just relief. Having sold the dream, it was just a vision. And so many folks chose to join us along the way for the journey. So to see that new level of reality be unlocked was just huge relief and excitement as a founder. The second excitement is, I think, as a founder, it's also just a new life experience.
Yeah.
I'm looking forward to figuring out how that stage looks. Now you can
You know what is going to change, right? You're going to have to talk to us every quarter.
Yeah, absolutely. Look, I think the business has gone through a million changes in the last 10 years. I think it can handle a few more.
I'm sure it can, and we look forward to having those conversations with you. But, you know, we're talking about the relief that you felt yesterday as you rang the opening bell at the National Stock Exchange. But in the run-up to the IPO, and a lot of people, you know, we talk about this on stage, we'll ask you all questions about, are you ready to IPO, etc. It's not an event. There's a whole journey leading up to that event. And I want you to take us through what transpired over the last year plus, just to be IPO ready. And in that last lap, where the markets turned and suddenly sentiment was not on the side of you, you know, what was the feeling then? How much anxiety did you go through then?
I'll answer the second question first. I actually, honestly, had no anxiety throughout. Because all the anxiety was until you choose to go, until you know inside that you're feeling ready for it. Because being ready means that you lose anxiety over so many other things that are outside your control. That's what I wanted to prepare for, and that's what my version of the company being ready was. And once we got there, truly, like, that was the big moment. All the anxiety, all the butterflies were till the decision. Once we felt like, okay, I think we're ready, let's go. After that, I think it's just, you know, wake up and do the best you can. I think we did a great job generally communicating our story in the investor roadshows. We were receptive to feedback that we got on pricing, a bunch of things. So we don't like look back and think of anything that we would change about how we went about it. And that was 90% of our decision. Now, obviously, some of this timing tailwinds can be even more useful. But if you think about it, from the day we started our roadshow, the markets just kept going in a certain direction. That wasn't
down.
Yeah, that was down. Yeah, absolutely. So, but we just powered on. We were like, I think the company is ready. I mean, even if, let's say, things are tepid on day one, week one, I mean, it's a long run.
Yeah.
So luckily, I think none of us tethered our emotions at all to what that day one prize is going to be. Though it's a good thing, a good outcome, a great outcome in hindsight, just on day one, good aftertaste. But we know that you can't do this perfectly. So to end up on the right side of it is a good feeling.
Absolutely, and I would imagine that it's a good feeling for all of you at Swiggy and your bankers as well. But let's talk about that. You know, I was talking to SoftBank about getting the pricing right. And I think this has been one of the issues we've seen with a lot of startup founders and a lot of startup IPOs, where the pricing has left nothing on the table for the retail investor. You did. And you decided to bring down the price because you wanted to leave enough on the table for the retail investor. That decision and making that call, take us through what was going on when you did that.
I think we were clear all along, Shireen, throughout the process. I think if I had to look back and talk about maybe the two major objectives that we were going for, to get a high-quality set of investors who believe in our story and want to be there for the long term, that was number one. And eliminate event risk, that was point one. The number two was we were greedy for a good aftertaste. It's the beginning of the journey for a lot of new investors who are going to come on board. So honestly, the conversations lasted a few minutes. It wasn't...
and it was done.
Yeah, it was done. Honestly, this could have gone another way. I mean, a few more hours and we may have not priced very well. But that's like everything changes in a few weeks. So we're lucky